And the recording goes on. Welcome everyone. This will be today's with which day is it? 6th of March backtesting session. So once again, welcome everyone. As usual, I will just generate a random number. And let's start with February. So random number generator. We'll backtest the day from February. One. Okay, perfect. We're going to backtest the 1st of February. So let me just check. Where's 1st of February? Somewhere around here. Replay. 3rd, 2nd, 1st of February. Yeah, this is 1st of February. Perfect. New York Open is right here. I'm going to go to the 15-minute chart and adjust everything. Sorry, guys. I'm reading the chat and setting everything up. So 1st of February, perfect. Okay, 15 minutes before the session starts. Okay, let's start the analysis on the 4-hour chart. Can we just start the session? You all set, all good? Can we start the session? You ready?
Yeah.
Okay, perfect. So let's go for it. Okay, what can we see on the 4-hour chart? We've talked about this range several times in the previous sessions, previous recap videos, markups in every single content. So we had a pretty clear 4-hour range right here, equal highs, equal bottoms, and all of these equal highs and bottoms have been taken out here and here on both sides, as you can see. Okay, so the overall bias, the overall trend in this region and on the overall higher time frame region is still extremely bearish, right? So as you can see, it's still creating series of higher highs, higher lows. I mean, lower lows, lower highs, lower highs, lower lows, creating a bearish trend over and over again. And basically, if you can check this, our pattern is ranges, sweep of the ranges with slow movements to the upside, react on some supply zones, huge inefficient movements to the downside, ranges, slow movements to the upside, sweep the liquidity, react on supply zones, downside movements, ranges, slow movements to the upside, sweep the liquidity, reaction on supply zone, downside inefficient movements. So basically, this is our pattern in this region on the 4-hour chart. We are on the 4-hour chart still. Let me just remove this from the way so you'll be able to see. Okay. So let me just mark out the range with these bugs. As you can see, perfect equal taps on the upside. First tap, second tap, third tap, fourth tap. So basically 4 equal taps on the tap side. And on the downside, we have a trend line liquidity. As you can see, perfect trend line liquidity touches with trillions and trillions of dollars sitting just above this line. Okay. What else can we see? We can see that price has swept the liquidity to the upside, swept the overall 4-hour range to the upside with this inefficient movement. Basically, the inefficient movement has started from this candle right here, this weak demand zone. We'll just talk about this later. So let me just focus on this region first. As you can see, price is reacting on some sort of supply zone in this region. This was the extreme supply zone. Price has actually broke above this supply zone and swept some more liquidity from this region and created more liquidity, as you can see. And we will just put a horizontal line right here. And you can see that price swept the liquidity from above this supply zone, swept all of the equal taps, maybe on the 50-minute, maybe the 1-minute or some minute chart, and tapped into another sort of supply zone right here, reacting on that supply zone. And let me just zoom in. So after the supply reaction and after the supply tap, as you can see, we had this less recent demand zone right here. This was our less recent demand zone that has caused the less inefficient push and break of structure to the upside. This was the less structural low point, inefficient push to the upside. From this demand zone, let me just mark it out. From this 4-hour demand zone, price has actually swept the liquidity to the upside. This overall range liquidity, as you can see, swept all of the liquidity, broke structure to the upside, caused inefficient push, built up liquidity. So this is our pretty valid demand zone. This is our first extreme demand zone, and this is our second decisional demand zone. And the second decisional demand zone has been broken by this candle, as you can see. Actually, this is a flip zone. Price created an inefficient push to the upside, break of structure here, and sweep of liquidity in this region. Yeah, sweep of liquidity in this region, inefficient push. And after this, price is reacting on this demand zone, reacting on this 4-hour demand zone. But this demand zone actually couldn't give enough power, couldn't print a new high after the top of this demand zone. As you can see, price couldn't print a new high here. It was just a weak break. It's just a weak break of the week, so it doesn't count as a break of structure. We had to wait for a break of structure with body closure, as you may know. So what else can we see here? prices reacted on this demand zone, and after the reaction on the demand zone and fail print of the new high, price actually broke below this demand zone with this huge inefficient movement. So this means we will have an extreme supply zone up here, which is this candle, because the inefficient push has started from this candle, the overall break and the flip zone has started from this candle. So this is our right flip zone. This is our extreme flip zone in this region, but as you can see, price is actually pretty far away from this supply zone, so this won't be relevant for us today. Okay, what else can we see? We can see that price is reacting on this second demand zone right here with this candle. So basically this 4-hour candle on the 50-minute or 1-hour chart will look like this. As you can see, it's coming down, reacts on the demand zone, creates a pullback, and from this pullback, the new candle opens, this candle opens, creates a pullback, prints a pullback, and after the pullback, it just breaks below the demand zone. So basically the 50-minute or the 1-hour movement looks like this. This candle will look like this on the 50-minute or 1 hour. Okay, so basically this means we have a new flip zone. On the 50-minute or 1-hour chart, it will be much easier to find that supply zone, because in this region, basically we can call that this is the whole supply zone. Ultimately, this is the whole supply zone. But yeah, on the 50-minute chart, we'll be able to find a good refinement for this supply zone. Let me just switch to the 15-minute chart first and just quickly refine this zone. So if you take a closer look, this was the less recent demand zone, and the overall flip of this zone has happened from either of this candle or either of this candle. Basically, this was a reaction right here. Price is reacting on this. As I told you, this is the reaction on the 15-minute chart. This is how it looks like on the 15-minute chart, top of the demand pullback break. So the overall reaction has happened here, and the extreme of the order flow that was leading to a break of this demand zone and break of structure to the downside was this candle. But the real break, ultimately the real break, has started from this candle, right? But I would choose this candle, this upper candle in this case, because the clear inefficient push and the overall order flow that was leading to a break of this demand zone has started from this supply zone. So this is our 15-minute refinement. Let's just switch back to the 4-hour chart and talk about the 4-hour chart. Okay, so what else can we see? We have an extreme flip zone, which is this one. We have a decisional flip zone, which is this one. And after the decisional flip zone was printed right here, a bearish order flow was started, as you can see. So ultimately, as you can see, prices are reacting on this 4-hour supply zone, the overall 4-hour supply zone. There was a supply reaction. And from this 4-hour supply reaction, price created a break of structure here to the downside with inefficient movement, as you can see, and body closure. So basically, this is a pretty valid 4-hour break of structure and bearish continuation order flow. Because as you can see, new break of structures were printed here, inefficient movement, supply reaction, break of structure, inefficient movement, supply reaction, break of structure, inefficient movement. So this is a liquidity trend line, and I mean supply chain built up for the decisional or extreme supply zone right here. Okay, what else can we see? We can see that prices created this huge inefficient movement to the downside from this candle, right? But actually, it wasn't happening from this candle. This whole inefficient movement. Let me just ask you, which candle is the right one in this case? Which candle is the right one in this case? This upside candle or the wick of this candle? Which one is the right supply zone in this case?
The wick.
And why is it a wick?
The inefficient push started from that wick.
And
Yes,
it's already
you're perfectly right.
This.
Yeah. Why am I saying that?
The bearish candle already been mitigated.
Exactly. That's the answer I was looking for. Basically, there can be orders. There can be more orders sitting on this candle, this upside candle, because all of the orders were taken out by the following candle, right? Because the opening of this candle and the high of this candle is basically higher than the closure of this candle. So as you can see, this is the upside candle. And on the wick of this candle, the following bearish candle is higher than the closure of this candle. So basically, there can be orders sitting on this upside candle, because all of the orders has been order mitigated by the following candles wick. So all of the new orders, all of the new stop losses, all of the new orders are sitting on this candle right here. So this is our last supply zone in this region, because as you can see, all of the price action between this region, between the supply zone and between this has been mitigated. All of this price action has been mitigated. All of the inefficiency has been filled up. We got small inefficiency right here that needs to be filled up, but price is on the way up to react on this supply zone. So but what can we expect from the higher time frame? What can we expect from the higher time frame 4-hour chart? And what could be your expectations on the long term? Let me just talk through this. Let's check if there was actually a demand reaction. I always check this if there was a demand reaction or price just reversed in the middle of nowhere, because as you can see, if I scroll back to this region, I believe there will be a good, yeah, there's a good demand zone. Here's this perfect weak demand zone again that price was reacting on. So basically price was reacting on this weak demand zone, and this demand zone could reverse price. And from this reversal, price will be able to generate enough fuel, generate enough liquidity sweep and supply tap to continue the overall bearish order flow in this region. Because as you can see, price swept the upside liquidity here, swept the downside liquidity here. This was a range. All of the ranges are being swept no matter what. All of the ranges will be swept sooner or later, right? So the upside range has been swept, the downside range has been swept. Price tapped into some sort of demand zone right here. This was the demand tap. Price was reacting on this demand tap. I believe there will be a 15-minute change of character. Of course, there will be a 15-minute change of character at this region. Price change character here, switch the overall order flow from bearish to bullish in this region, and it's on the way up to tap this supply zone. And the reason I always check if there's any demand reaction before the reversal, I mean after the reversal, is that if price reverses in the middle of nowhere. So let's say there wasn't any demand reaction and price just reversed in the middle of nowhere. This week, I mean this low will be weak. This low will be 100% weak, and price will break below this low. But if price is coming from an unmitigated demand zone, just like this 4-hour zone, it has a higher chance to just break through supply zones and react on higher supply areas, for example, like the extreme or this decisional. But if price just reverses in the middle of nowhere without the demand tap, it will just react on the first supply zone. So it will just react on the first supply zone, for example, this one, and continue the overall bearish order flow, because price just reversed in the middle of nowhere because it was running out of fuel and it needs to collect more fuel in a form of inefficiency, in a form of a supply zone, in a form of a liquidity sweep. So yeah, price was coming from an unmitigated demand zone at this region, as you can see. Okay, so what can we expect from the 4-hour chart? We can expect from the 4-hour chart that price will tap this supply zone up here, price will react on this supply zone. And what else do we need inside of this 4-hour supply zone? What are we waiting for inside of this 4-hour supply zone? I'm asking you guys.
A 15-minute chalk.
Exactly. Why are we waiting for a 15-minute chalk?
Because if this is a 4-hour zone, then we need a 15-minute chalk, and if it is a 15-minute zone, then we need M1 chalk, right?
Exactly, man. Exactly. Good job. Yeah. So once again, because I'm getting this question every single day, basically every single day, you're asking me this question. Hey, Flip, inside of a 4-hour zone, you have to wait for a 15-minute change of character, right? Right. I'm going to write it down here. I'm going to write it down here with text. 4-hour zone, 15-minute chalk, 15-minute zone, 1 minute chalk. And one more important rule about this 4-hour 15-minute chalk. If the 4-hour zone has been refined on the 15-minute, so basically you refine this zone, refine this 4-hour zone on the 15-minute chart, you still have to count that 15-minute zone, that refined 15-minute zone, as a 4-hour zone, because that 15-minute, that refined 15-minute zone will still be a 4-hour zone, and you have to treat that 15-minute zone just like a 4-hour zone. So you will need a 15-minute change of character inside of that 15-minute refined supply zone. Okay, just memorize this. 4-hour zone, 15-minute change of character. 15-minute zone, 1 minute change of character. 4-hour refined to 15-minute zone, 15-minute change of character. I will just write it down here again. 15-minute refined from 4-hour, 15-minute chalk. This is a really, really important rule, because basically I'm getting this question every single day. You're asking me this question every single day. Just memorize this, just screenshot this, just save this image and memorize it. 4-hour zone, 15-minute check. 15-minute zone, 1 minute check. 15-minute refined, 15-minute check. This is a golden rule. Okay, let's just move on. So basically we are expecting a reaction on this supply zone, and to execute a short trade on this supply zone, to execute a short trade after a reaction on this supply zone, we will need a 15-minute change of character on this supply zone. So basically we will need a 15-minute change of character. This will be the 15-minute structure. We'll need to see something like this, 15-minute change of character and 15-minute zone reaction. And after the 15-minute zone reaction, the 15-minute zone creation, we will need to see a 1 minute change of character after the reaction on this 15-minute zone. So this is the 15-minute zone right here that was leading to a change of character on the 15-minute chart. And after the reaction on this 15-minute zone, we will need a 1 minute change of character. Of course, some of you guys already know this rule. Some of you guys have heard this rule 100, 1,000 times, right? But you have to memorize this because you're still making this mistake. You're still making this mistake every single day because I'm seeing you guys. I'm seeing how you're trading, what trades are sending in the live trading group, and you're still making these mistakes. You're still making a 1 minute change of character inside of a 4-hour zone, and you can make that. You have to memorize this. And I know you've heard it 1,000 times, right? But I'm going to tell you 1,001 more time because you have to memorize this. If price reacts in a 4-hour zone, 15-minute change of character, tap of this 15-minute zone, and after a tap of this zone, you'll need to wait for a 1 minute change of character too. And after the 1 minute change of character has happened, you can enter in a short trade. And only in this scenario you can enter in a short trade. Because without a double confirmation, without a 15-minute change of character and 1 minute change of character, you can't just enter in a short trade inside of a 4-hour zone. Okay? Just memorize this. This is really, 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 really important. And you're still making this mistake. So let's just move on with the backtesting. Okay, we've analyzed the 4-hour chart. Let's just switch to the 15-minute chart. What can we see on the 15-minute chart? We can see that price is reacting on this 4-hour zone right here. And after a reaction on this 4-hour zone, price has changed character on the 15-minute chart here, as you can see. This was the last structural break to the downside here with inversion movement. And after a reaction on the demand zone, price has changed character here to the upside and started the bullish order flow, printing series of higher highs and higher lows. As you can see, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So on the 15-minute chart, our structure is bullish in this case, but the overall trend, the overall bias is still extremely bearish. The overall bias is still extremely bearish. Every single short opportunity will be a pro trend opportunity. Every single long opportunity will be a counter trend opportunity. So what else can we see? We can see the price is reacting on this, created a change of character and built up liquidity trend line for the upcoming shorts, as you can see. Basically, this is a liquidity trend line with perfect touches, first touch, second, third, fourth touch, perfect liquidity trend line built up for the upcoming shorts from this supply zone. Right? 3 ounce and 3 ounce of dollars are sitting just below this zone, built up for the supply tap and short continuations. Okay, what else can we see? We have to focus on the last recent leg because we'll be trading the 1st of February. So we only care about the last recent leg. We have identified the trend, which is bullish on the 15-minute chart, bearish on the overall higher time frames. So what else can we see on the 15-minute chart? We can see that price has created a liquidity right here, first tap, second tap, price has swept this liquidity with this inefficient movement to the upside and actually created a break of structure. And this is a break of structure line right here. Why am I saying that this is a break of structure line and not this is the break of structure line? Can you tell me why I'm saying this? Why is this a break of structure and not this a break of structure?
Because that was only wick. That was a sweep, not a structure break. But the next candle closed above it, so it's a break, right?
That's also right. That's also right. But I was pointing out to something else. And yeah, Gabor, that's the last recent high, but put the low. Exactly. This was the last recent high that was created the last recent low. So basically the structure in this region is this is the high point and this is the low point. Less low point, less high point. Everything between this high point and this low point will be just substructure. So every single break of structure will be a substructural break in this region because this was the less structural high, less structural low. If this high breaks, that will be a break of structure to the upside. If this low breaks, that will be a change of character to the downside. So this low couldn't print a new high, as you can see. This wasn't a break of structure. This high couldn't print a new low. So basically, the real break of structure has happened here. Okay, let's just find the origin of the break of structure and the origin of the inefficiency. And that will be this candle right here. This demand zone, as you can see, this dodgy candle created the inversion push to the upside, created the liquidity sweep, created the break of structure, everything. Because between this candle and this candle, there's already inefficiency. And the real inefficiency has started here, as you can see, but the inefficiency has been already filled up right here. So there's no inefficiency left. The only inefficiency is here between this candle and this candle. So the real inefficiency is here. Okay, what else can we see? We can see that price has created a 15-minute range in this region because equal tops, equal bottoms, or repeated trend line. This is a range again on the 15-minute chart. What do we know about ranges? I'm asking you again, what do we know about ranges?
That it will be swept.
Yes, every single range will be swept sooner or later. No matter what, the ranges will be swept sooner or later. So what can we expect from this price action? We can see that the upside range has been swept already. We can see that we have a demand zone right here with liquidity above it. Inefficiency needs to be filled up. And basically prices change character here to the downside because this was the less recent 50-minute zone, 50-minute demand zone that has pushed price to new highs. As you can see, this is the break of structure, sweep of the range. And price has actually weak below this demand zone, but did not sweep the liquidity yet. So this means we have a change of character here. Because if there was no liquidity sweep, we can assume that this was a break. This was a change of character of this zone and the overall 50-minute time frame. So what can we wait? What are we waiting for here? I'm just asking you again, what are we waiting for? This is a clear plan. Yeah.
Sweep of the liquidity and tap into the demand in 1 minute change of character there.
Exactly. That's a perfect plan. You always have to make, okay, guys, this is a really, really important rule. You always have to make your plan before you start trading in a session. So basically just look at the 15-minute chart before you start to trade in every single session. Look at the 15-minute chart and build a plan for yourself. Build a narrative about price, about what will price do. So I'm just building a narrative. I'm building that narrative that price will sweep this downside liquidity, or before the liquidity sweep, it will just reverse, react on some sort of supply zone here, maybe this wick right here or the extreme right here, react on the supply zone, and after a supply reaction, it can sweep the liquidity and tap into this demand zone. So you always have to build a narrative because without a narrative, without a plan, you'll be lost and you'll be just blindly executing trades on the specific session, right? So just build a narrative. We know that the higher time frame structure is bearish, printing series of lower lows and lower highs. We know that the 15-minute structure is bullish in this region and it's heading up to this supply zone. But we also know that there was a range, and this range high has been already swept. The range low is waiting to be swept, and this demand zone is waiting to be tapped because there's inefficiency, there's liquidity, and the clear break of structure here. So I'm building a narrative that price will sweep the liquidity, tap into this demand zone, and change character here on the 1-minute chart. And after that, we can continue the expectation order flow riding to the upper supply zone. So basically, this is our narrative. This is our plan for today. You always have to make this before every single session because you have to build a plan. You have to build a plan for every single day because without a plan, you'll be lost, right? Now I got the plan. Now I got the narrative. I know what I'm expecting for. And if price creates something completely different in this session, I would just change my narrative. I would just reanalyze and change my narrative into something else. But right now, this is our narrative, right? Okay, let me switch to the 5-minute chart. Now let's see if we can refine this zone. Actually, we can perfectly refine this zone, as you can see, but it doesn't really matter because it has been already broken in the 5-minute with the body closure, 15-minute foot closure. So basically, this is a change of character to the downside. Here's a change of character to the downside of the 15-minute chart, and here's a change of character to the downside on the 5-minute chart. And actually, we have a flip zone also here because, as you can see, we have a demand zone right here. This was the last recent downside candle before the break of structure to the upside. And this was a flip zone. Price was reacting on this zone, as you can see, couldn't break below it and reacting on it several times, created a pullback from this candle. And from this week, price is actually broke below this demand zone. So we will have a 5-minute flip zone in this region. This supply zone caused the overall flip of the demand zone and the break of this structural low point or demand zone right here. So we have a pretty good supply zone right here, but we also have an extreme one in these highs. But this extreme one actually did nothing. It was just causing the order flow that was reacting on demand zone, but the overall break of the demand zone and the overall flip has started from this candle. So basically, this will be worthless for us. Okay, what did I do? Okay, let me just change back the color. Perfect. So as you can see, here's perfectly fit trend line built up for this zone. This is a fucking good confidence, right? Sorry for my language. Okay, so we've analyzed every single time frame. We've built a narrative so we can start to trade. But before we start to trade, one more thing. What else do we need to do? I'm asking you. News. Perfect. Thank you. Thank you, Diego. We have to check the news. Because before every single backtesting session, you still have to check the news. Because maybe on that day, there was a high impact news. And you have to check that if there was any high impact news. Which day is it? 1st of February. Yeah, 1st of February. So 1st of February on this week, let's see if there was any high impact news on the 1st of February. Okay, as you can see at the opening, there wasn't even a single high impact news. The first high impact news that hit in 2 hours into the session. So there was 2 high impact news on the 1st of February at 4 p.m. in my time zone. So we'll take care of that 4 p.m. time zone, and we won't open a trade at that 4 p.m. time zone, right? Okay, now that we check the news, we can start to trade. I can start to forward play price. But one more thing, we have to check the lunchtime zones and mark up our favorite zone, which is the lunchtime rape zone, right? Sorry, I can't use rape anymore. Sorry, I'm not using it. So we have to check the lunchtime zone. As you can see, every single zone inside of this time window, every single zone inside of this green time window will be fake. Every single zone, every single 1 minute, 5 minute zone inside of the time window, 1 hour time window is fake. So what confluences can we make? We can't rely on this supply zone that was leading to a change of character. We have to find something else for this supply zone, because this supply zone will be swept. Okay, what else can we see here? We can see that we have liquidity. We have perfect liquidity here, as you can see. This is liquidity is leading up to the supply zone here that was leading to a change of character actually in the 1 minute chart. So basically, this is a perfect setup, perfect 1 minute supply zone with liquidity below it, lunchtime zone below it. This zone will be swept, this liquidity will be swept, this zone will be tapped. And as you can see, this zone is outside of the lunchtime zone. So we can rely on this zone. And if I analyze the 1 minute chart, as you can see, the overall flip of the 5 minute zone, this was the 5 minute zone. The overall flip of the 5 minute zone has started from this candle with an efficient push, perfect liquidity built up for this zone. And yeah, basically this is a perfect zone. Okay, now we just delete the lunchtime fake out zone and start this session. Perfect session will open in 1 minute. Perfect. Just play price forward. As you can see, this was the 15-minute break of demand zone. So we have to see what happens. We need to see a clear movement. Okay, reaction on some sort of supply zone. We need to see okay. Here's liquidity, as you can see. Here's perfect liquidity line built up, and basically this is liquidity too. This is a liquidity trend line built up for the lunchtime zone or the extreme zone. All of these movements, all of these supply zones, all of these candles will be liquidated. These will be liquidated because every single candle inside of this time window will be liquidated. Okay, so there's liquidity to what confluences can we make? We can make that the price will split downside liquidity, sweep some liquidity from this region. And after a liquidity sweep, we can expect a reversal and ride the expectation long order flow up to this supply zone. Sorry, up to this supply zone. This is our 1 minute plan. We are waiting for this. As you can see, here's break of structure to the downside at this line, but we can't open a position on this zone because this is not part of the lunchtime, but this zone has liquidity just above it. As you can see, perfect liquidity line just above it, perfect liquidity trend line just above it. So basically this will be liquidity too. Okay, let me just play price forward again. Liquidity is being built up for that zone actually. We just mark it out. Would you risk this setup, guys? Would you open a position on this supply zone? Would you risk this? Because liquidity is being formed actually here. No? No. Feel free to use your microphones, guys. Don't be shy. Okay. I'm saying we won't risk this setup because there's a bunch of liquidity sitting just above this supply zone. So we just leave it. We're going to skip this. We are waiting for a clear sweep to the downside. On the 15-minute chart, we'll see a 15-minute sweep week. And after a reversal, we'll be looking for long opportunities. That's our master plan right here. That's our master plan on the 1 minute chart. Let's see what else happens. More liquidity sweep. Okay, price did not tap the zone as you can see, but swept the liquidity to the upside. This was a liquidity price. This was a liquidity price swept this liquidity with this liquidity sweeping week because this is a liquidity sweeping week. Okay, this supply was not tapped. Building liquidity to the downside. So basically, there's more liquidity is being built up, as you can see in this region. This is liquidity. This will be taken out for sure. I'm basically 100% sure that this liquidity will be taken out. Okay, there's the sweep. Perfect. It has been taken out. Okay. Okay. And let me just switch to the 15-minute chart. If that was a liquidity sweeping week, yes, that was a perfect liquidity sweeping week, as you can see on the 15-minute chart. Here's liquidity. This is liquidity, and this was a 15-minute liquidity sweeping week. So this wasn't a this wick didn't sweep the whole liquidity to the downside. It just created more liquidity, but swept some liquidity. So what can we make with this info? We can assume that price will reverse to the upside, create a bullish structure to the upside after liquidity sweep, react on some sort of supply, maybe on this supply zone, react on this supply zone, create a change of character, and expectation order flow to the downside, continuation of the order flow to the downside, tap of this demand zone, and sweep of the other liquidity, because this liquidity sweeping week actually created more liquidity. Just imagine how many orders were placed on this week, on the end of this week. Only BFIs could do this movement, because sweatable liquidity, trillions and trillions of orders have been placed here on the 50-minute chart, because if a week looks like this, there needs to be trillions and trillions of dollars to create a week like this actually, and create a candle like this. Trillions and trillions of orders have been placed here, and the price is reversed. Liquidity sweep to the downside, orders have been created, upside movement, V-shape recovery, and after this, price will be able to sweep the downside liquidity again and collect all of these trillions and trillions of dollars in orders. Okay, so our master plan right here is actually waiting for a change of character on the 1-minute chart, which has actually happened. We just mark this demand zone out. And if price creates a liquidity for this zone, I will be executing this trade regardless. Because, sorry, I didn't say this demand zone actually broke above this supply zone and changed character on several places. Changed character here, 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 here. So in several places, right? This is a pretty valid demand zone that has started a huge inefficiency to the upside. Okay, let me just play price forward. Okay, there's liquidity. Okay, that's perfect liquidity. Perfect. Here's double bottoms, as you can see. I'm going to set an order limit on this candle, on the 50% of this candle. Why are we using the 50% entry right here in this region? Can you just tell me?
The wick is bigger than the body of the candle, and you have to reduce your stop loss.
Exactly. Thank you for the answer. It's perfect. So I'm going to set an order limit on the 50% of this candle. Let's see if it covers the whole zone. Yeah, the 2 pips stop loss perfectly covers this zone, and I'll be targeting this upper zone because this zone will be liquidated. As you know, this is the lunchtime zone. I can actually refine this zone on the 5-minute chart from the 5-minute chart to the 1-minute chart. So this zone will be liquidated. I'm 100% sure. We are waiting for the tap of this demand zone. Perfect change of character to the upside, perfect liquidity creation, perfect continuation. So this was the last demand zone that has caused the last break of structure to the upside and liquidity sweep here at this region. Just imagine how many people are going to place an order on this demand zone and how many people are going to be liquidated just because there's double bottoms. So can you open a position on this demand zone? Can you?
No.
Yes?
No.
Yes? And why can't you open a position
No.
on this demand zone?
For the liquidity.
They will be liquidated, exactly. So we're waiting for the liquidation and the top of this zone. Okay, price has created upside liquidity. As you can see, here's perfect upside liquidity leading up to this zone. Okay, let's play price forward. Price has actually created liquidity for the downer area for this demand zone. Here's a liquidity again. So in this setup, in this kind of scenario, we can actually try to raise this. We can actually try to raise this setup, because if a liquidity is being swept, for example, this liquidity is being swept, the less recent demand zone in this case will be able to hold price, because if a liquidity sweep happens, just imagine the liquidity is being swept, price will react on this zone because there are more orders, liquidity is swept, more orders are triggered here, more stop losses are triggered here, more shorts are converted into longs at this point. Tap of this zone, more orders are being placed because that's an order block. People are placing orders here. All of these converted orders, all of these orders collected from this region will be able to turn price to the upside. So in this region, I will try to risk an entry here because there is liquidity. There is liquidity. So I will just keep this downside order here, and I will execute a new order on this demand zone. Because if it, let me just adjust this stop loss, because if this demand zone can't hold price and it can reverse price to the upside, price will go down to liquidate this liquidity right here and tap into this block. And this will be a minus one risk reward ratio. We'll lose on this trade. But if this trade will be a lose, price will 100% reverse on this block and continue the overall order flow. So I just try it. Okay, that's actually nothing. So I'm going to delete this. I'm in the downside order because price is too far away, and if price reverses, it will more likely continue the bearish order flow. So we are keeping this order until this supply zone is being tapped. And actually, in this kind of scenario, I will try to risk an entry on this block because price is actually close to this zone and liquidity is being built up here, liquidity is being built up here, liquidity is being built up here, everywhere. So basically everywhere is liquidity built up for the upcoming shorts. And combining this liquidity with this liquidity right here, this, I don't know how many taps are these, 1, 2, 3, 4, 5, with these 6 equal taps and this not lunchtime zone and this lunchtime zone, price will actually, I believe, reverse on this zone. So I'm going to set an order limit on this zone. And I don't know if I'm going to set an order limit on the 50% of this zone or the whole body. Let me just check. Because these setups are actually tricky. These are tricky because if price built up this liquidity and if it sweeps this liquidity, it happens to me pretty often. It happens to me pretty often that price sweeps the liquidity and it doesn't come up to mitigate the 50% of this block because the liquidity swap will gain enough fuel, which will grant enough fuel to price to reverse just the first step of this block. So what can we do in this scenario? Let me just check if the full body covers the whole zone. If it covers it, I will going to set an order limit on that. Okay, so the 2 pip stop loss actually covers the whole zone to the upside. And here's one more tricky thing. If I set an order limit on the 50% of the candle, and if price won't reverse on this zone, it will go up to the extreme zone right here. So if price won't reverse on this supply zone, on this decisional supply zone, it will go up to the extreme. And as you can see, if I set an order limit on the 50% of this candle, this additional stop loss size here won't cover the whole gap between the extreme and between this decisional. So it doesn't really matter if I set an order limit on the full body or I set an order limit on the 50%, because if price goes up to the extreme, I will be swapped out no matter what. It will be swapped out regardless. So it doesn't really matter if I set an order limit on the 50% of the candle or the full body. So in this region, I will just set an order limit on the full body because the stop loss perfectly covers the whole zone with additional space, as you can see. So let me just check. We are still waiting for the tap of this zone first. If this zone is being tapped, I'm going to delete this limit. If this zone is being tapped, I'm going to delete this limit. And if this zone is being tapped, I'm going to maybe target this zone. Let me just check how many risk-reward ratio are these, or just the down or demand area. Yeah, that will be the perfect because there's liquidity. So the plan here, if price taps the upper supply zone and takes us into the order, I will delete this long order and target this down or demand area because there's where the liquidity is. I'm targeting the liquidity and the less recent zone below or above the liquidity. And if price steps into this demand zone and takes us into this trade, I'll be targeting this supply zone up here. So that's our plan right here. Let's see what happens. Price is going to collect the liquidity. No, actually no. Okay. We are tagged into the trade. As you can see, price perfectly swapped the lunchtime zone and perfectly swapped the liquidity and actually created a liquidity sweeping week on this 1-minute chart because it swapped the liquidity, tapped into this order block and immediately reversed, as you can see, tapped this block and immediately closed below this zone. So I'm going to delete this zone, delete this zone, delete the orders, and draw a liquidity line right here, set this order block up again, and target this order block for the shorts. Okay, so this is our first target point. Let's see what happens. Okay, it might be go up for the extreme. Okay, huge reversal. Okay, perfect reversal so far. Can we set a break even right here? Can we set a break even in this region?
No.
No, not yet.
No.
Why can we?
We're waiting for this region to be broken.
Exactly. Perfect. Thank you. So we are setting a break even as soon as price breaks below this structural low point, because this was the last structural low point that was leading to a change of break of structure to the upside and liquidity sweep at this region. If price breaks below this structural low point, we'll be able to set our stop loss into break even. But still has a chance to reverse on this demand zone. Still has a chance to reverse on this demand zone and go up for the extreme because there was no change of character yet on the 1 minute chart. If price changes character to the downside and breaks below this demand zone, I'll be setting a new order limit on the freshly created supply zone because that's our plan here. We just raised the entry right here. This was a risk entry, and we are waiting for a confirmation entry still. So if price breaks below this demand zone, we'll be able to execute the confirmation entry. Let's see what happens. We still have a chance to be swept out from this trade. Okay, reaction on the reaction. Would it be safer to set a break even at this point? Would you set a break even at this point because price was reacting on this demand? I'm asking you again, guys.
I think yes, it's more safer.
Yes, exactly. I'm going to set a break even here. So our break even is in stop loss because price was reacting on demand zone aggressively here, as you can see. So our break even is stop loss. Okay, let's see what happens next. Okay, almost break even. We're still in the trade. Okay, perfect. Okay, perfect. So at this point, we'll be able to set our stop loss into profit. So our stop loss is at this region, at this high point that was leading to a change of character. Let me just, will I mark the stop loss? Let me just change the color to red. Stop loss, red, 16. Okay, on the top, sorry. So this is our stop loss point. We are going to bank profit no matter what. This is maybe 0.3% profit, so it doesn't really relative to us, but we're still in profit, right? Okay, so the change of character has happened. Basically, this is a flip zone because prices react on this zone. As you can see, this was a reaction on this demand zone, and after the reaction on this demand zone, you just created a huge inefficient movement to the downside. So there's a flip zone. Which zone? I want you to draw on my screen. Which zone is the right supply zone in this region? Just draw on my screen, please. Exactly. Perfect. Thank you, Kaizen. That will be your right supply zone because the whole inefficient push and the break of this demand zone has started from this supply zone. So I'll be able to set an order limit on the 50% of this candle, or let me just check the 50%. Okay, we can choose. If you'd like to, we can set an order limit on the full body here if price creates liquidity. So basically, if price creates liquidity for this zone, we'll be able to set an order limit on the full body of this zone. But if price doesn't create a liquidity, I will just stick with the 50% entry here. Okay, let's see what happens. We are targeting this zone still. So this is our next target point also. Let's see what happens. Price is still going down, sweeping the liquidity, almost at this zone. Reverse before this zone and created liquidity. Okay, there's liquidity. This is actually liquidity, as you can see. Or just swap the liquidity. So we are going to execute, as I said, the full body right here because liquidity was being created. We're still targeting this zone because the tap hasn't happened yet, and price created more liquidity for this zone. Okay. Oh, yeah, that was the news. As you can see, 4 p.m. This was the news. This was the news movement. We weren't paying attention to the news. We forgot it, but we won't forget it during the sessions. Okay, this was the news. So, okay, let's see. Let's reanalyze. If price creates liquidity for this zone, because as you can see, this is a huge structural low point breaking zone. This is a huge structural low point breaking zone. Let me just mark it out. So this supply zone has broke below a structural low point, or just let the liquidity. We don't know yet. If price body breaks below this zone, I will just set an order limit on this zone. Okay, there's not a body. Okay, there's a body break. Okay, we can count this as a body break. As you can see, price has created a break of structural to the downside with a body break here, and this was a structural low point, basically a swing low point, because as you can see, this was our high point, low point. Sorry, no, this was a strong high point because it could break below the demand zone, right? Strong high point, weak low point, because this weak low couldn't break above this last strong high point. And instead of breaking above this strong high point, we just react on this strong high point. And this will be our new strong high because this strong high could break below this last weak low. But the real break of this weak low has started from this candle with a strong, inefficient, aggressive push, as you can see. So we have two options here. I'm going to set an order limit on the 50% of this candle, or the, I don't know, just the whole, if it covers the whole zone, I will just set it on the full body. I mean the full wick. It covers the whole zone. Okay. So we got two options. I will just target this right here, and this trade has been closed actually. Let me just do the stop loss. This did hit TP for 8 risk-reward ratio. Perfect. So we got two options here. The first one is to wait for this zone to be tapped and still keep this order here, but still keep this order here. And because we booked 8 risk-reward ratio already, we can risk 1% loss here at this movement. So our two options here. If we keep our order here and keep our order here, that's the first option. That's the first scenario. And the second scenario is to delete this order and wait for the liquidity sweep to the upside, because there's still a chance that price will sweep this liquidity to the upside and tap into the zone. We got two options here. I'm going to choose the riskier one because we have already booked 8 risk-reward ratio at this trade. So I'm going to set an order limit on both zones. So I'm going to keep an order limit on this zone. I'm going to keep an order limit on this zone. If this zone will be swept, this zone will be tapped and we'll be able to book profit. And this target will be changed too because this target point has been already mitigated. So if this zone will be swept, this zone will be tagged and we'll be able to book profit. If this zone reacts and it tags us in, that's win-win. That's a win-win situation, right? So let's just see what happens. Building up liquidity. Okay. Building up liquidity, more liquidity. As you can see, here's perfect liquidity for this zone. So I believe price won't come up to this liquidity because price has created liquidity for this zone also. So if the liquidity is being swept, this zone will be able to reverse price to the downside, that it won't be needed this liquidity sweep. So we are waiting for the tap of this zone. Almost a tap. Okay, we are tagged in the trade. Perfect. We are in the trade. Strong reaction. I'm going to delete this order. And as you can see, we have this less recent demand zone right here. I will just close this zone the way it is. We have this less recent demand zone right here because price is actually changed character. If you take a closer look, there was a body break to the downside, and this structural high point that was leading to a break of structure, the last break of structure was broken here, and this is a change of character to the upside. The reaction on demand zone, demand chain is holding, as you can see. Sorry, break of structure here, demand holding, break of structure here, demand holding, break of structure here, demand holding, question mark. Let's see what happens. Okay. Nice, still a reaction on that demand zone. Still a reaction, okay. Okay, huge inefficiency. Okay, at this region, let me just play price forward a little bit and we can set our stop loss into break even. So our stop loss is at break even, right? Because it broke below the last structural low point on this one. There's a break, there's a clear break. We can set our stop loss into break even. Okay, what can we see here? We can see that price was reacting on this demand zone right here. Sorry, this demand zone right here several times. It was a reaction here. It was a reaction here. And from this candle, we can see the price started the inefficient movement to the downside and the actual order flow that was leading to flip and the change of character to the downside. So let's see what else happens. Okay, huge inefficient movements to the downside. TP almost hit. Okay, there will be a TP hit, I believe. Okay, a reversal to the upside. What can we do in this region? What can we do in this region? We can mark this zone out, this first zone out. As you can see, that was causing the huge inefficiency to the downside. But we have to consider this liquidity to the upside too. So what can we do here? We can do the double-sided knife again. We can mark this zone out, and we can mark this extreme zone out. And we can set an order limit on both of these zones. We can set an order limit on both of these zones, on the 50% of this zone, because there's a equilibrium tree, perfect equilibrium tree. Okay, 50%. And we can set an order limit on this zone also. Because this is the same scenarios as the less recent one. Let me just adjust the zones, because if price sweeps this zone, sweep this downer zone, this one will be tagged and the liquidity will be swept. But if price reverses on this zone, that's a win-win situation for us. And we've already booked 8% here. Our second trade is already in break-even. Actually, I will keep it in break-even because this is just liquidity and I won't set a stop loss here because this will be liquidated. But if price reverses on this zone, I will be set my stop loss here. So let's see what happens. So once again, if this trade tags us in, that will be a win-win situation. If this trade hits stop loss, this trade will be tagged and will be in the trade again. So let's see what happens. Okay, this is a stop loss. I'm going to delete this. And let's see what happens next. Okay, perfect liquidity building up. As you can see, here's perfect liquidity. First tap, second tap, and this liquidity is being built up for this zone. But actually, it seems like price was reacting on this zone. Let's see what happens next. I'm still keeping my order here. If price reverses on this zone, on this small candle, and creates a breakout structure here at hits TP, I will delete this order. But as soon as this low is not broken, I will just keep this order here. Okay, we are in the trade. That was fast. Okay, we are in the trade. Okay, we are still in the trade. Almost stop loss. Okay, perfectly going, perfectly going. Oh my God, perfect. So we can set our stop loss above this high point. So the second straight stop loss is above this high point. It's risk-free. I'm going to still keep the risk on this trade, on the third trade, because as soon as this low is not broken, I will just set my stop loss in the original place. But as soon as this low is broken, I will just set my stop loss in the break even. But if price aggressively reacts on this demand zone and aggressively reacts and coming back up from this demand zone, I will just set my this stop loss into break even on the third phase stop loss. So let's see. Okay, there's actually a aggressive reaction. So I'm going to start my stop loss and break even for the third trade. Okay. Okay, liquid. Okay, perfect. Almost hit TP. Almost hit TP. We are not executing any more trades because this session has already ended at this point. So we are just letting our trade runs. I mean, letting our trades run. Okay, reversal before it. I'm going to set my stop loss above this high point. So stop loss is right here. Both of our stop losses are right here. Okay, reaction on that structural high point. Price is reacting on this zone. As you can see, this is also a strong high because, as you can see, let's map our structure out. Strong high, weak low, couldn't break above the strong high. Strong high, weak low, couldn't break above the strong high. Strong high, weak low, broke below the weak low. Then this low couldn't break above the strong high. So this will be a strong high and this will be a weak low. So we are keeping our stop loss above the strong high. Okay, still going. Okay, perfect. Okay, perfect. TP hit for both of the trades. Very nice. And this session has already ended, as you can see. Yeah, this session has already ended. So let's just count the risk rewards for today. First trade was 8 risk reward, right? It was 8. It was 8. It was 8, right, guys?
Yes.
Okay, perfect. Second trade. Second trade is 1 to 10 risk reward ratio. 10.6 risk reward ratio. Third trade was stop loss. So that's -1 risk reward ratio. Fourth trade is, let me just adjust, sorry, let me just adjust this. Fourth trade is exactly 9 risk reward ratio. Fourth trade, 9 risk reward ratio. Overall, 8, 18. Yeah, almost 20 risk reward ratio. Minus the 1. So, okay, let's just keep this 27 risk reward ratio for today at a single New York session with following the pro trend, because I don't know if you remember, as I told you, the pro trend is still bearish. Every single downside movement will be a pro trend movement. Every single upside movement will be a counter trend movement. You still remember that? So we were following our plan. We were executing our criteria. And as you can see, the scenario that we were talking about, the liquidity sweep and the reversal here and the continuation down to this demand zone has actually happened. It actually happened. We followed our plan, we followed our criteria, and that's happened exactly what we were predicting, what we were planning, right? we follow the criteria at every single trade. We were waiting for liquidity sweeps. We were waiting at nice entry opportunities. So this was a pretty good day overall, right? We can keep going if you'd like to. We can see what happens after the tap of this demand zone, just for curiosity. Guys?
Yep.
Yeah, for sure. Because we had that before. There's a zone on the 15-minute.
Yeah, this is the 15-minute zone. We were waiting for the tap of this zone and for and the whole session, right? So yeah, I will just keep it here. This is our today's results. Just a question. Did you actually like this session? Did you learn something new?
Yep. And I have
Great.
and I have questions, but when you're through.
Okay, you'll be able to ask your questions after we finish this. Okay.
Okay, cool.
So I just see what happens. Okay, that could be a liquidity sweep. Let's see. Yeah, there's perfect equal bottoms right here. First bottom, second bottom, price fed the liquidity. I believe this will be a 5-minute liquidity sweep. Yeah, aggressive reaction, change of character. As you can see, there was perfect change of character after the liquidity sweep. This was a liquidity sweeping movement that swept the double bottoms here, change of character here. Change of character has happened from this small candle right here. So in that case, if it wasn't outside of the session, we'd be able to execute a trade here because price has built up liquidity for this zone. As you can see, this could have been a perfect entry criteria, but we are not trading in outside of the New York yield zone, as you may know. So this is not an option for us. We are skipping this trade. Just let's see if it hits the target point actually and the entry point. Okay, let me just try it if it would have kept us in. Yeah, that will be still a tag and we will be in the trade. Reaction, and we will be able to target the upper 4-hour supply zone for swing trades for 1-to-25 risk-reward ratio. Of course, we are not keeping for 1-to-25 risk-reward ratio. We are closing at 1-to-10, 1-to-15, 1-to-5 in a counter trend. But let's just test it for curiosity. I'm going to just fast forward it. Okay, switch to the 5-minute chart because it's actually pretty slow. Just to see if our analysis were good or not. It's running straight up to TP almost. Switch to the 15-minute chart because it's still slow. Okay, TP, perfect. So basically our criteria or plan or overall, every single criteria was good. We did set our criteria, we did set our plan well. We executed our plan, as you can see, tap of this demand zone, change of character on the demand zone. We were waiting for the change of character inside of the session, but it wasn't happening inside of the session. Tap of this zone, change of character here, and execution of the expectational long order flow up to this supply zone. So yeah, if this trade would have still been in the session, in New York session, I would have taken it regardless, but we're following our plan, right? We are executing our plan. We are sticking to our plan. We can't execute a trade after New York yield zone has ended. We are sticking to our plan. We've missed the 1-to-25 risk-reward ratio here, but we've already booked 1-to-27 risk-reward ratio at this session. So that's perfectly fine, right? So, okay. Actually, this was a pretty good day. If you get any question, they are very welcome. Let me just hear your questions, guys.
All right, if I may start off, Marcel. All right, so initially we started. Are you hearing me? Just making sure.
Yeah. Go on, mate.
Okay,
I can hear
awesome.
you.
Okay, cool. So initially we had a plan. We started with a 4-hour. We marked out the zones there. We had that big area at the top, the pink area. We also went to the 15-minute and we had the zone which we just tapped in to give the 25 RR. Now the thing is, and I'm just gonna speak for myself. I don't know if other guys have this. I'm with it. 4-hour zones marked out, looking for a 15-minute chop and a 1-minute chop. But for this, like today that we reviewed, that was not on. It didn't go to a 15-minute zone. We didn't get we got the chop, but it was really on the 1 minute. So we had the zones which we knew were there.
You're meaning
went
this
to-
zone,
Yeah, right.
but this is a
So-
50-minute zone. This is a 50-minute
Right.
zone.
Right. So at that point, we were looking at, at that 15-minute zone, it was still bullish on the 15-minute, overall bearish on the 4-hour, but it hadn't tapped into the supply of the 4-hour.
Yeah,
So
exactly.
of course so without the tapping into the supply, we are not looking for the 15-minute chop to go bearish. So at that point, we're still bullish on the 15-minute, right? And we're
Right.
looking for it to come into the 15-minute demand and looking for a chop on the 1 minute in order to take that buy trade.
exactly.
So I'm saying all of this for my question is that since we were in that market structure, which was bullish on the 15,
Yeah,
and we saw where price at the beginning of the session, price was in between the high and low of that market structure on the 15.
Yeah.
When we go to the 1 minute chart, we should look for the zones which have the inefficiency, liquidity sweeps, and those well, in this case, it would have been, we started with a sell from supply. No,
Yeah.
actually we did a buy initially, right? I think we did a buy initially. No, we did a sell. I don't remember which one we did first. basically-
we were aiming for a buy opportunity first.
me.
Here was the first buy opportunity. We were aiming for
Yeah.
this buy opportunity. But as
Right,
soon as I saw the reaction on this extreme supply, because this was an extreme supply, this supply is on this high point could change character on the 15-minute chart, right? So overall, the
Right.
15-minute order flow has been changed to bearish from bullish. So in this region, the overall 15-minute order flow was bullish. But after the
Right.
high point was printed here and the change of character to
Right.
the 15-minute has happened, and price has actually reversed here and built up liquidity for this demand area. Of course, we were
Right.
looking for demand trades up to this extreme supply. But as soon as price changed character here and the change of character happened on the 15-minute chart, perfectly happened on the 15-minute chart, the overall 15-minute order flow has changed into bearish at this region.
right,
So at this region, the order flow is bearish. The main trend on the 15-minute
Okay.
chart is bearish, but the counter trend on the 1-minute chart is bullish. This is a counter trend movement up to this
Right.
supply. And the
Right.
overall main order flow down to this demand zone is bearish on the 15-minute
Right.
chart and on the 1-minute chart and the 5-minute chart on every low time frame, right? And that's when
Right.
as price taps this 15-minute zone and demand takes over control again from supply and
Right.
changes character. So if price steps into this demand zone, that means demand is in control. But if price
Right.
creates a change of character on the 1-minute chart, that means demand is fully in control because price was tapped into the demand zone. Demand took over control from supply partly, but change character on the 1-minute chart, which means it took over control fully from supply. So at this region, after a change of character here and here, demand was fully in control. So just look
Right.
at the order flow. Just look at the higher time frame order flow. On the 15-minute chart, as you can see, price is printing highs and lows, highs, lows, highs, lows, highs, lows, highs, lows, lows, highs. And the order flow has turned here to bearish, down to this demand area. The order flow turned to
Okay.
bearish here. That was a change of character right here.
right,
And the bearish order flow was being continued on the 15-minute chart down to this demand zone. 1-minute change of character,
Okay.
and the bullish order flow is being continued up to this supply zone.
Okay, so for our session, we had a bearish change of structure on the 15-minute chart,
Yeah.
and then we were looking for sells,
Yes. Exactly.
and we sold at the extreme because
We
saw
were
the
looking for
liquidity
sales
building.
at the extreme region, at this region, right? But
Yeah, yeah.
we were being able to look for longs, for counter trend opportunities up to this region. So basically,
Right.
price swept the liquidity here. This was a 15-minute change of character, and the liquidity sweep at this week, as you can see, it swept all of the liquidity, and after the liquidity sweep, it just reversed to the upside. So at this region on the 1-minute chart, okay, let me just clear this. Let me just fully clear this. So the bearish structure, the 15-minute structure, sorry, the 15-minute structure has turned into bearish at this region, at this movement. So the structure on the 15-minute chart is bearish here. But on the 1-minute chart, at this region, the structure has turned into bullish, right?
Right,
Because price change character here on the 1-minute chart. So the 1-minute structure is bullish in this region. But the 15-minute is still bearish because this is the high point. So what's the expectation order flow? The expectation order flow is that price created a change of character here, reaction on a supply that was creating a change of character, continuation of the order flow. This is the 15-minute. This is the 15-minute
Right.
chart. 15-minute, 1 minute. bearish at this region, bearish, change of character, bullish at this region, reaction on supply, bearish at this region, right?
I'm with you. The only thing I'm saying is that with the change of structure on the 15-minute, it didn't tap into a 4-hour zone. But even though it didn't tap into the 4-hour zone, it was still valid.
Of course it was.
Okay, with you.
Because
Okay.
this was just a clear 15-minute zone. This was just a clear 15-minute zone. It doesn't have to be a 4-hour zone. Maybe the
Okay,
4-hour zone
okay.
was just below this. Maybe there was a 4-hour zone, but price was reacting on a 15-minute zone. And if price reacts on a 15-minute zone, you need to wait for a 1-minute change of character. But if price doesn't give you a 1-minute change of character here and just go straight down to this 4-hour zone, let's say there's a 4-hour zone, you have to wait for a 15-minute change of character inside of this 4-hour zone. But if the 15-minute zone gives you the right entry opportunity, you can execute the trade based on that entry opportunity, in this case, a 1-minute change of character. Okay,
Good. All right, thanks, bro.
all clear now?
Yep, with you.
Perfect.
Thanks.
I'm going to answer 2 more questions. Any more questions, guys? Anyone? Come on, guys. Don't be shy.
Maybe tomorrow while trading, we can ask questions then.
Yeah, of course, you can have questions. So the session was clear. You've got no questions left. It's all clear.
Yeah, this is clear. This is clear as water. Yeah, very
So,
good system.
Was it a
love
good
it.
session? Did you enjoy the session?
Enjoyed
Yeah.
so much, man. It's 2 a.m. at the night. Still enjoying it.
Great, yeah.
It's 2 a.m. at your place.
Yeah.
And you're still here and watching this session, right?
Exactly, with full energy, man.
Yeah, man, that's what it is. Discipline, right? Perfect. So if you got no other questions, guys, that's it for today. I'm going to upload this session to the Telegram channel and see you guys tomorrow with the markups, with the recap video, if I take any trades. So yeah, guys, take care. Have a beautiful night. Have a beautiful evening. And see you guys tomorrow. Take care.
Thank you so much.
Enjoy.
Thank you.
Thanks.
So the recording is on. Welcome, everyone. Let's just start this session. Let's just start this session on the 4-hour chart and the daily chart, and let's do a top-down analysis. So just take a look at the 4-hour chart. Okay, just one more checking if you can hear me well. One more checking if you can see my screen. So everyone could.
Yeah, good.
Good. Okay. So what can we actually see on the 4-hour chart? What is the 4-hour chart showing us? It's showing us that price is reacting on a daily demand zone down here recently. And after a daily demand reaction, after a daily demand mitigation reaction, it created a huge V-shaped recovery, as you can see. So price was in an extremely bearish trend at this region. Let me just show you. Price was in an extremely bearish trend, creating a series of lower lows, lower highs over and over again. So this is the 4-hour chart. Basically, this structure is the weekly chart. This structure is the daily chart. This structure is the monthly chart. So every single chart, every single higher time frame chart was in a bearish trend, right? So this region was extremely bearish. So as you can see, here was a daily demand zone. This downside demand area was a daily demand zone on the extreme of the leg. As you can see, here's the extreme of the leg. We've talked about this demand zone. We've talked about this area pretty often in the previous live sessions and recap videos. So this is a pretty valuable demand zone because it has started the whole bullish order flow to the upside at this region, as you can see. So it was the start of this bullish upside order flow here, which was leading to a bearish order flow at this region. So price is reacting on this daily demand zone. This is a daily demand zone, not a 4-hour demand zone. So here's a reaction. Here's a V-shaped recovery, as you can see, after the mitigation of this demand zone. And actually, here's a 4-hour change of character to the upside here at this region. So this was the last structural low point that has caused the last break of structure here to the downside on the 4-hour chart. It caused the tap of this overall demand zone. It swept some liquidity at this region, I believe. So this was the last recent 4-hour supply zone. And this was the last recent supply zone before this supply zone. Actually, price has changed character on the 4-hour charts several places after the mitigation of this daily demand zone. As you can see, here's the first change of character, here's a second change of character, and here's some liquidity building up at this region. Okay. As you may know, every single time frame is fractal, right? Every single time frame can be confirmed by another time frame. Let's just go through these time frames. So here's a daily time frame, here's a daily demand zone. A daily demand zone can be confirmed with a 4-hour chart. It can be confirmed by a 4-hour change of character and 4-hour confirmations. So for a daily demand zone, we need a 4-hour confirmation in order to actually break the trend. So as you can see, price has tapped this daily demand zone, change character on several places on the 4-hour chart. So the actual bearish trend at this region has been trapped. It has been reversed into bullish trend. So every time for this fractal, daily chart can be confirmed with the 4-hour chart. The 4-hour chart can be confirmed with what? I'm asking you guys.
15-minute chalk.
15 minutes.
Exactly. The 4-hour chart can be confirmed with the 15-minute chart. So let me just write it down here. Daily chart can be confirmed with the 4-hour chart. These are pairs. These are golden pairs. The 4-hour chart can be confirmed with the 15-minute chart. The 15-minute chart can be confirmed with what?
1 minute chalk.
1 minute, exactly. The 1-minute chart confirms the 15-minute chart. And here's the last one. I'm not using it, but the 1-minute chart can be confirmed with what? 15 second or 5 second? Yes.
5 seconds.
The 1-minute chart can be confirmed with the 50-second or 5-second chart. So every single time frame is fractal. Every single time frame has a pair that confirms the other time frame. Daily has been confirmed with the 4-hour, 4-hour has been confirmed with the 15-minute, 15-minute has been confirmed with the 1 minute, 1 minute has been confirmed with the 15 sec or the 5 sec. So these are the confirmation pairs. Okay, just memorize it. You will be able to rewatch this video and actually write it down or just take notes. So all of these time frames confirms each other's. As you can see, this was a daily demand zone down here, which has been tapped, and after this, price has changed character on the upside on several places. So what does this actually mean? I'm asking you, what does this mean regarding this overall trend, regarding this overall bearish trend? What calculations can we make after the change of character on the 4-hour chart after the demand daily mitigation?
We are in a bullish trend.
We are in a bullish trend. Till when? Till we tap into some 4-hour supply zone, right? So at this region, after the mitigation of this daily demand zone and after the 4-hour change of character on several places, price has turned into bullish. So at this region, our price action or bias is actually bullish. Okay, it will be bullish until price steps into some sort of 4-hour supply zone, right? Let's find the last recent unmitigated 4-hour supply zone that's valuable for us. Please just mark it for me on the chart. You can draw on my chart, please. Anyone? Can you repeat?
Sorry, can you repeat what you said?
Couldn't hear?
Yeah, I couldn't hear. What did you say?
Okay, let me just repeat.
Yeah, even a bit. You're talking a bit fast.
Okay,
And
sorry. Let me just...
I just have a delay in the internet, so.
Okay, sorry.
It's
Let me
not your
just slow
fault.
down.
It's not your
So I
fault,
just
yeah.
said that price in this. Yes, actually, this is the correct supply zone, but let me just repeat myself. Price at this region is bullish. It will be bullish until price steps into some sort of valuable 4-hour supply zone. And I ask you to actually find that 4-hour supply zone, and someone just marked it out here. This is the last recent valuable supply zone for us. And if price steps into this 4-hour supply zone and gives a reaction on which time frame? Which time frame?
15 minutes.
15 minutes.
15
exactly.
minutes.
If it gives a reaction on the 15-minute chart, so for example, creates a change of character on the top of this supply zone and creates a 15-minute change of character or 15-minute break of this zone, so it breaks above on the 15-minute chart up above this zone, the trend will be confirmed. So at this region, up to this supply zone, price is bullish. We are waiting for a reaction on this supply zone, and if price reacts on this supply zone and creates a 15-minute change of character to the downside, the trend will be bearish again, and the overall bearish trend and this region can be continued. As you can see, please just remove this drawing from the stream because I can't see the chart from it. So yeah, I don't know who drew it here, but please just remove this drawing, or I will just do manually. Sorry, clear all drawings, perfect. So, as you can see, we have a liquidity just below this zone. Here's a perfect liquidity line just below this supply zone that was built up for this upper supply area that was leading to a break of structure. And actually, this is a pretty valuable supply zone because it was leading to an overall higher time frame break of structure here. As you can see, This was the last recent structural low point here. Let me just mark out this structure at this region. This was the last recent structural low point. High, low, high, low, high, low. So at this line, as you can see, price has created a breakout structure, but not on the first candle, not on this wick area, and not on this area. This wasn't the breakout structure. The real breakout structure of this structural swing low point has came into the market at this line. So from this supply zone, right? So basically, this supply up here is a pretty valuable supply zone for us because it has broke the overall swing low point at this region. Here's a swing low breakout structure. Here's an actual breakout structure. I mean, last recent breakout structure. Here's an inefficient movement. Here's a liquidity building up for this zone. You raise your hand. Okay, just a minute. So basically, this 4-hour supply zone have every single criteria in order to become a pretty valuable supply zone. Okay, let me just hear your question. Cassie?
Okay, when you're done with the analysis, I'll ask my question. When you're done.
Sorry, I couldn't hear.
When you're done with the analysis, I'll ask my question.
When I'm done
When you're done with the analysis, I will ask my question.
Okay, perfect. Okay. There will be a question and answer section at the end of this webinar, okay? So you'll be able to ask your questions freely. So, perfect. Actually, where was I? We are waiting for a tap of this 4-hour supply zone on the higher time frame. So this is our directional bias. Our directional bias at this region is bullish, and we are waiting for a tap of this supply zone. This is our higher time frame plan. This is our higher time frame plan for the upcoming weeks, for the upcoming days. Okay, let's just focus on the downer region of this leg because there's lots of price action missed out. So what can we see at this region? We can see that price has changed character here on the upside first. Here's the first change of character because change of character can be considered with weak as you know. And here's the second change of character to the upside again, as you can see. So price has double change character after a mitigation of this demand zone. What else can we see? We can see that price has created this valuable demand zone right here that was causing the second change of character and the huge inefficient push to the upside with this movement here. As you can see, after the change of character to the upside and the liquidity sweep at this region, this was a perfect liquidity sweeping week because there was equal taps, first tap, second tap, price swept those equal taps here, created more liquidity, and after the liquidity sweep and liquidity creation, it just reversed to the downside and tapped into this 4-hour demand zone that has caused the overall change of character and inefficient push to the upside. Okay, so as you can see, price is reacting on this demand zone and couldn't break below it with body break on the 4-hour chart. So all of these movements are considered as just a liquidity call action. So this demand zone did hold. This is one more confirmation for the bullish overall higher time frame trend at this region. Okay, what else can we see? We can see that price has tapped this demand zone from a 4-hour supply zone. So we have this unvaluable 4-hour supply zone at this region. And why am I saying that it's unvaluable? I'm just asking you again. Why am I saying that this supply is unvaluable?
It's a weak high.
Exactly. That's the first good point. It's a weak high. And other than being a weak high, it couldn't break below demand zone, couldn't break any demand zone at this region on the 4-hour chart, as you can see. And in order to become a really valid supply / demand zone, it has to, what has it has to do? I'm just asking you again. I'm asking you the zone criteria. What criteria has to have in order to become a valid zone?
Volume, increase in volume.
Breakout structure, that's the first, yes. Taking out demand.
Liquidity
Exactly.
Inefficiency.
Inefficiency, breakout structure, liquidity, perfect. Thank you, guys. So other than inefficiency, this zone has created nothing, right? So there's only inefficiency that has been caused by this zone at this region. This is the only criteria that this supply zone has. Just compare this zone to the demand zone. This demand zone has caused change of character, caused liquidity sweep, caused liquidity creation, created huge inefficiency. This zone has created only inefficiency. So compared to this zone, this will be weak and this will be broken sooner or later. So this is the second confirmation for the upcoming bull trend at this region. So I believe price will break above this supply zone. 100% it will break above this supply zone and it will continue the overall bullish trend up to this supply zone because there's a bunch of liquidity left out just below this valuable supply zone. And believe me, this supply has to be tapped. This supply is a pretty strong supply zone and it has to be tapped because it broke this swing low point, created inefficiency and has liquidity. I don't know when it will be tapped. I don't know if it will be a week, or it will be month, or it will be years, but this supply zone has to be tapped, and it will be tapped sooner or later, and I believe it will be tapped sooner. So, conclusion, this supply zone will be broken. This supply zone will be broken on this week or the upcoming week, 100%. Price will break above this supply zone, and it will continue the overall bullish order flow. So, first possible scenario on the 4-hour chart, let me just mark this supply zone out. First possible scenario on the 4-hour chart, price creates a small rejection here to the downside, reacts on some sort of 15-minute demand zone, liquidity sweep, etc., reacts on that demand zone, breaks above this 4-hour supply zone, creates a retracement, and continues the overall bullish order flow up to this supply zone, where it changes character to the downside and continues the bearish order flow. But this is a really, really long-term plan. This is a long-term plan. All we have to do is just focus on this region. All we have to do is focus on what price is actually giving us at this specific supply zone. If price breaks above this supply zone, so let's just see the scenarios for this supply zone. If price breaks above this supply zone, just as I showed you, we can continue the overall bullish order flow, and we can ride the expectation order flow up to this supply zone. That will be the best ideal plan for us for the upcoming days and weeks. Second scenario, if price can't break above this supply zone, that's the lower probability setup. That's the lower probability scenario for the upcoming days and weeks. If price can't break over this supply zone and reacts on some sort of 50-minute supply zone at this region, and let's say it creates a 50-minute change of character to the downside here at this region or at this region, we'll be able to ride the expectation order flow to the downside. But this is lower probability setup than the long scenario. So I believe the long scenario will happen on the upcoming days and weeks. Okay, what else can we see on the 4-hour chart? We can actually see that price has built up more liquidity at this region, as you can see. This could be considered as liquidity trend line here inside of this supply zone. And we will just see that if there's any other 50-minute refinement inside of this 4-hour supply zone, because I believe there will be an extreme 15-minute supply zone somewhere up here that has to be tapped and has to be broken. Okay, so these are the upcoming possibilities and scenarios for the 4-hour chart and the long term. Can you just... Sorry. Okay, can I just continue with the 15-minute chart? All clear, or you've got any question?
Everything okay?
Here's just a question. Why is it the supply zone did not break demand? That's exactly why we are not calling this a valuable supply zone. This couldn't break below the demand, but as you can see, price is clearly reacting on this supply zone. It's clearly rejecting on this supply zone several times because it created inefficiency. And on the 15-minute chart, it has created a change of character or break of structure. So basically, this is the 4-hour chart. Let me just draw the 4-hour chart quick. This is the 4-hour chart, right? Creating these type of movements. This is the 4-hour chart, and currently this is our price action now. Okay, just focus on this leg. On the 4-hour chart, it's a simple leg. It's a simple 4-hour leg with a high and a low point, right? Here's a low point, here's a high point. Here's a low point, here's a high point. Until this low breaks, there won't be a change of character. Until this high breaks, there won't be a break of structure. So this is our 4-hour structure. Let's just focus on this region, this leg. On the 15-minute chart, it looks like this. I'm just drawing this simple leg. On the 15-minute chart, it looks like this, right? This is the 15-minute chart compared to the 4-hour leg. So basically, after the high point has reached and price has reversed here on the 4-hour chart, price has created a 15-minute change of character to the downside and started a bearish order flow. So basically, this supply zone, this 4-hour supply zone has caused a change of character / break of structure on the 15-minute chart somewhere around here. So there was a break of structure or a change of character here, and it took out some demand zone at this region. So there could have been a demand zone that have been taken out by this supply zone, right? Because timeframes are correlated. But the overall 4-hour structure, has not been broken yet, as you can see, by this supply zone. It couldn't break below this demand zone. But as I said, on the 15-minute chart, more likely it broke below demand zone at this region. Let me just show you at this region, and it created an inefficient push. So this 15-minute zone broke below demand zone. That's why we consider this as a valid supply zone on the 4-hour chart and the 15-minute chart too. But it's not valuable. It's not as valuable as this demand zone. It's not as valuable as this supply zone. It's just a simple 4-hour supply zone that has caused change of character / break of structure on the 15-minute chart. Make sense? Was it understandable? Okay, perfect. So let me just continue on the 15-minute chart. And let's see the actual price action on the 15-minute chart. So let me just show you here the example I was just talking about at the previous example. So here's the 4-hour lag. This is how the 4-hour lag actually looks like. On the 15-minute chart, as I show you, this looks like this. On the 15-minute chart, it changed character here to the downside with this movement, change character here to the upside, change character here to the upside too. This is the 4-hour supply zone that we just marked out that is unvaluable. So here was a 15-minute change of character here to the upside, and from this supply zone, price has changed character here to the downside. So on the 15-minute chart, actually this supply zone has changed character to the downside and created an inefficient push, as you can see. But on the 4-hour chart, it will be unvaluable, right? It's a valuable 15-minute zone, but it's an unvaluable 4-hour zone. And you can actually identify it will be weak or strong by just simply looking at the correlated timeframes. If the 4-hour chart, it shows that it's weak, it shows that it's unvaluable, then it will be weak, right? If the 15-minute shows that it's strong, but the 4-hour chart shows that it's weak, it will be broken. So just use the multiple timeframes. Okay. So after this region, after the demand tap here at this region, the 4-hour demand tap, price has changed character to the upside here, as you can see. Here was a less break of structure to the downside with body break. As you can see, it was not just a weak break, it was a body break. And after this, price has changed character on the long side with this movement from this demand zone down here. I've showed you this demand zone in the markup section yesterday. So as you can see from this demand zone, price has actually changed character to the upside with this movement and created a bunch of liquidity just above this zone with this movement. As you can see, here's the liquidity. Okay. What else can we see? We can see that price has created this 15-minute zone, this 15-minute supply zone inside of the 4-hour zone. So here's a perfect refinement of this 4-hour zone, this overall 4-hour zone, down to this 15-minute supply zone. Why is it a valuable 15-minute supply zone? Because it changed character here to the downside and started the overall bearish order flow down to this 4-hour demand region. So this will be a pretty valuable supply zone. Also, it had liquidity. As you can see, here's liquidity that has been fed by this overall movement. Okay. What else can we see on the 4-hour chart? I mean, 15-minute chart, sorry. We can see that this demand zone right here has caused the overall liquidity sweep and the supply tap. As you can see, it has caused the inefficient push to the upside, liquidity sweep at this region, supply tap, break of structure, higher time frame break of structure. So this demand zone caused everything, right? This demand zone was broken after the reaction on this supply zone. So basically there was a flip zone. There was a flip zone, and the flip zone could have been this, because as you can see, prices reacted several times on this demand zone. Let me just extend this zone, reacted several times, couldn't body break below this zone. Here, as you can see, couldn't body break. And the actual change of character and actual break of this zone has been caused by this, sorry, not this. Okay, by this supply zone here. Okay. So higher time frame supply tap, 4-hour supply tap, 4-hour supply mitigation, 15-minute demand zone that has caused the overall supply mitigation, reaction on this demand zone, flip of that overall demand zone here at this region. As you can see, price couldn't mitigate the actual 15-minute character changing demand zone down here, which was caused the overall demand control after the mitigation of the 4-hour demand zone here at this region. So as you can see, price swept the liquidity, but it couldn't tap the zone. It couldn't tap into this zone, but actually swept the liquidity. And after the liquidity sweeping movement, let me just extend this line. After the liquidity sweeping movement, price is reversed to the upside, as you can see. I don't know who is it, but please just mute yourself. Sorry. No problem. So after the actual liquidity sweep, price is reversed to the upside, as you can see, tapped into this flip zone, tapped into this 15-minute flip zone at this region, reacted on this flip zone several times, and created a change of character here actually on the 15-minute chart too, as you can see. So here was a change of character. This happened in London session, but this was, I believe, a fake zone. This is a fake Frankfurt zone at this region that has caused the overall supply, change of character inside of this supply zone. Did you guys take this setup? Did you guys open a position on this supply zone? Have you been liquidated? No. I'm just asking anyone who's trading London. Vignesh, yes. Okay, perfect. Let me just continue. So basically, prices mitigated this flip zone, this 15-minute flip zone. And after the mitigation of this flip zone, it created a change of character downside, which was leading to a creation of the supply zone. Because if there's a change of character, there will be a supply zone that has caused the change of character, right? If there's a change of character, there will be a opposite side zone that has caused the break of the actual zone. So here was a demand zone. This supply caused the break of this demand zone, flip zone. Perfect. But here comes the other flip zone. Prices actually flipped this zone, flipped the flip zone, which caused the creation of the demand zone that was leading to a flip of this overall supply zone here at this region, as you can see. Okay, so at this region, we have two valuable demand zones. The first one is down here, which has been left unmitigated. So we can still extract a reaction on this zone. If price reverses somewhere on this supply zone, then this demand zone won't give enough reaction to reverse price actually to the upside again. So we can just expect a reaction on this demand zone, small reversal, break of this demand zone. So this will be an entry point. This will be an entry point for the upcoming short possibilities. So basically, if price steps into this demand zone, creates a reversal on it, breaks below, there will be an entry point that will lead to short entries. Okay, so let me just continue. At this region, we have two valuable demand zones. The first one is here, and the second one is here because it caused the flip of the flip zone. Flip zone, flip zone, flip the flip zone. So this is a pretty valuable demand zone that has caused the overall flip of the flip zone. What else can we see? On the 5-minute chart, on the 1-minute chart, there will be liquidity here, as you can see. This is not considered as a perfect liquidity. This is not considered as a valuable liquidity, but this is still a liquidity. This could be still liquidated. Why am I saying that this could be a liquidity? Because here, as you can see, this demand zone caused the break of the last structural point. This one to the upside caused inefficiency to the upside, but it's part of the liquidity. This could be a liquidity on the 1-minute chart. Let me just zoom out. As you can see, this is a perfect liquidity in the 1-minute chart. First bottom, second bottom, liquidity for the downer zone area, because there's huge inefficiency at this region that needs to be filled up. Let me just switch back to the 50-minute chart. Sorry. So this inefficiency, this huge inefficiency needs to be filled up sooner or later. So this is one more confluence for the liquidity sweeping and inefficient filling up movement down to this flip zone. Okay.
Marcel?
Yeah, let me hear.
Can I ask you a very quick question?
Of course.
This is where sometimes, you know, this liquidity where you draw it, this is where I get sometimes confused that if it is a liquidity or not. So sometimes I take the demand zone from this area and I got liquidated. But how can I say 100% that this is liquidity? I have to switch to lower time frame?
Yeah, actually. But here's a tricky part about this. Here's a tricky part.
Yeah.
As you can see, this is the 15-minute chart. We are expecting the 15-minute mitigation of this 15-minute zone. So for a 15-minute zone, there have to be a 15-minute liquidity. Because this isn't a 15-minute liquidity, this isn't a 15-minute liquidity, this is 1-minute liquidity. And for a 15-minute zone, we need a 50-minute liquidity. So for example, something like this on the 15-minute chart. And this is just one single pullback, not a double bottom. But it's a double bottom on the 1-minute chart. So if there was a liquidity on the 15-minute chart above the 15-minute zone, that will be liquidated 100%. But if there's just 1-minute liquidity above the 15-minute zone, that won't be liquidated 100%. There's a chance to be swept. There's a chance that this liquidity will be swept, but price is a chance to actually reverse on this zone too.
Oh, okay. Okay.
Okay.
Thank you, man. Thank you.
You're welcome.
Sorry for interrupting.
No problem. No problem. This could be a liquid trend line. Also, let me just switch to the 1-minute chart and see if this is a liquid trend line. Actually, this could be a liquid trend line, as you can see. So let me just switch back to the 15-minute chart and continue the analysis. Okay, what can we see at this region? Prices react on this demand zone. I'm sorry, supply zone. Prices react on this supply zone and reverse immediately. But there was no character changing movement at this region on the 15-minute chart, right? So we can't really identify a good 15-minute supply zone at this region, but we can identify a good 5-minute supply zone / 1-minute supply zone. There's no clear 5-minute supply zone either. Let me just find a clear 1-minute supply zone at this region that has caused the change of character. There was no change of character on the 1-minute chart also, so there won't be any supply zone. There won't be any valuable supply zone on the 1-minute chart. We can just actually expect a reaction on a high point because price usually reacts on some high points. So as you can see, here's a high point, and this is a weak high point because it couldn't break below the last structural low point. As you can see, this is the last structural low point. This couldn't break below this demand zone, couldn't break below this last structural low point. So this will be weak. This is a weak high. This will be a strong high more likely. As you can see, price is reacting. Okay, and it's broken. So this low point has become strong at this moment because it could break above the last structural high point and it body closed above it, as you can see. So we have a new strong low point, which is this one. Let me just map out your structure. Let me just map out the overall structure. At this region, prices created this high point. This is a less strong high because it could break below the structural low point. I'm just marking out the 15-minute structure. The 4-hour structure is completely different, as you can see, because the 4-hour structure is bullish. I'm just marking the 15-minute current structure. So this was a strong high. This was a weak low because it couldn't break above the strong high. So these are the real structural highs and lows. This is the real structural high point at this region. This is the real structural low point at this region, the 15-minute chart. Everything between these highs and lows will be just substructure. So all of these highs and lows are just sub high and lows. Okay, let's just mark out the sub high and lows, because if price is ranging, and usually price creates this price action if it's ranging, as you can see, between a high and low, we have to mark out the sub highs and sub lows, because we can trade based on those sub highs and sub lows. So let me just clarify something. There will be a change of character to the upside if this high point breaks. There will be a break of structure to the downside if this low point breaks. This is the overall higher time frame structure. But on this substructure, we can identify several highs and lows, several weak highs and lows. So as you can see, this could be considered as a strong low because it could break above this high point. This is a strong low at this region. This is a weak high because it couldn't break above the strong low. This is a strong low because it could break above the weak high. New weak high because it couldn't break below the last strong low. Sorry. This is a new strong low because it could break above last weak high. This is a new weak high because it couldn't break above the last strong low here, as you can see. And this will be our new strong low because it could break above the weak high. So the overall substructure on the 15-minute chart is actually bullish, as you can see, creating series of higher highs and higher lows, creating series of strong lows, weak highs, strong lows, weak highs. So this is our substructure, but this is the real structure. Okay, does it make sense? Yes.
Yes, thank you.
Perfect. Okay, so what can we actually expect from the 15-minute chart? We can actually expect a deeper mitigation of the demand zones, either of this one, either of this one, or either of this one. We can expect a deeper mitigation of these demand zones, and we can expect the continuation of the overall bullish order flow to the upside. This could be the best possible scenario for today. But let me just switch to the 5-minute chart and see if there's anything. So there was the break of the last structural high point at this region. Sorry, let me just read. Need BOS for new highs, mean body break, sorry. For break of structure, body breaks. For change of character, weak break. So there was a break of the last structural high point, which has been broken by a body closer, as you can see. So this is a real structural breaking point. Okay, 5-minute chart. What can we expect on the 5-minute chart? We can expect a retracement after the new break of structure. So we can expect some sort of retracement here at this region, 5-minute change of character to the downside, reaction on that 5-minute supply zone, 1-minute order flow down to this demand zone or down to this demand zone. After the demand tap, after either of this demand tap, or this demand tap, we can expect a 1-minute change of character on these demand zones and continuation of the overall bullish order flow to the upside. We just need a 1-minute change of character on these specific demand zones for the continuation of the bullish order flow. But you'll still be able to trade the actual short counter trend movements to the downside down to these demand areas. If price changes character here at some region and reacts on that 5-minute character changing supply zone and changes character on the 1-minute chart too, you'll be able to ride the expectation short order flow down to these demand regions. But just remember that all of the short trends, all the short movements at this region will be considered as counter trend movements. All of the bullish movements, all of the upside movements will be considered as main trend movements. Okay. Sorry. Okay. Actually, let me just check the upcoming high impact news for the day. And as you can see, 30 minutes before New York opens, after New York opens, there will be 2 high impact news. And actually, there will be lots of high impact news today. But in New York session, there will be only 30 minutes after New York opens. So 30 minutes after New York opens, there will be 2 high impact news. And all of these news will be in the evening. So yeah, I would recommend you not to trade in the first 30 minutes of New York session, just wait for these news to hit in, wait for these news to actually show their hands, show their directions. And after the storm has been calmed down, you can just open a position. Let me just mark some more demand zones out at this region. Actually, this is the last recent valuable 50-minute demand zone. This is the next valuable demand zone. So we have 3 current demand zones at this region. Let me just switch to the 1-minute chart, and let's see what can we expect from the 1-minute chart price action. How can we identify liquidity sweep or change of character? It's in the video course. Have you seen the video course yet? It's in the video course, literally. Okay, what can we expect from the 1-minute chart? We can expect the tap of this zone first, and if there will be a mitigation of this 50-minute zone, we can expect a 1-minute change of character to the upside, or we can expect a 1-minute break to the downside. If the 1-minute change of character happens to the upside, we are able to ride the continuation order flow, the continuation bullish expectation order flow to the upside with the full criteria entry, with the perfect criteria entry. So let's say price changes character here to the upside, creates a liquidity for a zone, demand zone tap, demand zone mitigation, continuation of the overall order flow to the upside. What can we do actually if price breaks below this zone? Let's say there's a reaction on this zone, and after this there's a break of this zone. We can just easily wait for a 1-minute zone creation. We can wait for a good criteria entry that was leading to a break of this actual 50-minute zone. And after the good criteria entry and the mitigation of this supply zone, we can just simply enter in short position and target this downward demand area. All you have to do is react on what price is actually giving you. So once again, if price reacts on this demand zone, creates a 1-minute change of character, you can write the expectation long order flow. If price reacts on this demand zone and actually breaks below this zone, you'll be able to write the expectation short order flow down to this demand area, this deeper demand area. And the same goes on for the downward demand areas. If price creates a change of character here, you'll be able to write the expectation long order flow. If price breaks below this zone, you'll be able to write the expectation short order flow to the extreme flip zone, which is down here. So basically that's the plan. That's the plan for today. But I believe the short continuation for this zone has a higher probability because price is actually in a premium region at this point, and it's the real top of the 15-minute leg. So this is the 15-minute leg. Let me just zoom out. This is the 15-minute leg, right? This is the 15-minute bullish leg, and this demand zone is just at the premium, at the top area of this 15-minute leg. So we need a deeper mitigation of the demand zone. So I believe this demand zone will be broken and the downward demand areas will be tabbed, and we can expect a good reaction on either of this zone or either of this zone. Okay.
Marcel, can I ask a quick question?
Of course.
We need a 1-minute body break, right? Or a 15-minute body break?
For this 15-minute zone?
Yes, sir.
We need a 1-minute body break.
Okay.
Because 1-minute time frame confers the 15-minute time frame. This is a 15-minute zone. Sorry, just mute yourself because your microphone is. Thank you. Thank you. So this is a 15-minute zone. Which time frame confirms the 15-minute zone? The 1-minute, right? So on the 15-minute zone, we need a 1-minute confirmation. But if price breaks below this zone on the 15-minute chart, and let's say creates a clear 15-minute supply zone that was leading to a break of this demand zone, price has a higher chance to levitate back up to this supply zone, create a 1-minute change of character and continue the movement. But if there's a clear break and clear entry criteria in the 1-minute chart, for example, a double tap entry, break of structure to the downside, you'll be able to write the expectation order flow based on that perfect criteria. But yeah, answering to your question, 1-minute change of character or 1-minute break of this zone will be perfectly enough. But body break of this zone. Which premium leg? This is a 15-minute leg. Or you can consider this as a 15-minute leg. Let's read some 15-minute leg, but this is the whole 15-minute leg. And this is on the upper area of this whole leg. So price has a greater chance to break below this zone and mitigate some downward demand areas than just reverse on this zone. So that's why I'm expecting the break of this actual demand zone. Okay, guys. Have you got any question about today's session, about today's price action? How you see lunchtime rip zone lunchtime ribs, I'm sorry, during the week until now. Actually,
hello?
sorry, mate. Actually, I couldn't identify the lunchtime zones yet because it's moving randomly. I can't see a pattern in it yet, but I will update you guys. For now, let's just stick to the 1 hour before New York session. That will be our lunchtime zone, and I will update you with the actual calculations. Yo, okay?
Marcel,
Yes, mate.
what price basically? So right here. 1 second. Isn't there a 4 hour zone that it tapped into?
That's a 4 hour zone, which has been mitigated several times already.
Yeah, okay.
And there's no clear 15-minute zone inside of this 4 hour zone. Expect
Yeah.
this one, as you can see, but this one has been mitigated already. And there's no 1 minute clear zone inside of this 15-minute zone. So we can consider this as a mitigation and this as a break of structure to the upside. And as I said, this zone will be broken. Please show 4 hour zones again. Sorry, but no. If you're late, if you was late, you'll be able to watch the recording.
Yeah,
There's a
hello?
file. Hey, mate.
Yeah, I have a question, a random question actually, because I remember asking you Instagram yesterday about because based on what I've watched, I mean, I started watching the back testing videos because I was asking that what do you do when because I only wait for like maybe the 4 hours and wait for price to tap into 4 hours and look for confirmation. So how do you know like when price is changing towards an opposite direction? How do you trade like within the 15 minutes?
I just, sorry. I understand it, but I just explained it 5 minutes earlier. So let's say there's a 4 hour zone down here.
Yeah.
If you're only trading based on the 4 hour zone reactions, you will have to wait for the tap of this zone and only trade after the tap of this zone. But I just explained it 5 minutes earlier. There's plenty of room between this high and this 4 hour zone to be traded. As you can see, there are several 15-minute zones, and I replied to you on Instagram that wait for the 15-minute zone reactions, react on these zones or break off these zones. You could trade based on the 15-minute zones. As I told you 5 minutes earlier, if price reacts on this zone, creates a change of character, you'll be able to trade the upside long order flow. If price breaks below this demand zone, you'll be able to trade the short continuations down to this demand zone. If this zone holds, creates a 1 minute change of character, go long. If this zone breaks, creates a break of this zone, you'll be able to ride the expectation short order flow down to this zone. So there's plenty of room between this high and this demand zone to trade.
To the 4 hour demand zone. Thank you very much, Marcel.
You're welcome, mate. So just basically simply wait for the reaction. Simply wait for the reaction on the 15-minute zones. If you're waiting for a reaction on the 15-minute zone, that will be easy to trade. That will be pretty easy to trade.
All right. Marcel, what part of Hungary are you in?
I live in Page.
Oh, I'm in Debrecen.
Nice, mate. We are far away from each other.
Yeah, we're far away from each other.
Okay. Let me just read the other questions to you. How long is the zone valid and unvalid after 50% mitigation? Yeah, basically, if price mitigates the 50% of the zone, that will become invalid. But it depends on the zone. So, for example, if there's a 15-minute zone, let's say this is a 15-minute zone, there's a zone inside of this zone on the upper area, and there's a valid zone on the downer area too. So this is the overall zone is the 15-minute zone. Inside of this 15-minute zone, there are 2 1-minute zones. Price mitigates the upper area, but after it breaks and mitigates the downer area. But at the first mitigation, it couldn't mitigate the 50%. It just mitigated maybe 20% of this zone. So it wasn't enough for price. It goes deeper to the downer area, and after it creates a change of character. It depends how many zones you have in a zone, in a higher time frame zone. But for a 1-minute zone, if price mitigates a 1-minute zone, a 50% mitigation is perfectly enough. How long is you already asked this? I have to go, but thank you for the great session. You're very welcome. How long is the zone valid? Unvalid after 50% mitigation. When is an opposite side zone break? Who is in control? Body weak or weak break? It depends on the liquidity. You have to combine this knowledge by the liquidity. If there's a liquidity below the zone, so for example, there's a zone, and below this zone, let me just write it with zone example. So below this zone, there's, for example, bunch of liquidity, triple bottom sitting, and from this movement, price has created a dimension movement. So this is a 15-minute zone, and let's say price creates a 15-minute liquidity sweeping with this movement. By the liquidity, by the fact that knowing there's a liquidity under this demand zone, and price has created a liquidity sweeping week just to sweep this liquidity from below the demand zone, that won't be a break. That will be just a liquidity sweep, but that's exactly in the video course. If we are looking for a sell setup, is it already change of character? You mean on the 1-minute chart? I would rather recommend you to wait for the top of this actual 15-minute zone before taking any actions. And as I said, there will be high impact news in 30 minutes. So just skip trading at this region. I mean, this region until the high impact news hit him. So basically just wait for this zone to be tapped and wait for the high impact news. I get confused by the substructure most. Yeah, it's actually pretty hard to identify the substructure. All you have to do is train your eyes. It can be taught. It can be really taught, because to identify the substructure, you have to train your eyes a lot. You have to backtest a lot. Okay, so just do yourself a favor. Go on the 4-hour chart, go on the 15-minute chart, and just combine the time frames and look at the sub and main structure. You can only train this by actually backtesting. You can only train your eyes. I mean, you can only learn this by training your eyes to identify the substructure. And by time, by muscle memory, because all of these movements will be inside of your muscle memory, inside of your eyes muscle memory, can be learned by the actual backtesting. What do we do if price is coming from a 5-minute unmitigated supply zone, but we are in the 15-minute demand zone? Does this supply? Okay. So you basically just answer your own question. There's a demand zone, there's a supply zone. You say the price is coming from unmitigated supply zone. So it's coming from a supply zone. So at this region, supply is in control, but taps into a demand zone. So demand will be in control if it reacts on it. Supply zone, sorry, let me just change the color, it's confusing. So supply zone, price is coming down, mitigates the demand zone, change of character, demand fully in control, you can trade up to this supply zone.
I have another question, Marcel. Same thing.
Yes.
What if the supply is a 4? No, go back, keep that one. What if the supply is a 4-hour and the demand is, say, a 15-minute? What is the possible scenario that could happen there?
Okay, you're saying that this is the 4-hour zone. Price mitigates the 4-hour zone.
Yeah.
Let's say creates a change of character on the 15-minute chart and creates an order flow down to this demand zone, down to this 15-minute demand zone, right?
Yeah.
All you have to do is wait for a reaction. All you have to do is know the overall higher time frame trend. So for example, if the trend is short, the trend is bearish on the 4-hour, on the higher time frame, you can expect the break of this zone actually.
Okay,
if there's a high impact reaction, if there's a high volume reaction on this demand zone, so let's say price aggressively changes character on several places and creates a good entry criteria, you'll be able to trade the actual long side of the market. But all about reaction. You don't have to predict shit on this zone. All you have to do is wait for a reaction.
Okay.
If there's a break, you go short. If there's a change of character, you go long. Basically, it's based on this.
Okay, sorry, Marcel, I have a question because I remember you were saying you previously talked about trading off 15-minute zones and waiting for 1-minute reactions.
Okay.
Do you wait for the change of character on the 15 when like price taps into your 15-minute zone? Do you wait for change of character of 15 minutes or you do change of character of 1 minute?
I just explained it again 10 minutes earlier.
Sorry, I left and I came, I had to come back.
Okay, so just watch the recording because on the beginning of the recording, I explained everything about the correlated timeframes, about the confirmation timeframes. So basically every single timeframe confirms each other's. So if there's a daily zone, 4-hour zone confirms that zone. If there's a 4-hour zone, a 50-minute zone confirms that zone. If there's a 50-minute zone, a 1 minute zone 1 minute chart confirms that zone. So just watch the
Alright.
recording.
All right. Thank you. No problem. That's my
Okay, perfect. So guys, that's enough for today for the live session. I will just send the markups for you real quick after this session. Have you got any more question, or it's all clear? We can continue on.
Thanks. It was great.
Thank you.
Okay, guys, just stay for 1 more minute, please. 1 more minute. There will be a session on this Sunday, and I just want to ask, what kind of session do you want it to be? A backtesting session? I mean, trade recap videos, or price action overview, or what do you want? Lots of you are saying backtesting.
I'm backtesting.
Okay, so there will be a backtesting session on Sunday. That has been decided. Perfect. So guys, okay, I will send you the markups in minutes. I will just make them. Have a beautiful rest of your day, and thank you for being here. I hope you like this session. I hope it was helpful for you to understand the actual higher time frame intentions and actual lower time frame intentions. So yeah, take care, guys. See you soon. Thank you for being here. Recording is on. Welcome, everyone. This will be today's bonus session, bonus live webinar. Just a question, guys. What if I didn't create the recap video yesterday? So what if I just break down the actual trade from yesterday in this live session? Would that be good? A live trade recap video?
Yes, of course.
Oh, yes.
Okay. Perfect. So actually, I've broken down every single higher time frame price intention at this region in yesterday's live session. So I believe we don't have to talk about these higher time frame intentions, because as I said, I was expecting a break of this actual 4-hour supply zone. Sorry. So this was a 4-hour supply zone at this region. And I was expecting a break of this 4-hour supply zone and the continuation of the bull run to the upside, which has happened actually today, as you can see. But we will talk about this later in the higher time frame intentions topic. So let's just break down the actual trade in few minutes. So, sorry, let me just go back to the 15-minute chart and mark all of the zones out first. Price was at this region yesterday, and we had few valuable demand zones at this region. These 3 demand zones at this region. Actually, there was another demand zone at this region, 15-minute demand zone, but I didn't mark it. So, as I sent you in the market updates and in the live session, I was expecting a tap of this extreme demand zone down here, or I was expecting a tap of this flip zone down here. I was expecting a reaction on either of this demand zone or either of this demand zone. And why did I say that only on these 2 demand zones and not the 2 ones upper these? Why did I say that I was expecting a reaction on this demand zone or this demand zone? Can you just answer me? Why was I expecting a reaction on this demand zone and not on this demand zone or this demand zone? There was liquidity here too. Here's liquidity, here's liquidity.
It was in lunchtime, I think.
Exactly. This was lunchtime, this was lunchtime. This zone, as you can see, this inefficient push to the upside is formed in lunchtime. In the new lunchtime zone, because daylight saving has been kicked in, as you may know. And this was the new lunchtime zone, and this was the other new lunchtime zone. And the only not lunchtime zone at this region was this one down here. And of course, the overall flip zone. Down here, this was the origin flip zone that has flipped the overall flip zone. Because, okay, let me just zoom out and show you that real quick. Here was this demand zone. This supply zone has flipped this demand zone. As you can see, it's a perfect supply to demand flip, reaction, flip, reaction, demand to supply, flip, flip. So flip, flip. And this demand zone here flip the overall supply zone that has flipped the demand zone. So this is a really, really valuable flip zone. Okay, but above this flip zone, we had several demand zones that has caused the inefficient push and break of structure to the upside at this region, as you can see. So I was expecting a reaction on this demand zone or this demand zone, because the higher demand zones, so this one and this one, was in just the premium range. As you can see, it's too high to expect a reaction on. If price reverses somewhere around here, price will tap into some deeper demand areas, for example, this one or this one, and it will reverse on these deeper demand areas and won't just reverse on these upper areas, because it has to collect fuel from the downside liquidity zones. It has to collect more orders from these demand zones, and it won't be able to reverse on these zones upside. Okay. And one more confluence was, of course, the lunchtime zone. So I was expected a reaction on this demand zone. And as I sent you, if there will be a change of character on this zone and there will be a perfect entry criteria setup, as I told you in the live session, I will enter in this trade regardless. And as you can see, a perfect entry criteria setup has formed because price has tapped into this demand zone, tapped this overall demand zone, mitigated more than a 50% of this zone. So it was a deep mitigation, perfect criteria, deep mitigation, tick. Okay, after this, there was a huge reaction, as you can see, tap and immediate V-shape recovery to the upside. Second criteria is tick, perfect. So let me just track the criteria with a text. Deep mitigation on the first tap, second V-shape recovery, third criteria. What's the third criteria at this region? I'm just asking you.
Change of character.
Change of character, exactly.
Liquidity build.
Fourth, before the liquidity building up, what's the fourth criteria before liquidity has been built up?
Inefficient push.
Exactly, inefficiency. As you can see, okay, I will just show it later after the criteria. What's the fifth criteria?
Liquidity creation.
Exactly. What's the sixth criteria? Someone? The sixth criteria is the liquidity sweep. Liquidity has been swept into this zone. As you can see at this region, there was a liquidity sweep. And we can say that the seventh criteria is the inefficiency fill up. Because as you can see, the higher time frame inefficiency at this region has been filled up with this movement, right? So basically every single criteria is with the higher time frame flip was with the higher time frame break of structure, the higher time frame mitigation. So this was a mitigation of the higher time frame zone, deep mitigation of the zone, V-shape recovery on the zone after the immediate tap of this zone, inefficiency after the mitigation of this zone, change of character here and here to the upside, liquidity creation for the zone here, perfect liquidity creation, liquidity sweep to the zone, here's a liquidity trend line swept, inefficiency fill up on the higher time frame. This was inefficiency on the higher time frame. Actually, this was the only inefficient region, but price has filled this inefficiency up, as you can see with this movement. And the inefficiency fill up has been started from this supply zone up here. So this supply zone, from this supply zone, price has filled the inefficiency with inefficient push. So basically, this is a perfect criteria trade for me to enter. Okay, let's just talk about the zone selection, because I saw that lots of you guys were confused about the zone selection and why did we actually choose this zone instead of the above one. Okay, this is actually pretty reasonable. Let me just zoom in and you will see it better. So you asked me that why did I choose this downside candle instead of this candle? Because on the downside candle, as you can see, there's no inefficiency. On the downside candle, here's no inefficiency. Just a maybe tiny one, sorry. So just a tiny inefficiency on that candle, as you can see, really tiny or literally no inefficiency. So why did we choose that candle actually instead of the above one that has caused the overall inefficiency? Can you just answer this question? So why did we choose this downside candle instead of this candle? Liquidity above. Sorry guys, just a minute. Okay. Sorry. I'm just a little cold. So why did we choose this candle? It's because there was liquidity above this candle. And as you can see, if I mark this zone out, and we just remove this zone. If I mark the upper zone out, so this one, this zone perfectly lines up with the liquidity. So basically, if you open a position on this zone, you open a position inside of a liquidity pool. So as you can see, if I did set an order limit on this candle, it was basically inside of the equal lows. It was lined up with the equal lows, perfectly lined up with these, all of these equal lows. And these equal lows will be swept out, right? And which zone could hold the actual liquidity sweep? This zone could easily hold the liquidity sweep because there's enough room between this zone and between the liquidity. And if I set an order within the 50% of this candle, there will be more than enough room to actually stop the price and reverse the price at the 50% of this candle after the liquidity has been swept. So if you see something like this, you can't really open a position inside of a liquidity pool, even though this is the correct zone in this case. This is the correct zone because this zone has created the inefficiency here. This zone has created no inefficiency. This zone created inefficiency, but it's inside of the liquidity pool. Liquidity will be stronger than inefficiency. Liquidity is always stronger than inefficiency because if there's liquidity, you can't open a position inside of a liquidity pool because you'll be stepped out. And that's what happened, as you can see. If you open a position here, you get stepped out by this movement. And this zone, the 50% of this zone, the downward area, could easily reverse price to the upside. As you can see, perfect 50% tap, reversal to the upside, TP hit. This was the last candle before the movement. Yeah, that was the answer. Yeah. So actually, there was two change of characters at this region. And the actual change of character has been caused by this candle or this candle. And as you can see, we have a higher time frame. I mean, not higher time frame, higher region supply flip also here. This was a flip, right? This is a perfect flip. Price has reacted on this extreme supply zone, reaction on this zone, reversal. And from this candle, price has swept the liquidity again to the upside, right? But before this flip zone has happened, let me just mark this out. Before this flip zone has happened, there was another change of character, which could be hard to identify because it's an inside bar. As you can see, if I zoom in, there was a perfect inside bar. So this candle's high and this candle's low. Between this high and this low, there's a candle inside of this high and this low, right? So this candle's high is below above the last candle's high, and this candle's low is above than the last candle's low. So this is an inside bar. So every inside bar is a supply/demand zone, right? In this case, this is a supply zone because every inside bar is a supply/demand zone. On the downside, on the short side, that will be a supply zone. So this is a perfect inside supply zone. So let me just remove these lines. So this supply zone has been changed character here from this candle or this candle, right? So there was a change of character on this supply zone. So this was the extreme of the whole movement, and not this is the extreme of the whole movement because this is a flip zone. This flipped the supply zone. But the extreme of the whole movement was this candle down here that has caused the overall change of character, that has caused the first change of character to the upside. So the extreme zones, I mean, not the extremes, because that's not really true. The zones that causing the original change of character, causing the first change of character will be always stronger than the other zones. So basically in this region, this is, in this case, in this scenario, this is the extreme of the zone. This is the extreme of the whole movement, right? This is the extreme zone because it caused the extreme, it caused the first inefficient push to the upside and the reversal, but it also caused the first change of character to the upside. And as I said, every single zone that has caused the first change of character and has caused the first shift in the order flow will be always stronger than the decisional ones. So in this case, this is the extreme, this is the decisional one. That's another confluence that the decisional one, so this one is inside of a liquidity pool, so you can't really open a position on this zone. Because as you can see, from this candle, price has flipped the zone, flipped this supply zone up here. Inefficient push started from this candle, perfect demand zone, but this candle is also inside of a liquidity pool. As you can see, you can't open a position on this zone because you'll be swept out and you'll become part of the liquidity. As you can see, lots of people has opened positions on this specific demand zone. You can tell it by the price action because, as you can see, sorry, I didn't mean to delete this. I meant to delete this. So on this candle, there were lots of orders sitting, as you can see, because immediately when price stepped into this zone, it had a reversal, and it was struggling to break below. It created more liquidity. It was struggling to break below. It was struggling to break above. So lots of sellers and buyers were fighting at this region. And yes, that's the end game of this supply demand zone. Liquidity, sweep of the liquidity, more liquidity built up, picked up the liquidity, tapped into the 50%. Buyers has overcame sellers, perfect entry, TP. So yeah, once again, every single origin of the change of character will be stronger than any other zones. If there's liquidity above, that's one more confluence. Is it understandable?
Yes.
Yes.
Okay, perfect. Would you like to ask any other question about this trade?
May I just one quick, because if you didn't refine that launch time zone on 1 minute, actually the price is coming from 5 minute supply.
Yeah,
Is it the problem, or we can count it as a I don't know.
let me just, I know I understand the question. Let me go back here. Remove this one from here. So basically, if you see something like this, if you see something like this,
Yes.
you can count it as a 5 minute mitigation of this supply zone. But inside of this supply zone, there's a 1 minute supply zone that has not been mitigated yet, right? And this supply zone has been mitigated by only a weak and immediate reversal. So basically, it was maybe a 20 or 15% mitigation of this whole zone. So I didn't really count it as a mitigation. I was expecting the mitigation of this upper supply zone here. So yeah, if you're insecure about it, you can wait for a confirmation entry on this zone. If you think that it's coming from unmitigated 5 minute supply zone, you can just always wait for a confirmation entry. For me, it was a full perfect criteria setup, and all of these criteria that has been listed out above here, I did remove them. Let me just take it back. Sorry. So all of these criteria that has been listed here were just stronger confluences for me than this little supply tab, this little supply mitigation. So these criteria for me were stronger than this supply mitigation. So I was sure about this trade. And also that was one more confluence that price didn't actually tap this upper 1 minute supply zone. Make sense? Okay.
Of course. Thanks.
Okay. Any other question about this trade? And what about the weak low idea on the 1 minute? I don't really track the weak lows on the 1 minute. And actually, yeah, this was you could call this a strong high, but if you take a look at the 5 minute or the 15 minute chart, let me just go down here. If you take a look at the 5 minute or 15 minute chart, this is a strong high. Of course, price didn't take the strong high out, but we don't need a 50 minute/5 minute change of character after a 15 minute demand mitigation. This is the first rule. After a 15 minute demand mitigation, we need a 1 minute change of character and perfect criteria setup. If price changes character here and changes character on the 5 minute chart too, that will be one more confluence, that will be one more confirmation for the longs. But actually 1 minute change of character after a 15 minute demand mitigation is perfectly enough. So we don't have to wait every single time for a 5 minute change of character after a 15 minute zone mitigation. 15 minute zone mitigation, double change of character on the 1 minute chart, right? Because there, sorry, here, change of character, double change of character, that's perfectly enough confirmation to go along. This would have been the best confirmation, of course, but it doesn't really happen very often. Because in that few people got stuck with weak, strong, low, didn't take the trade. Yeah, basically you're overcomplicating these. It's important to track your weak highs and strong highs and weak lows and strong lows out. It's really, really important, but the basic rules are more important. So the basic rule is that 15 minute zone mitigation, double change of character, perfect criteria, entry. That's all. And there was double change of character here. First change of character on this line, on the inside bar line, second change of character here. This is perfectly enough confirmation for me to go along. And of course, this liquidity building up here is one more perfect confirmation for me to go along. These strong low, strong highs breaks doesn't really happen very often. Because if it breaks, let's say it breaks, as you can see, with this movement, of course, this was a news movement. If it breaks, there will be a deeper pullback again, and you miss this overall movement to the upside. So there's always a good entry point on the 1 minute chart, and that's why we all need the 1 minute change of character instead of a 5 minute change of character. 1 minute zone, 15 minute zone, 1 minute change of character. You want to be in the extreme of the move. You want to catch the extreme of the move. Okay? Makes sense?
Marcel, I have a question too.
Okay, I'm here.
I took a continuation trade
yesterday, and I was going to ask if it was valid.
Which one?
Here I took it as a flip zone because it came from this mitigating this zone. Here,
Yeah.
I marked this zone and I bought there with the target in here in the same place that you put it. Was it valid or was too risky?
For me, I would consider it too risky, but if it fits your criteria, if it fits in your plan, then you can take it. Of course, that's a flip zone. But for continuation flip zones, I need liquidity creation too. So there was no liquidity creation. So for me, that would have been risky. So I wouldn't take this trade, but I'm happy for you that you take it. Because
Okay,
in my
thanks.
plan, for my criteria, for the continuations, I need liquidity creation. Without a liquidity creation, I'm not entering in a continuation setup. But as you can see, this setup worked out perfectly, right?
Right, yes, it did.
Hey man,
Hey, bro.
you can mark the trade that I took yesterday. Just above the demand, the little demand zone, just above your entry point. Yes. And look at that. There is the liquidity above.
Of course, there is a liquidity.
Yeah. So that was also a good zone to enter.
Yeah, and why was it actually a good zone? Because it changed character to the upside. So here was actually a downside movement. So change of character here to the upside, change of character here to the upside, change of character to the downside with this movement here. Basically, this was the last demand zone. So this is not a real change of character. This is a sub change of character to the downside that is building up a liquidity for the downer zone. So, but technically, this was a change of character here to the downside and price exchange character up to the upside again. This was the last zone that has caused the last break of structure here to the downside. Reaction on this supply zone, as you can see, here's a reaction, and from this demand zone, prices actually flipped that zone, and there was a change of character to the upside, liquidity building up for that zone, entry point, entry opportunity. And Doranko Jones took this trade.
Yes, exactly.
Why did you close it at 1-10 risk reward ratio? This is a perfect trade.
Because I
You
was happy
pussy.
with my profits.
You pussy.
I was happy with my profits.
Never be
1 to
happy
10.
with your profits.
Yes.
Always test your limits. This could have been a pretty good entry target. I mean, a target point here. 1-13 risk reward ratio, and this was the 1-10 risk reward ratio. Let me just find the good. Yeah, this was the 1-10 risk reward ratio here. Yeah, this was a pretty good setup. But after this high impact movement to the upside, I would consider this risky to enter here at this position. But yeah, it worked out perfectly.
I had the balls, you know.
You had the balls, man. Always have the balls to trade. And see, guys, this is really, really important. John had the balls to enter in position because he was sure about his analysis, right? He was sure about his analysis because there was a change of character to the upside. There was a flip zone. This was a flip zone. There was liquidity above the flips. Yeah, above the flip zone, there was an inefficiency. There was a continuation of the overall bullish trend. There was inefficiency too. There was liquidity. There was anything needs to be a valid setup. So John had the balls. John did set an order limit on this zone, booked 10% on this trade. So yeah, the most important thing in trading is to follow your plan. First of all, create a plan. First of all, create your own plan. And after you've created a plan, just follow that plan. Because without a plan, you'll be lost. As I said in the previous live sessions, I said this several times, you have to build a plan for each day, right? We will build a plan for today too later, but you have to build a plan for each day. If you have a plan, if you're trading with a plan, if you have a plan for a whole day, then you'll know what you can expect from that day. And if the other thing happens than you're actually expecting, you can always change your plan. You can create a new plan. For example, I was expecting a tap of this zone down here, and I was expecting a change of character on this zone. That was my original plan, right? I was waiting for this the whole day. But let's say price just taps this zone and creates a flip zone to the downside and flips this overall demand zone to the downside. My plan changes and I build a new plan for the new scenarios. I build a scenario that if this demand zone is being flipped, I will wait for a liquidity creation, I will wait for a supply tap, I will wait for a clear supply, I will wait for a confirmation entry, and I will wait for a new target, which could be this one. I build a new plan. You have to adapt, but you have to have an original plan. Without a plan, you'll be fucking lost. Sorry for swearing, but you'll be lost. Actually, that's the quote. Plan the trade and trade the plan. Right? Plan the trade and trade the plan. This is really, really important. And that's why you have to build a plan. And as you can see, both me and John had a plan here. I had a whole plan building up for this scenario. I built up a whole plan in the live session for this scenario. So it was easy for me to pull the trigger because I knew that this was going to happen. And I was waiting for this actual setup. And it was so fucking easy for me to pull the trigger at this region because I knew that this setup was planned by me. And I was trading my plan. I was trading the plan that I was actually planned, right? And John did the same. John planned another setup here. He was trading his plan. It was so fucking easy to pull his trigger because he was expecting for this reaction. He was expecting for this scenario. And that's why you have to always build a plan and not just randomly open positions if you see a supply tap and 1 minute change of character, because you'll be swept out. If you open a position on every single change of character that you see on chart, for example, oh my God, price exchange character here, let me just open quick position on this region, you'll be swept out. You need a higher time frame plan. That's why I'm always saying that see the higher time frame perspective, combine the time frames together, build a higher time frame plan and trade the 1 minute based on that higher time frame plan, because the 1 minute in itself will be worthless, will be useless. If you're only trading on the 1 minute chart, that will be useless. You have to build a higher time frame narrative. You have to build the higher time frame narrative and trade the actual higher time frame order flow. If you're fighting against the order flow, you'll be swept out. Actually, the 1 minute chart is just a noise. The whole 1 minute chart is a noise. Just look at this shit. This is a noise. This is a whole mess. This is a noise that you can't really follow if you don't know the higher time frame perspective. If you zoom out and see the actual higher time frame perspective and build up a plan for that higher time frame perspective, you'll know that when can you enter in a lower time frame, when can you actually enter on the 1 minute chart. For example, that was the plan. I had this demand zone marked out. I was waiting for a reaction on the 1 minute chart. I wasn't even looking at the charts until this tap has happened, because this 1 minute chart is just a whole mess. If you open a position on every single random 1 minute change of character, for example, oh my God, here was a 1 minute change of character at this region, because as you can see, the wick is higher than the supply zone's last wick. There was a 1 minute change of character. Oh my God, I will enter a position in here. You'll be swept out because you don't know the higher time frame intentions. You have to wait for your higher time frame plan and build the higher time frame plan before every single session, before you start trading in every single session. This is really, really important, guys. I'm telling you. Just please do this. And also use the criteria tracker too. Use the training plan planner, use the criteria tracker, use the resources. That's why we've created these resources, because it's important to use. Okay. And sorry for this longest monologue, but it was so important to clear this topic.
Hey, Master, can I ask a quick question?
Of course, mate.
So you were expecting a bullish trend yesterday while you were in the webinar, right?
Yeah.
But when you told that it's going to mitigate the deeper zone, demand zone, it already have changed character, right?
Yeah, it has.
So,
but it hasn't. Actually, it has, but it hasn't. Why am I saying that it changed character and not changed character also? Because sometimes the change of character is just a liquidity sweep. That's why I said you have to know the overall higher time frame trend. Let's say here's a trend. Here's an upside trend. This is the higher time frame trend. Let's say the 15-minute trend. Let's say price creates something like this. Break of structure to the upside again. There will be a demand zone that has crossed the break of structure here to the upside. There will be this demand zone that has caused the break of structure to the upside. And yeah, of course, if this demand zone here breaks, let me just change the color. So if this demand zone here breaks, that will be a 15-minute change of character to the downside, right? So you can technically you can consider this as a 15-minute change of character, but that's not a change of character in reality. That's not a change of character in the perspective of trading, because this is just a liquidity sweep to the downside. This is just a liquidity sweep for a valuable demand zone that is below the liquidity. That's why I say that you have to value your zones. You have to value the actual zones that you're planning to trade on, and you have to know the higher time frame intentions. You have to know the higher time frame directions, because if you value your zones, you will know that this zone is pretty valid. I mean, this zone is pretty valid because it has inefficiency, break of structure, liquidity creation. Let's say it slaps on liquidity, and this zone is actually part of the liquidity. It created inefficiency, created break of structure, but there's no liquidity for this zone. this zone is actually part of the liquidity. So that's why you have to track your criteria for your zones. And that's why you have to know the overall higher time frame direction. Because of course, if price breaks below this demand zone, that will be technically a 15-minute change of character to the downside. But this is just a liquidity collection in the perspective of trading. And this demand zone down here will be tapped, 1-minute change of character will be happen, and the trend will be continued. And that's exactly what happened yesterday.
Oh, it's something I always remember, Marcel. You always say it, and it's been stuck in my head since. Don't predict, react. That's it.
That's it. It sounds easy as fuck, right? But actually, it not just sounds easy. It's actually easy. It's easy. Why would you predict something when you can react on what price is actually giving you? Why would you open a position, a risk entry on this demand zone, on this decisional demand zone, when you can actually wait for a reaction inside of this zone and wait for a break of this zone, wait for a reaction on this zone, wait for a break of this zone? You can simply wait for reactions on variable 15-minute zones and trade on the 1-minute chart based on those reactions on 15-minute chart. Just remember this, guys, 15-minute chart will be always stronger than 1-minute chart. 1-minute chart is a mess. This is a mess. This is a noise for a 15-minute chart. But if you know the 15-minute chart, know the overall intentions of the higher time frame, the 15-minute chart or the 4-hour chart, you'll be able to simply trade on the 1-minute chart based on the overall higher time frame 15-minute chart. Because without the 15-minute chart, 1-minute chart was in noise. Without the 1-minute chart, 15-minute will be just a directional chart. You need to combine these charts together. Okay, guys. Did anyone understand this?
Shiping, can you hear me?
Yes.
Yes, Marcel, I just wanted to ask to be sure about something. When you're looking for change of character, is it the wick that closes above the supply or demand zone, or it has to close with a body?
For break of structure, you need a body. For wick, you need for change of character, you need a wick.
All right, thank you.
Change of character, wick. Break of structure, body.
All right, thank you.
Welcome. So, yeah. Sorry?
If there were no liquidity, you won't enter in the trade?
I didn't understand this, mate. Can you just repeat, please?
If there were no liquidity, you won't enter in the trade. Is LQ is more important?
Can you just type it down, please? Because your microphone is actually not the best quality and I can't hear what you're saying.
Yeah, I will type it.
Okay, thank you. Yeah, change of character with spike. But that actually depends on the liquidity too. It depends on loads of circumstances.
Can I use change of character for body?
Of course you can. That's an extra confirmation.
Thank you.
Okay, guys. John, are you here?
Yes, mate.
Keep them with company. I will go and grab a cup of water, please.
Okay. Okay, guys. Everything was correct or fine. If you have any questions, just ask, please.
I have a sale yesterday. It was correct or not?
You have a sale yesterday?
Yeah.
Yes.
On the clip.
From
There.
where?
There.
You have a sale from that
Yeah.
place. Yes, and it took stop loss immediately. Yes.
No. I
Oh,
put a
sorry.
stop loss
I can
here.
see. Yes, from that supply. Yeah.
Yeah.
Was it a loss or was it a break even?
Break even.
Break even. So it's okay. It's good. It's reacted to a supply zone, changed character. After that, almost 2 times, but it just created liquidity for the demand zone that I executed from my long trade.
Okay, thanks.
You're welcome.
And have another sell after that, but it break even again.
From where?
You should move a little bit forward the chart.
Sorry, I can't move because it's a flipping chart.
Wait. I'm here. You can talk, but I can't remove my sharing because the recording would have been stopped, I believe. If I close my sharing, will the recording be stopped?
No, but you have to move just to start, just the chart a little bit forward.
Just like this?
Yes.
A
As
little
I just
more.
like this.
Yes, a little more.
Okay.
John, if you click on view options, you can request control, so you can
Okay,
actually
okay.
control Marcel's chart.
Oh, okay, John, request to control.
Okay, I see this as a change
Okay.
of character in 5 minutes. After that, this was my 5-minute supply,
Yes.
something about that. And change of character here, liquidity building, and I sell from these again.
Yes.
I sell from this. When
Okay,
it broke
sorry,
this,
sorry.
okay,
Yes.
okay.
You sell from that.
When,
Okay.
yeah. When it broke this structure, I put my stop to break even. He hit my break even and then go.
Oh, yeah. You should wait for another change of character because that was a really small change, you know.
Yeah, fear.
It was exactly 2 candles, so
Yes.
that's not that much. Real change of character would happen right here, and after that you could put easily to break even, and you would be in the trade.
Okay, but it was correct trade, yeah.
Yes, it was correct, absolutely.
Thanks.
And actually, sorry.
Sorry.
After these prices, went down to the actual flip zone down here.
Yes, it would be a really good short trade. Sorry.
Yeah. So you entered here after this change of character to the downside, and you've been tagged but break even.
Yeah.
That's perfectly fine. At least you know that your analysis was good and your direction was good.
Thanks.
Right? Marcel, you can, I mean, confirmation entry, but at that point where your provisor is right now, I just opened a risk trade because the previous one already gave a change of character.
So you opened also position here, or what do you mean?
On the left, to the left, there already happened a change of character, right?
You mean with this movement?
Yeah, with that big wick to the downwards and to the upward, and I opened a position on that yellow line, just you, the horizontal yellow line, just you on there.
Just map the structure. Just look at this. Low point, high point. New low point, new high point. And this was the, this was the last low point, this was the last high point. So basically, this wasn't a break of structure to the upside because it was just happened with the wick, right? So it can be a change of character to the downside. So I don't really know where did you open a position here. The only change of character has happened from this region and this region. I mean here.
The right there I opened a position.
So here was a first change of character because, so this was the last high point, this was the last low point here. Break of structure to the upside, change of character to the downside. Change of character has happened here from this region.
Yeah, there I opened a position.
And you opened it here?
I already opened on that. You mentioned one, that supply zone over there.
Okay. So you just simply risk entry here, right?
Yes.
That's perfect. That's perfect. If you're willing to take the risk, that's perfect. That's a perfect entry opportunity. But that's why I always say, if you're confident about your trade, if you're confident about the change of character and the direction, you can actually open a risk entry because there was a good criteria. There was a change of character to the downside with inefficient push. There was liquidity building up for this zone, this actual zone. Top of the zone risk entry would have been perfect here, but you could also wait for a change of character at here or here at this region. So risk entry and confirmation entry at this region was perfectly fine both. So yeah,
All right, Marcel, I was confused there. Which one was, where did the touch happen? Going down?
here,
Was it that long wick? Yeah.
this isn't the change of character. This is the last low point. So this is the change
Okay.
of character line.
Okay, okay.
Have you got any more questions, guys?
Nope.
No? If we are using confirmation tree and it didn't get tagged, when we should return. Basically, you should delete your order after the next recent break of structure to the downside, for example, here. So if you had an order limit right here, and there's a change of character or break of structure here to the downside again, you should delete this order, this original order at this region. Okay, so that's it for the trade recap and the questions. What about just doing a higher time frame analysis for the upcoming possibilities?
Yes, yes. Please do that.
Yeah, but in this case, John should have canceled it or not. You mean this one? No. He shouldn't, because this is the origin of the change of character. That's what I was actually explaining here. And there was liquidity for this zone too. So that's what I was explaining at the beginning of the session through 10 minutes maybe. Change of character, origin of the change of character, bullish order flow, liquidity building up for this zone. This zone will be liquidated, and this zone is good. This is a perfect criteria setup. Flipping Mayo briefly talk about time changes. Basically, I wrote an answer about this to the announcement channel, but New York opens 1 hour earlier than usual. So New York opens in 18 minutes from now, and the lunchtime is 1 hour earlier than usual too. So at this region, for example, in my time zone, you see the numbers down here. Lunchtime zone starts at 12, ends at 1. Here.
That's Hungarian time, right? 12 to 1, right?
Sorry?
The lunch times when you're calling out is for Hungary, right? 12 to 1.
Lunchtime in Hungary is to 12 to 1.
All right.
From 12 to 1. And from 1, New York opens and closes at, I mean, not closes, but the kill zone ends here at 4. This is the New York session. This is a New York kill zone. This is the changed time zone. The origin time zone was the 1 p.m. New York open to, sorry, not 1 p.m., 2 p.m. Here, 2 p.m. to 5 p.m. This was the original New York session, but the time zone has changed by the daylight savings. If it's making
just a trade, this live, can you just see and tell what's going on there?
Sorry?
Right now, I'm in a trade right now. In the live session, I mean, live charts. It's the same situation like the trade which I told before.
You mean you're in a trade right now?
Yeah.
Where?
Yeah. With that huge impulse to the downside, and again it went back to the upside. From there, it swept liquidity and changed character. And I ended on the change of character with the, I mean, liquidity on the downside.
You entered here somewhere.
No. Up.
Where?
There. There.
There?
Yeah, there I entered on the first candle, first downward candle.
This is liquidity. This will be liquidated because this is lunchtime. This is all lunchtime.
Lunchtime, okay.
So let's just make a higher time frame analysis. I will delete all of these stuff from here. Please, guys, mute yourselves. So we are on the 4-hour chart. And we were talking about this supply zone, this 4-hour supply zone at this region yesterday. And as I said in the live session, that this supply zone will be weak. And as you can see, this supply zone actually became weak. Because, as I said, all you have to do is track your criteria again for the zones. And we've talked about this several times yesterday. This zone had more criteria than this supply zone. So basically, this supply zone is unvaluable, which means it will become weak. And as you can see, price is actually body broke above this supply zone with this movement. So this supply zone proved to be weak. Where's the next supply region? We have a next supply 4-hour region here. This supply zone is the same. Maybe we can use the wick at this region. This supply zone is the same like this. It's the same just like this, right? Because it created nothing but inefficiency. There is no change of character here to the downside. On the 4-hour chart, there's no change of character. This zone has actually created only inefficiency to the downside with this movement. So this supply will be proven to be weak, and this supply will be proven to be liquidity because there's a liquidity line. As you can see, this is perfectly lined up with the liquidity. This supply zone will be liquidity again. So on the higher time frame, on the 4-hour chart, I'm still expecting the break of this supply zone too. I mean, on the 4-hour chart, that's not exactly a supply zone. On the 15-minute chart, it will be a supply zone, but I'm still expecting the break above of this supply zone, tap into this supply zone, and this will be your bias decider supply zone up here. This will be your bias decider 4-hour supply zone, because if price taps this supply zone, there will be several scenarios for this zone. We talked about this several times yesterday. So if price taps this zone, creates a change of character on the 15-minute, or bias will become bearish. And we can still expect the deeper demand mitigations at this region, break of this overall daily low point, break of this overall daily or weekly or monthly low point. But if price taps this zone, taps this overall 4-hour zone and breaks above this zone, creates a flip zone here, the overall bullish order flow, which is bullish in this case, this order flow is bullish in this case. I've explained this scenario in yesterday's live session. So if price creates a flip zone at this 4-hour supply zone, the bullish scenario will be continued, and you'll be able to write the actual bullish order flow, expectation order flow to the downside, and we can expect some higher supply mitigations and higher liquidity sweeps at this region. So yeah, this will be our bias decider supply zone. This will be our 4-hour bias decider supply zone. I'm 100% sure that this supply zone will be tapped, this liquidity will be swept, this supply will be broken. So yeah, I'm expecting a tap of this overall 4-hour supply zone. And after this, all we have to do is react on the 15-minute chart. But since then, we have plenty of room to trade between. We have plenty of room to trade between this high point and this supply zone. So we'll be able to execute long trades up to this supply zone, or even short trades down to some demand region at here, at this region. And after the demand mitigation, or some sort of demand mitigation here, we'll be able to actually execute the expectation of bullish order flow after this supply zone. So there are plenty of scenarios lined up for this actual price action. All we have to do is follow it on the 15-minute chart and on the 1-minute chart. So I can actually define this 4-hour zone to this 15-minute candle right here, which has caused the overall inefficiency to the downside. As you can see, here's the real inefficiency, here's the real break of structural change of character, here's the real sweep, liquidity sweep at this region. And all of this liquidity sweeping movement, inefficient movement, character changing movement has happened from this candle up here, this 15-minute candle, right? Okay, what can we see here? We can see that price is building up a bullish movement here at this region, creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, building up a bullish order flow after this supply zone. And right now, price is inside of this 4-hour supply zone. 15-minute refined from the 4-hour supply zone, actually, because this is a 15-minute zone refined from the 4-hour chart. So what are we waiting for inside of this 4-hour zone? What can we expect inside of this 4-hour supply zone?
15-minute change of character.
Exactly. Thank you for the fast answer. We are waiting for a 15-minute change of character, which has actually happened, right? We could consider this as a 15-minute change of character to the downside, but we could also consider this as a liquidity sweep, because as you can see, this movement to the downside actually changed character here. This was the last break of structure here. This was the last demand zone, 15-minute demand zone that has caused the break of structure to the upside. Price has reacted on this demand zone here with this movement, couldn't gain enough fuel, couldn't gain enough power to create a new breakout structure to the upside and break of supply zone. And instead of breaking above this supply zone and this last structural high point, it just broke below this demand zone. So technically, for change of characters, wicks are perfectly enough, right? So we could consider this as a change of character to the downside.
Marcel?
Yes?
Sorry to interrupt, but you said change of characters where we consider the wick is only on the 1 minute chart and lower?
I didn't really understand. Sorry, can you just repeat it?
I remember you saying before in one of your webinars,
yeah,
that the change of character can only be a wick when it is a 1 minute time frame. Change of character.
Yes. That's why I would like to continue.
Oh, okay. Because that's a 15-minute chart that I'm looking at. I just wanted to. Okay.
Yeah,
sure.
I will clarify. I will just continue. So technically, we can consider this as a change of character, but we can also consider this as a liquidity sweep because there's a bunch of liquidity sitting up, lined up, liquidity trend line here at this region, as you can see.
I have a doubt.
Sorry, let me just. Please, let me just.
Does the wick is enough for the change of character, or the body should close below the change of character line?
Let me just continue, please. After that, I will answer all the questions. Let me just continue. So,
okay.
Technically, we can consider this as a change of character, but we can also consider this as a liquidity sweep. It has been decided that this is only a liquidity sweep because this was the character changing supply / liquidity sweep in supply, which has caused the overall break of this demand zone down here. But this zone that has caused the overall break of this zone has been swept out already. So this has been proven that this was just a liquidity sweeping movement to the downside, and this supply zone has been broken. So the bullish order flow might be continued to the upside from this demand zone down here. Okay, let me just mark out all of the zones. So starting with this one, this was the last structure breaking movement to the upside. Liquidity inside of this zone. Breakout structure here to the upside, reaction on this demand zone, couldn't break structure to the upside after the reaction on this zone again, failed to break above, liquidity sweeping movement to the downside, tap the extreme zone down here. So this is the same scenario that I was stretching for you. This is the exact same scenario. So basically this demand zone down here, this Dutch candle has caused the original change of character to the upside. This is the origin of the change of character on the 15-minute chart, because as you can see, there was a demand zone again, lined up with liquidity. Price has swept the liquidity to the downside and changed character with body closure to the downside on the 15-minute chart, as you can see. And after the liquidity sweeping movement, price has changed character back from bearish to bullish again, here with this movement, with inefficient 15-minute movement to the upside. So this is the origin of the change of character. This is a decisional demand zone up here, which has liquidity, which is liquidity for the downer area, liquidity for the origin of the movement, right? So that's what I was explaining at the beginning of this session. The character changing demand zone / supply zone will be always stronger than the decisional one. So this was the character changing demand zone that has changed character here to the upside. Liquidity built up for this zone, liquidity sweep this movement, tapped into this demand zone. After a tap of this demand zone, it continued the overall bullish order flow and actually changed character here to the upside again. So here was a new change of character to the upside on the 15-minute chart, which was caused by this candle down here, because from this candle, the inefficient movement has created, as you can see, here's inefficiency, here's the change of, sorry, I didn't mean to mark it as liquidity, I meant to mark it as change of character. So from this candle, inefficiency started, change of character started, and seems like price is currently on the way to retrace down to this demand zone. So as I'm always saying, all you have to do is react and don't predict, right? So at this zone, all you have to do is react on what price is actually giving you. If price taps this zone, all you have to do is wait for a 1-minute reaction. All you have to do is wait for a 1-minute change of character or 1-minute break of this zone. So if price taps this zone, I'm drawing the actual 1-minute chart movement here. If price taps this zone and creates a 1-minute change of character to the upside, and let's say creates a perfect entry criteria, you'll be able to execute a long trade after the mitigation of this zone on this fresh and new created demand zone. Because the overall order flow is still bullish. We are still expecting bullish continuations. All we have to do is find a good retracement point. All we have to do is find a good entry point. And this demand zone could be a good entry point. Of course, it could be considered as a weak low because it couldn't break above the last strong high. This could be considered as a weak low, but it also changed character to the upside. So that's why I always say you have to react. You can just decide if this zone will hold price or won't hold price. All you have to do is react on this zone. But if price breaks below this zone, so let's say it creates a retracement on this zone and breaks below it, you'll be able to ride the expectation short order flow down to some more valuable demand regions, for example, like this, because this demand zone has liquidity just about, as you can see, this is a whole liquidity line lined up for this demand zone. So this is a liquidity line for this demand zone. All you have to do is react. Wait for your reaction on this demand zone. If this demand zone breaks, you'll be able to ride the exponential short order flow down to this demand zone. If this demand zone is being tapped, all you have to do is wait for a reaction on this demand zone. If price changes character here on this demand zone, you'll be able to ride the exponential long order flow. If price breaks below this demand zone, you'll be able to ride the exponential short order flow to the downside to some more valuable demand regions, for example, like this. All you have to do is react on these zones. All you have to do is react on the 15-minute zones. You don't have to predict anything. You don't have to predict what price is actually going to do. You have to mark your 15-minute zones out and you have to react on those zones.
Bro, can you please let John in? Because he had some internet problems.
No.
Thanks. Okay, fine.
He'll be missed out. Where is he? Okay, got him. So is it understandable, guys?
Yes.
I'm okay.
One question.
Yeah.
Thank you.
We should how I say, we should use extreme for change of character, or decisional is enough.
Depends on the liquidity.
Okay.
If there's liquidity for the extreme, use the extreme. If there's liquidity for the decisional, use the decisional. If there's no liquidity for the decisional, then the decisional will be the liquidity for the extreme.
Oh, okay, I get it.
So in this case, I'm actually expecting the break of this zone. I'll be expecting the break of this zone. And my plan today is to wait for a reaction on this zone. I'm actually building two scenarios for today. My first plan is to wait for the top of this zone and wait for a reaction on this zone. My lower probability setup, lower probability scenario for today is the change of character on this zone and the long entry based on the 1 minute demand zone that has changed character after a top of this zone. This is my first scenario and lower probability scenario for today. Second scenario is the higher probability scenario, which I'm expecting for today, is the price tap this zone, creates a break of this zone and short continuations down to this demand zone, because this zone is much more valuable than this one. This demand zone down here could create a strong high break. Here, as you can see, this was a strong high because it could break below the strong low. So this is a strong high, and this demand zone actually broke above the strong high point with this inefficient movement, has liquidity just above it. So I'm actually expecting a tap of this zone. That's my plan for today.
Also, it's a flip zone, right?
Yeah. We could say that it's a flip zone also, because there's the supply zone and this demand zone flip that zone. Yeah.
That was my expectation also.
We didn't ask. Just kidding. Okay.
Thank you for letting me in.
Goodbye, John. Say bye to the team. You'll be missed.
Oh my God.
So, yeah, guys, is it all clear? All of the scenarios drawn up for today. Yes. All of the scenarios could happen. And what do I always say? What do you have to do?
React.
React, don't predict.
Exactly. Just say it once again. Everyone, just say it. I want to hear it. Just say it.
React. Don't
predict. Don't predict.
Thank you.
And what's the other one? Spot the liquidity.
Before you come, liquidity.
Yes, exactly.
Just keep these two things in your mind. Okay, guys? Just keep these two simple things in your mind. Okay, that's all you have to do. React on what price is actually giving you. Let me just switch to the 1 minute chart real quick and look at the 1 minute chart. But before we look at the 1 minute chart, let me just continue the monologue. So, oh my God. Okay, goodbye. Liquidity slip to the upside. It's happening. I believe there were news. Yeah, this was a liquidity sweep to the upside caused by news. Okay, let me just continue the monologue. All you have to do is simply react on the 50-minute zones. You have to understand this. You literally only have to understand this. React on the 50-minute/5-minute zones and use the 1-minute chart to actually react on those zones. And on the 1-minute chart, you'll find perfect entry opportunities. Perfect entry opportunities if you're using the 50-minute/5-minute chart lined up with the 1-minute chart. As you can see, all of my trades that I take is based on the higher time frame. I'm actually following the higher time frame order flow, right? I rarely take a counter trend trade. I more often take a main trend trade and follow the actual higher time frame order flow because it's easier to trade with the flow than against the flow. And yes, I'm always waiting for a high criteria setup. I'm not executing a low criteria setup because that's literally no point to execute a low criteria setup when you can simply wait for a high criteria setup. Of course, you'll be sitting on your hands more. You'll have to wait more, but we have time. We have plenty of time to wait. It's just March. There's the whole year for trading. There's the whole week. There's the whole month for trading. You can just simply sit on your hands and wait 2 hours straight and sit in front of your monitor and glue your eyes to your monitor and just simply wait. Why would you risk your capital when you can just simply protect it and wait for the high criteria setups? That's all you have to do. And yeah, as John said, use the criteria tracker. That's why I've actually created that freaking high criteria tracker. It's so fucking easy to track your criteria with the criteria tracker. All you have to do is value your zones, value your entries, and you'll immediately know that which zone will hold, which zone won't hold. It's easy to use. Okay, guys? I just want to hear, okay, if you understood it.
Okay.
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 Perfect.
Emma, can you tell me when is the lunch time?
At my time zone, it opens here at 12 p.m. and closes at 1 p.m.
12, right?
Yeah, but that's my time zone.
Okay, I'll convert it.
So what's the plan for today? We're waiting for this zone to be tapped or waiting for another reaction. Okay, just once again, we are waiting for this zone to be tapped. That's the original plan, right? I was building a plan for today. That's my whole plan for today. But if the plan changes, if something other happens than this plan, so for example, the price creates a breakout structure from this here to the upside and breaks the actual structural high point here from here to the upside, I will create another plan for today. I will adapt. Actually, all you have to do is react on what price is giving you and adapt if price is not giving you what you are expecting. And just react and adapt. If price breaks this high point, I will build a new plan. I will build a new plan based on the new demand zone that has been formed. I will value my zones. I will value the liquidity. I will value everything. I will revalue everything. So basically, that's it. That's it for this session. Any more questions, guys?
Just one. Can you switch to 50 minutes?
Yeah.
If price break that demand, but not this week, do you consider as a chart?
Yeah.
Yeah.
That will be a change of character.
Okay, thanks.
Because this is the last demand zone that has caused the change of character to the upside.
Yeah.
Any more questions?
Does the wiki is good enough for the change of character, or the body should close below?
On this zone, on this 50-minute zone, I would recommend you to wait for a 1-minute body closure. So on this zone has to be broken with a body closure because there's liquidity also. So if price creates a liquidity sweeping movement, that will be happening with the week. So you need a body closure to break below this zone.
Then the wiki is not considered as change of character. It will consider as an liquidity swept, is it?
Yeah, but that's in the video course. I'm actually explaining it in a video. That how can you actually identify if it's a character change or if it's a liquidity sweep.
Okay. Thank you, Flipping.
Of course, you're welcome. So, okay, guys, that's it for today. I'll be sending some quick markups about these 50-minute price action movements. So yeah, thank you for being here.
Gabriel, sorry. Gabriel, the criteria tracker is in the Discord resources. You can find it in the PDF. It's in the Discord resources. Sorry.
Okay, thank you, John. So thank you guys for being here. I hope you like this session too. I hope this was helpful for you and it could actually give you some more insights about price action today. So yeah, wish you all a beautiful trading day. I might not be trading today and I might not be available, not today, sorry, tomorrow. So I won't be available tomorrow because I have to go on a trip. So yeah, thank you guys for being here. Wish you all a beautiful day. I'll be sending the markups, I'll be sending the updates, I'll be sending a recap video if I take any trade today. Yeah, guys. Take care. Goodbye.
Take care, guys. Goodbye.
Okay, Tom, welcome everyone. It's Marcel here, or Flipping Markets. I don't know how you call me. So once again, welcome everyone. This will be today's backtesting session, Sunday's backtesting session. So let's just get started. I will generate a random number again, as usual. Let me just open random number generator. Okay, and for example, it's 20th of March. So from 15th of February to 15th of March, let's just generate a number. 2. The number is 2. So the first is the 15th of February. So the second, okay, we will backtest the 16th of February. Let me just switch to the 1 hour chart and let's just quickly find the 16th of February. Replay button is here. Okay, perfect. 8. Where is it? 15, 16, New York Open is exactly right here. Perfect. Philip boy. Yeah, of course. I'm Philippine Markets, you know. You can call me Philippine. Okay, guys. So here's the 16th of February. Just a question. What do we do before we start the backtesting session? What do we usually do? What do we always do before we start the backtesting session? What's the first step to start the backtesting session?
Check news.
Check news, exactly. I will just check the news. Let's say February, 16th of February, perfect, end date, 17, apply settings. So Wednesday, it's Wednesday, perfect, 16th of February. As you can see, there will be high impact news going on at this region. And after the session will end, there will be FOMC meeting. So we care about all of just these two news, the core retail sales and the retail sales. And these news will hit in after the session open in 30 minutes. So just keep that in mind and start the analysis. Switch back to the 4-hour chart and start the overall analysis. Okay. So what can we see on the 4-hour chart? What can we actually see on the 4-hour chart? We can see, and we already know that because we've talked about this several times, that the overall higher time frame trend at this region is extremely bearish, right? Price is following a clear trend, price is following a clear pattern, price action, creating highs, lows, lower highs, lower lows, lower highs, lower highs, lower lows, lower highs, lower lows. So basically that's our overall higher time frame clear trend. Price is following this pattern since January in 2020. Yeah, sorry. So let's just focus on this current price action region. What can we actually see here? We can see that price has created this huge inertial movement to the downside. And I know we've talked about this region several times in the past backtesting sessions, recap videos, etc., but it's a backtesting session, so we have to talk about this. So price has created a huge inertial movement here to the downside, created this range after the inertial movement to the downside. As you can see, here's a range top, here's the range bottom, perfect range, built up for some upper supply areas at this region. As you can see, first price has swept the upper range with this huge inertial movement to the upside, tapped into some supply region, maybe some weekly or monthly supply region at this region, tapped that supply region, and after a supply tap, it just reversed immediately downside and swept the downside range at this region, as you can see, with this movement. And the origin of this movement was this high point. This is the strong high point at this region, as you can see. So basically, let's just map the highs and lows out. This was the previous strong high. this was the previous week low, because this week low couldn't break above the strong high here, as you can see. This is the new strong high because this high point could break above the previous week low. And as you can see, this is our new week low because this week low couldn't break above the previous strong high. So this is the previous strong high. There was no break of the structural high point at this region, as you can see. You could call this a break, but this isn't a break because this was just a liquidity sweep. As you can see, here's perfect liquidity line, first tap, second tap, and this movement has swept all of the liquidity from above this supply zone and from above this high point. So the overall structure is bearish. It's following a bearish pattern. And knowing the fact that price couldn't break above the last structural strong high point at this region, and price has just reacted on this strong high point. And if I zoom in, we will see that price has actually changed character on the 4-hour chart too after reacting on the strong high point. So price has changed character here to the downside, as you can see, because this was a low point, this was a high point, this is another low point, this is another high point, change of character to the downside, and bearish order flow started from this region, as you can see. So the overall 4-hour main trend and the higher time frame main trend is bearish for us. So we can all agree that the higher time frame trend is bearish. So what does this mean? That the main trend movement will be bearish, so short, and the counter trend movement will be bullish, so long. So every single short movement will be considered as main trend movement. Every single long movement will be considered as counter trend movement. So let's just continue analysis on the 4-hour chart. As I said, price couldn't break above the previous strong high point at this region. After reacting on a strong high point, we started a bearish order flow to the downside. As you can see, we had this valuable 4-hour demand zone down here. Can you just tell me that why are we using the wick in this region and why not this previous downside candle? Why are we using this wick? Anyone?
Because it's already been mitigated with the body.
Exactly, that's the only unmitigated region or demand zone left here. And sorry, John, I just can see that 4 people are in the waiting room.
Yes, I'm waiting their names in the Discord group.
Okay, perfect. So price is reacting on this valuable demand zone here, as you can see. Why is the valuable demand zone? It's a valuable demand zone because it swept liquidity here at this region, created a huge inversion movement, tapped into the supply zone. So basically, that's the whole, that's the origin of the whole bullish order flow at this region. Okay, price has changed character here to the downside and started a bearish 4-hour order flow to the downside. And this was one more confirmation for the continuation of the bearish order flow, because this is a perfect liquidity sweeping week on the 4-hour chart. As you can see, here was the first tap, here was the second tap, and this week have swept all of the liquidity from above this supply region. And after this, price has started an extreme bearish order flow to the downside, respecting supply zones over and over again, and creating demand breaks over and over again. Okay, what else can we see if I'm zooming more? What can we see on the previous 4-hour structural leg? We can see that price has created a break of structure here to the downside at this region, at the huge liquidity sweeping movement. As you can see here were equal bottoms, and these equal bottoms have been swept from this supply zone up here, as you can see. So this supply zone has caused a break of structure here to the downside, liquidity sweeping movement, and inefficient filling gap movement at this region. Okay, what else can we see? We can see that price has created another supply zone at this region. This was another 4-hour supply zone, not as valuable supply zone as this one because there's no inefficiency between this candle and this candle, as you can see. So this supply zone will be weak sooner or later. This supply zone has inefficiency. Price will fill this supply zone up and fill this supply zone up, as you can see at this region. And it has a great chance to reverse on this supply zone and continue the overall main trend movement to the downside. So the main trend is still bearish. We are still expecting short continuations to the downside. I will be aiming for short trades in this session, but I'll be gladly taking a 1-to-5 risk-reward ratio long trade too. So as you can see, price has created liquidity line at this region too. Here's the first tap, here's the second tap, liquidity line. And from this demand zone, if I just zoom in, you will see it better that from this demand zone, from this 4-hour demand zone, price has swept that liquidity to the upside and caused the last break of structure here to the upside, swept the liquidity, filled up the inefficiency, and tapped the supply. So this is the less structural, this is less previous demand zone at this region. Okay, so as I said, we always build a plan before start a session, before start even a backtesting session, before start a live trading session. So just build a higher time frame plan. I'll be aiming for shorts. The higher time frame structure is extremely bearish, so I'll be looking for main trend continuations, which is short trend continuation. The short trend and the short opportunities will be stronger than the long opportunities this day, because as you can see, price is in an extremely bearish trend. Okay, Let's switch to the 15-minute chart because that's all about the 4-hour chart. What can we actually see in the 15-minute chart? And we just extend this zone. What can we see on the 15-minute chart? We can see that prices change character here at the bottom after reacting on demand zone. Change character here, as you can see, and started a clear bullish order flow, 15-minute bullish order flow to the upside up to this supply zone, up to this 4-hour supply zone. Demand reactions all over the time, demand reactions all over the time, building a higher high, higher low, higher high, higher low structure, bullish structure up to this supply zone. And after tapping into this supply zone, I will just move the cursor right here. What do we need after the tap of this supply zone? After a 4-hour supply tap, I have to ask this every single time because I want you to learn this. What are we waiting for after a 4-hour zone tap?
15-minute chart.
Exactly. We are waiting for a 15-minute change of character after a 4-hour zone tap. So a 15-minute change of character is needed. Let me just zoom in and see if there was any 15-minute change of character. Actually, there was a 15-minute change of character. Can you just point it out? Where was the 15-minute change of character? Where did the 15-minute change of character happen at this region? I want you to draw on my screen and point it out. Simon, that's not the good change of character. And also the yellow is not the good change of character. No, Ramona. I don't know who's the green. Yeah, the green is right. Nick, you're right. I will clear all the drawings. Thank you for drawing on my screen. So basically, as I told you several times earlier, exactly Nick, every single inside bar is a supply / demand zone. So as you can see, here's a clear inside bar. These candles, I don't know who's talking, but please mute yourself because that's annoying to hear to your background. So as you can see, this candle is inside of the previous candle. So this one, the closing, the opening of this candle is below than the closing of this candle, and the low of this candle is above than the opening of this candle. So basically, this is an inside bar. Every inside bar is a supply / demand zone. So price has changed character here on the 15-minute chart, as you can see with this movement. And for change of characters, wicks are perfectly enough. So change of character has happened here, as you can see. This was the origin of the change of character. This is a 15-minute supply zone that has caused a change of character, and a perfect setup has been played out, as you can see. Change of character, liquidity building up at this region, sweep of the liquidity from this movement, tap of the supply zone. We will check if there was any good 1-minute entry opportunity at this region. So after the tap of the supply zone, prices reversed immediately to the downside. Okay, what can we expect from price on the 15-minute chart? We can expect the tap of this 4-hour zone actually, and we can spot another inside bar here at this region, as you can see. So this will be another demand zone, but I believe this demand zone will be broken. Price is exactly in this region before the New York Open. As you can see, in 15 minutes, New York will open, and 15 minutes before the New York Open, price is in this inside bar demand zone. So what can we expect from the overall 15-minute chart? We can expect from the 15-minute chart that price will, I believe, break below this demand zone and continue the overall short movement down to this 4-hour demand zone. And inside of this 4-hour demand zone, we can identify demand zone down at this region and the demand zone up at this region. So I believe this demand zone will be broken sooner or later because the overall trend is still bearish. The overall higher time frame intention is still bearish. And this is just a weak demand zone because it literally caused just a sub break of structure here to the upside and the zone tap here and the liquidity sweep. So of course, for the criteria, it's a valid zone. It's a pretty valid zone. It's a pretty valid demand zone. But I believe it will be broken sooner or later because just compare the 4-hour supply zone to this demand zone. The 4-hour supply zone is much stronger than this small 4-hour demand zone, and prices reacted strongly on this 4-hour demand zone and exactly on the 50-minute candle inside of this 4-hour demand zone. So prices reacted strongly on this 4-hour demand zone. So I believe the overall trend, the overall main trend, which is bearish, will be continued after a tap of this demand zone, supply zone, and this strong reaction and change of character. So these demands, I believe, will be broken. I'll be aiming for downward demand areas, but let's just keep these zones because these are the most recent zones. Okay. All clear? Can you follow me? Am I speaking too fast?
All good.
All good. Okay, perfect. So that's all from the 15-minute chart. Let's just switch to the 5-minute chart and let's see if we can refine the zone. Actually, we can refine this zone, as you can see, clear refinement. and switch to the 1 minute chart. Okay, let's just check if there was any good entry opportunity at the 15 minute zone tap. And as you can see, this is basically a perfect textbook setup because prices tap the 4-hour supply zone in a main trend. So our main trend, as I said several times, main trend is bearish. Prices tap the 4-hour supply zone at this region. After a 4-hour supply tap, it created a change of character to the downside, created liquidity, swept the liquidity, tap the 15 minute zone, created change of character on the 1 minute chart, entry opportunity, bam. This is a perfect setup at this region. But we don't really care about this region because we are creating a backtesting session. We are doing a backtesting session, and all we care about is the upcoming movements. Okay. So let's just start the overall backtesting session. We've checked the news. We know that the news will coming out at here and this region. And we know that price is inside of a 15-minute inside bar demand zone in this region. And we know that the overall high time frame trend is bearish. So let's see how price reacts on this demand zone. And we just play price forward. Okay. Seems like it's not a break. It's just a liquidity sweep or liquidity creation. Okay, price has actually created change of character on several places after a reaction on this demand zone. As you can see, change of character, change of character, change of character on several places. And the origin of the change of character was this demand zone down here. So basically, this is the origin of the whole change of character at this region. Okay, let's see how price actually is being played out. Let me just see if there was any supply reaction because price is reacting strongly on something. There was no supply reaction. Okay, so there's the first entry opportunity. As you can see, price is reacting on this demand zone, 15-minute demand zone, created a change of character on several places, created a liquid trend line. We can call this a liquid trend line, and created a clear demand with inefficient push to the upside. So this could be our first entry opportunity, but we know that the higher time frame intention, the higher time frame trend is bearish. So this will be a counter trend trade. I'm just asking you if you will guys take this setup. Would you guys take this setup? Please feel free to use your microphones.
Yes, why not?
Yes, why not?
Maybe with smaller
No.
targets, but if you have all the confirmations, even if it's a counter trend.
Yeah, for confirmations, we need more liquidity creation in a counter trend. But prices create a change of character on several places. Exactly, there's no liquidity creation. That's one of our main criteria for a counter trend trade, and there's no real liquidity creation at this region yet. But if price creates liquidity, this could be a perfect entry setup. So the question is, should we risk it or should we not risk it? I say risk this setup because it looks good. If there will be liquidity, we will risk it for sure. But let's just see how this plays out. Price has changed character on several places after a 15-minute zone tap. Okay, actually the tap has happened. Let's see how it plays out. Reaction. Okay, it's not too strong reaction. I believe it will have hit stop loss. Okay. Okay, and it's done. It's over. As you can see, this is the power of the main trend. This is the power of the main trend. Prices tap the 15-minute zone. That's right. Prices created a change of character on several places after the 15-minute zone tap. That's right. Prices created small liquidity line right here, but not a real liquidity at this region. This is exactly this week's homework. I gave you this homework to create homework about liquidity creation and no liquidity creation. And this is exactly the perfect setup for the homework on this week because there was no real liquidity for this zone. The zone has been taken out, as you can see. So once again, this is the power of the main trend. The main trend will be always stronger than the counter trend. So let's see how this plays out. Actually, there was a flip zone. Okay, news hitting. Yeah, this was the news movement. The 4-hour demand zone has been not tapped yet. We have a clear supply zone here that has caused the overall flip zone. This was the origin of the flip zone. This was the origin of the inefficient movement to the downside. So I would set an order limit on this supply if there will be liquidity for this supply. Okay, there's actually liquidity for this supply. The news already hitting. This was the news movement. So there's liquidity for this supply zone, as you can see. And this setup looks pretty promising because as you can see, prices created a change of character here to upside in several places. This was a faint change of character. I did not really check if this was a lunchtime movement. This could have been a lunchtime movement actually because this is lunchtime region. and lunchtime ended here at this region. So this could be a lunchtime movement also. So yeah, we pay the price minus my risk reward ratio here, but another setup is forming right here. As you can see, flip zone after the change of character to the upside, change of character to the downside. From this flip zone, this supply zone has created the first inefficiency here, created the whole flip zone, created liquidity for this zone, and we are following the main movement. And prices did not tap into this 4-hour demand zone down here, as you can see. So this could be a perfect overall target point for our upcoming shorts. So let me just set an order limit on this supply zone because this looks actually really promising. Okay, on the 50% entry, I will use a 50% entry, 1 to 5 short, and actually targeting this demand zone will give us 8 risk reward ratio, but let's see, the 1.5 pip stop loss covers the zone perfectly. So I will use the 1.5 pip stop loss in this case. So let's see how this trade actually plays out. More liquidity creation. Okay, we might be missed out. More liquidity creation. Okay, perfect. Let me just extend this zone. Seems like it's a liquidity sweep. Okay, no. Oh, perfect. Tag. So we are in the trade and this region. So what are we waiting for? We are waiting for a break of structure to the downside. So this break of structure to the downside. If this low point breaks, we will set our stop loss into break even. Let's see how does it plays out. Perfect. So our stop loss is in break even at this region. See, this is the power of following the main trend. Much stronger than the counter trend, as you can see. And TP hit. That was pretty fast. Okay. So this was a 1 to 11 risk reward ratio trade, and we booked 11% profit in just 3 minutes. As you can see, 3 1-minute candles. This was a 3-minute 11% trade. Perfect. So let's continue. What can we see? Small mitigation of the 4-hour zone. So as you can see, this is a huge zone. So this small mitigation of this zone actually won't count. I will be waiting for a deeper mitigation. And actually, there's another setup waiting for us. As you can see, this pick up here created another huge inefficient movement to the downside. And if there will be liquidity for this zone, so let's say if price creates liquidity for this zone, I'll be taking this zone regardless for our continuations, even though price is coming from a 4-hour demand zone. But actually, price isn't coming from a 4-hour demand zone because we can't. Sorry, can you just mute yourself, please? Okay, so we can't really count this as a 4-hour zone mitigation because, as I said, this was maybe a 1% mitigation of this zone. And the main trend is still bearish. And I believe there will be a deeper mitigation of a 50-minute zone down here at somewhere at this region. So let's see what's happening next. Sorry, that's too fast. Okay, there's a liquidity creation for this zone actually, as you can see. Here's a perfect liquidity building up for this zone. So I'll be risking this setup because the main trend is still bearish. And can you just ask, can I just ask that why are we using this wick instead of the upside candle again? Why are we using the wick and not the upside candle at this region? That's our supply zone.
That's the only unmitigated. Oh, sorry.
Yeah, that's the right answer. Thank you. That's the only unmitigated region left here because this week, I mean, not this week, this whole candle has been mitigated by the following candle. So the orders are resting on this zone. Okay. Let me just set a 50% entry on these two because I like to set a 50% entries on weeks. I don't know why. It works better for me. So I just see 1 to 5 risk reward ratio short. As you can see, 1.5 pip stop loss will be easily covering the zone. Okay, perfect. So the target could be the 4-hour zone again for 1 to 10 risk reward ratio or some deeper 50-minute demand region here. This is an inside bar. This could be our next initial target point. I'll just mark it out, switch back to the 1-minute chart, and let's see how it plays out. Okay, price is building up more liquidity, perfect liquidity, and break of structure to the downside. Okay, actually, this setup looks like my favorite setup. This looks like my favorite setup. As you can see, huge inefficient movement to the downside in main trend. Let me just draw it with arrows. So this is the movement, actually huge inefficient movement to the downside. Perfect liquidity creation for this zone. Here's a perfect liquidity creation for the zone, breakout structure to the downside. And this is how it actually looks like at this region. Let me just extend this zone. I know price is still in the 4-hour demand zone, but I said I'm expecting deeper demand mitigations. And our main trend is still bearish. Let's see how this setup plays out, even if it plays out. Okay, reversal, more liquidity creation. So basically that's perfect liquidity building up for this zone. If price leaves this liquidity, this zone will be able to easily reverse price to the downside and maybe mitigate the deeper 50-minute demand area right here. So let's see how this plays out. Okay, no tap yet. Oh my God, tap. Okay, no stop loss yet. That was close. Okay. Let me just extend this zone and this one too. What are we waiting for inside of this zone? Chilling markets. I said it several times that the main trend is in control. Price has stepped the 4-hour zone. Price is coming from a demand zone, but we are expecting a deeper demand mitigation. So we are expecting a much deeper demand mitigation. I've talked about this several times in this session. So what are we waiting for here? We are waiting for this low point to the downside to be broken. Thank you, Kaizen. We are waiting. Yeah, that will be our break-even point. If this low point breaks, we'll be setting our stop loss to break even. And actually, let me just see, because price has stayed above the supply zone several times. Let me just switch back to the 15-minute chart. Actually, the 15-minute chart looks like a 15-minute change of character to the upside. As you can see, downside movement, upside movement, downside movement. And after a 4-hour zone mitigation at this region, price has changed character here to the upside. This was the last high point of the week, and price has changed character with a wick to the upside here. But this could have been just a liquidity sweep. I'm not sure, but it seems like actually a change of character to the upside. Okay, our target point might be modified to this demand zone that has caused the change of character on the 15-minute chart. Let's just see if it's enough risk-reward ratio for us. It's 1 to 7.5 risk-reward ratio, so it's actually fine. Let's see how it works out. Okay, break-even point. Our stop loss is in break-even because prices broke below this structural low point at this region. So it's risk-free. We are not worried about it. Reversal. Okay, TP hit, perfect. So this was a pretty risky trade, to be honest. This was a pretty risky trade because price is coming from a 4-hour demand zone and change character on the 15-minute chart to the upside. But the setup was perfect. The setup was my perfect favorite setup, as you can see, as I just drawn you. Downside inversion movement, perfect liquidity creation in this region, breakout structure to the downside, more liquidity creation, sweep of the liquidity, tap of the zone, continuation. And I dictate this setup only because the main trend is still bearish. I'm still expecting the break of this 4-hour demand zone. I'm still expecting the break of this 50-minute demand zone. I was expecting a break of this zone. I was expecting a break of this 4-hour zone, and prices mitigated the only a small percentage of this 4-hour zone. So as we talked about it several times, for a 4-hour zone mitigation, we need at least a 50% mitigation. Without a 50% mitigation, a 4-hour zone mitigation won't be enough for us. So we are expecting a 4-hour zone 50% mitigation. Let me just read the comments. Is this entry more risky after prices? Yes. Of course, it was a riskier entry model, but knowing the fact that the higher time frame is still bearish, and knowing the fact that there was a perfect entry criteria built up for us, and knowing the fact that we already booked 11% minus 1% on this trade, so 10% profit overall at this session, I will be easily risking this setup. So yeah, the second setup has been played out. Let's see the supply zone that has caused the zone tap. This is our last supply zone at this region that has caused the 15-minute zone tap with inefficient push, as you can see, liquidity sweep at this region. So it seems pretty nice. It seems a pretty nice supply zone. Let's see how price reacts on this demand zone. Okay, it actually reacted on this zone and reacting on this supply zone. Okay, still reacting. Actually, this could have been a break, right? Building up liquidity trend line here at this region too. This could have been a break. or I don't know yet. Let's see how price reacts on this zone. Okay, it's actually a break of this zone, and this demand zone caused the overall zone break, as you can see. This 1 minute zone caused the 1 minute zone break. Would you guys risk your entry on this setup, on this demand zone? I'm just asking you because it's pretty important.
Yes, because of the flip.
Because there's liquidity. It's liquidity.
Exactly. Thank you for the answer. You can't really open a position on this demand zone because it's part of the liquidity trend line. There's a perfect liquidity trend line at this region, as you can see. So we can't really open a position on this demand zone. We are waiting for more confirmations. Okay. Let's see. Price is created not to break a structure here to the upside, just a liquidity sweep. Seems like it's a liquidity sweep, as you can see. Equal taps at this region, first tap, second tap, sweep of the taps with this movement. This was the last demand zone that has caused the sweep. Let me just mark it out. Okay, break of the zone has happened. There's liquidity building up for the supply flip because there's a supply flip, as you can see. This supply zone has caused the zone break after a liquidity flip. So actually it's lining up with our main trend. Let me just zoom out, as you can see. Just look at the overall structure, creating series of lower lows and lower highs to the downside, down to this 4-hour demand region. Price is created 15-minute change of character or liquidity sweep here at this region. Our main trend is still bearish because we are following the higher time frame intentions, and we are expecting a deeper demand mitigation here. That's what you can actually see. Prices react to the demands around this region, as you can see. And after a demand reaction, prices react on this 1 minute supply zone and flip this supply zone to the upside and swap some liquidity here at this region and tapped into actually this small supply wick up here. So after a supply tap, this really small unvaluable supply tap at liquidity sweep, prices reverse here at this region, created a flip zone here and building up liquidity for our flip zone. Okay, this could have been a decent entry opportunity. This isn't a high probability. This could have been a decent entry opportunity. Let's see if we can set an entry limit on this zone. A full body entry at this zone will be okay, because actually if price, I just see the 50% entry. Actually, if price goes up this high, there will be a reversal and continuation of the bullish order flow rather than the continuation of the short order flow. So let's say if price reacts on this zone and respects our stop loss, it has a chance to actually continue the overall bearish order flow. But if price comes after this 50% of this candle, and let's say it breaks a little bit above this zone, then this stop loss, of course, would keep us in. But if this zone breaks with a wick, if this zone breaks with a wick, I believe there will be the continuation of the whole bullish order flow, of the 1 minute bullish order flow, because the 1 minute bullish order flow has turned into bullish at this region. Okay, so I'm just asking you again that would you guys risk this setup? Would you guys risk this setup? I'm just asking you. There was no demand tap at this region. There's liquidity creation. There's a flip zone as for liquidity sweep and supply tap at this region. You will risk it. Okay. I will risk it too, because knowing the fact that we almost booked funny risk reward at this session yet, I would easily risk this setup and follow the main trend. And on initial target point will be the downward demand area at this region, because I'm still expecting a downward demand tap. Let's see how it plays out. Okay. Tap has happened. We are in the trade and perfect reaction. Okay. This was perfect. So our stop loss is at break even at this point. The liquidity has been swapped on the upside. This was the liquidity, and this small candle actually swapped the liquidity to the upside. This was a liquidity sweeping candle and the strong reversal to the downside after the liquidity sweeping movement. So the liquidity has been swapped on the upside. We are waiting for the liquidity sweep on the downside and the tap of this 50-minute demand zone. So yeah, our stop loss is on break even at this point. Okay, perfect reaction. Would you guys manage your stop loss here at this point? Or just keep it in break even? What will you do?
Break even.
Keep it in break even? Yeah, that would be the safest option. Because why am I saying this? That this is the safest option? Why am I saying this? Liquidity. Exactly, Chilling Marcus. Thank you. There's liquidity. This could be a liquidity building up for this zone up here. So we are just keeping our stop loss in break even. Let's see how this trade actually plays out. Okay, as you can see, this is a supply zone here. And price is reacting on this last recent supply zone. There's liquidity above this supply zone, as you can see. Sorry. So price is still reacting on this supply zone and the continuation on that supply zone. So this could have been a good entry opportunity too, but there was no liquidity creation for this zone. This downside zone has been tapped actually. So yeah, I would not risk this setup. Let's see how it plays out. I will still keep my stop loss in break even because there's lots of liquidity at this region, as you can see. So we are still keeping our stop loss in break even. Okay, liquidity sweep, reaction, and break even hit. And actually, this was the end of the session. Session has closed here. So we could have hard TP'd our position at this region. We could have hard TP'd at 1 to 5, but the hard 1 to 5 did not even hit yet. So yeah, this is a break even for us. Okay, let's see the overall results for this session. This was the first long entry here. No, I don't want to delete it. This was the first long entry, which has been a loss. So -1 risk reward here. Here was a +11 risk reward. Here was a +7.5 risk reward. Here was a break even, which you can count as a commission trade. So maybe -0.3. So overall, we booked 17 risk reward ratio on this session, executing 4 trades. And just take a look at this chart, guys. Just take a look at this chart. Basically, the whole session was just a ranging session. Let me just remove this drawing. All of these movements inside of this session was just range movement. As you can see, price was bouncing up and down between these lines, bouncing up and down. And even though we were trading a ranging session, we were trading a ranging price action at this region, we still booked 17 risk reward ratio. So yeah, let's see what happens after the session has ended. Let's just play price forward a little bit. Price is actually reversed to the upside. Maybe it will be, there was a higher supply tap at this region, maybe. Change of character to the downside and continuation of the bearish order flow to the downside. Okay, so this is the results for the backtesting session today. 17 risk reward ratio booked in this session. Let's see if you guys typed anything in the chat. Session is over. You will close your trade in a lot. Yes, Ramona, I will close my trade. So basically, we can book this as a profit, or in a real session, in a real live trading session, I would have managed my stop loss here, be above this supply zone. So maybe this trade would have been +1 risk reward ratio for us, but it doesn't really matter. It's a break even for us. Last trade was counter trend. Actually, yeah, this was a counter trend trade because price has changed character here to the upside. So we could consider this as a counter trend trade on the lower time frames, but on the higher time frames, it was a still main trend trade because the main trend is still bearish. Let's just see how this 4-hour chart actually plays out. See, the continuation of the whole bearish trend is still being continued over and over again. So this was just a liquidity collecting movement to the upside on the 1-minute chart, and it needed to tap some higher time frame supply zone. Let me just play price back. So it needed to tap some higher time frame supply zone at this region, tap the higher time frame supply zone, and as I said, this demand zone has been broken with this movement. Okay, guys, have you got any questions about this session?
Feel free to use your microphone, guys. Ask your questions.
Yes, guys, feel free to use your microphones. If you got any questions, about this session or overall any question?
Hello, Marcel.
Hey, man.
Yeah, I wanted to ask why you took the second trade after the counter trend trade, not that one, the one after this one, like the second trade, yeah, that one. Why did you take it at that supply zone, like after it hits the 4 hour demand?
Because as I said several times, we need a deeper, at least 50% mitigation of the demand zone. And this happened to me several times. Price just barely tapped the 4-hour zone. It just barely tapped the 4-hour zone. And after a 4-hour tap and a small percent of the 4-hour zone mitigation, it built up a perfect entry criteria setup. I didn't take that setup, and it went straight to my TP and continued the whole overall main trend. So
also,
basically,
if I don't see liquidity formed, is it advisable to take a trade like that?
yeah, without the liquidity, this could have been risky. But there was liquidity, there was perfect liquidity built up for this zone. So basically, that's my favorite setup. As you guys may know, my favorite setup is this one. Inefficient movement on this line, liquidity building up here, liquidity building up here, breakout structure to the downside, continuation. This is my favorite setup ever. And this setup has happened here exactly as you can see. Inefficient movement, liquidity building up, breakout structure, sweep of the liquidity, reaction. So that's why I took this trade, because only a small percentage of this zone has been mitigated at this
exactly
region.
what happened.
Sorry?
Yeah, that's exactly what happened. What you drew was exactly what happened.
Yeah. Exactly that happened. And yeah, of course, this was a risky trade. We could consider this as a risky trade because it was risky, because price was coming from a mitigated 4 hours demand zone, but price has mitigated only the small percentage of this zone, only the maybe 10% of this zone, and we need a 50% mitigation of 4 hour zone at least for a reversal, because that has happened several times. If Kianka will be here, she will say that don't trust the first step, because this happens several times. You can backtest these guys that after a 4 hour zone mitigation and small percentage 4 hour zone mitigation, price will usually change its trajectory on the 15-minute chart to the upside. But after this, price actually mitigates the deeper area of this demand zone. This happens several times. You can backtest it, guys, for yourselves.
Yeah, I'll try that.
Have you got any more questions, guys? Please feel free to use your microphone. Feel free to ask anything. John, are you here?
Yes.
Can you just talk, because I have to grab a cup of water real quick?
Yes, of course. So, guys, how's your feel today's session? Was it helpful? Did you enjoy it?
Yes, of course.
Are you ready for the upcoming week?
Oh yeah, I'm ready.
How's your challenges going, guys? If anyone is on a challenge.
I'm actually on phase 2 on 10K.
Oh, that's
on
nice.
MMF.
That's really nice.
So hopefully this week will be some trades.
You will be funded this week, bro.
Oh, hope so now.
Yeah. Of course.
Here I am.
Any questions, guys?
Come on, guys. Don't be shy. Just feel free to ask any question. You're usually asking questions, so just go ahead. Actually, guys, yeah, there's a question. Chilling Marcus, do you set your stop loss at break even exactly on the price where you open the trade, or do you have a buffer there too? You could buffer. You have to buffer your stop loss and entry point in real sessions, but in backtesting sessions, I don't really buffer my stop loss and entry point because I don't know the actual spreads at this region and at this region. So yeah, I don't know the actual spread.
Also, if you want, you can add the commissions to the break even too.
Yeah, exactly. Guys, on Wednesday, there will be the next live session. And in Wednesday's live session, I'll be talking about the weak and strong structural highs and low points. I'll be talking about the substructure, because literally lots of you guys have texted me about substructure and wanted me to actually explain the substructure. So I will just create a session about the weak and high low points. I mean, sorry, I can't speak. I will create a session about the strong and weak points and the substructure. Will that be great? Will that be helpful? Because if yes, I will host it.
Sorry, can you repeat what you said? You'll be hosting what? Sorry.
Sorry?
What you just said now, you said you'll be hosting what?
I'll be hosting a session on Wednesday.
All right.
About the strong and weak structural points and the substructure.
All right.
I was looking at the criteria tracker in this backtesting session. It's all perfect trades with respect criteria, and the track flow is useful. Exactly, Vinash. Exactly. Basically, I don't have to use the criteria tracker because I wrote that criteria tracker and I know all of the criteria from my head. So I'm not using that criteria tracker, but you guys, okay, let me just clarify something. If you're confused about the criteria, if you're confused about your zones, if you're confused about anything, just feel free to open the criteria tracker. It's in the resources channel. You can freely use that criteria tracker. You can use that criteria tracker to track your criteria, for example, on an entry point, for example, on a zone, if it's a valid zone, if it's not a valid zone, and you can actually compare your zones to each other's. So actually you can compare a supply zone to another supply zone, and you can decide on which supply zone would you like to enter. And please, guys, just use that criteria tracker because it's so important. It will save you from loads of unnecessary losses. Chilling markets, it's important. Of course, it's important. But you can't really track these strong and weak highs. You just have to know that if you're opening on a weak high, you just have to know that if you're opening on a weak low, you just have to track it for yourself without a tracker. You have to know these facts.
Sorry, please, where do I find the criteria tracker?
In the resources channel.
I will link it to the questions channel. Give me a minute.
John will link it to the question channel.
Okay, all right, thank you.
And guys, we have a good thing to announce for you. Everyone who has made their homework yet, any homework, will have a session with John. So yeah, if you've done at least one session, if you've done at least one homework, you'll be in the call with John. And after this first call, we'll be choosing 10 people who has done the homework for the upcoming sessions, you know. So yeah, guys, if you got no questions, no other questions, that's it for today. You get a question, okay, let me hear. Chilling markets. That's how I'm gonna do it now. Yeah, just do your homework, guys. We are not in school. You have to do your homeworks.
Yes, guys, homework is so important, and you can learn a lot from doing these homeworks.
When we wait for a 1 minute check, 50-minute demand, but the price runs below the 50-minute demand, how long? What happens if the 50-minute, while we are waiting for a check, the zone has been broken with body break? For a 50-minute zone, you need a 50-minute body break. That's all. If a zone is breaking with 1 minute candle, that won't be a break. You need a 50-minute zone break with body closure on a 50-minute chart with a 50-minute candle. So 50-minute zones, 50-minute body breaks. 1 minute zones, 1 minute body break. 4-hour zone, 4-hour body break. Okay, welcome guys, the recording goes on. So let's start this session with the criteria tracker, because I had lots of recommendations that you'd like to see how the criteria tracker actually works. For example, Chilling Markets recommended this topic, and I just want to show you how to actually track your criteria, for example, for the zones. because it's really, really important to track your criteria. You can actually avoid loads of losses. You can avoid loads of bad positions by just tracking your criteria with the simple Excel criteria tracker, which is a simple file, right? It's just an Excel file. It's not a Notion file, it's not anything. It's just an Excel file, and it's easy to use, simple, and you can easily track your criteria. Okay, let's just see quick 3 examples for this criteria tracker. And the first one is here. I just change the color of this supply zone to red. Okay. So how can we actually track the criteria? In this example, price was in a downtrend here, as you can see. Let's say price tapped into a higher time frame demand zone in this region, but because that will be realistic. So price tapped into a higher time frame, let's say 15-minute demand around this region. And after a 15-minute demand tap, it reacted on the supply zone, reaction, and flip this supply zone. As you can see, here is the flip line. So this means we have the first zone to be tracked. This will be our first zone. Okay. After this, as you can see, price created a pullback here and created liquidity for this zone here, this region. And after liquidity creation, it created a breakout structure to the upside and created another zone. This zone has no liquidity, as you can see. This zone is just a simple zone. This is the first example. Let's see how can we actually track the criteria for these zones. Let me just close this a little bit so you'll be able to see all of the zones. So here's the zone criteria. First zone. Let's say the first zone has broke through this supply zone with inefficient push. So this has happened with inefficient push. We will just simply put an X in the first zone inefficient rubric here. Another breakout structure, change of character, opposite zone break. As you can see, this zone has created this downside. I will just mark it with a number. This will be the first zone. This will be the second zone. So the first zone has created a flip, which is an opposite sign zone break with an inefficient push. So I will just put an X in this rubric too. Second, liquidity creation. It has created liquidity because, as you can see, here's liquidity for this zone. One more X. Liquidity sweep. It has felt no liquidity, right? There's no liquidity at this region. So there won't be an X in this rubric. Last one, sorry, let me just extend this. Last one, flip zone. It's a flip zone, so I will put an X here. Okay, perfect. Second zone, the second zone has created breakout structure to the upside. Here, as you can see, let's say it has been created by an inefficient push because this is an inefficient push. I will just mark it here with a breakout structure to the upside, BOS upside, and this is a change of character upside here. So it created a change of character and created also a flip, right? Okay, open the criteria tracker. It has breakout structure X. Let's say it has created an inefficient push too. Has an X too. Liquidity creation, there's no liquidity created for this zone, so it won't have an X, right? Liquidity sweep, it swaps on liquidity because here's the first tap, here's the second tap. Liquidity sweep will have X. Flip zone, it's not a flip zone, right? So the first zone has 4 criteria, the second zone has 3 criteria. Which one will be stronger? What do you think? Which one will be stronger? The first one or the second one?
First one.
Of course, that's obvious, right? The first one will be stronger because it has more criteria. And you can just simply track your criteria using this criteria tracker. And if you're confused about the zone and you're confused about the continuation, let's say, and you don't know if price will reverse on this zone or if it will reverse on the downside zone, just simply track your criteria. And if you're confused about your zones, just place an order on the zone which has more criteria, in this case, the first one. So we just simply place an order on the first zone because it has more criteria, and more likely the second one will be broken. Let's see price reverses on the second zone and creates continuation example and creates a breakout structure to the upside here, creates liquidity and another breakout structure. You will have new zones. You will have new zones. You'll be able to track this zone and you'll be able to track this zone. Track your criteria again. This will have liquidity. This will be swept. You'll be able to enter here. So just don't panic if your tracked zone, for example, in this case, the first one won't be tapped. Just don't panic. Just move on. And always track your criteria, because this way you can actually identify which zone will be stronger, which zone is stronger, which zone will be able to hold price, which zone will be able to reverse price, which zone can you place a limit on. And yeah, whichever zone has more criteria will be stronger. Let's move to the second example. This is our first zone in this case. First, second. Okay, as you can see, the concept is the same. Price is moving in a downtrend. Price has created a supply zone. Price has flipped this supply zone from this movement. Let's say this is creating an inefficient push. The first zone has no liquidity, as you can see. And we just open the criteria tracker again. The first zone, fill it these axes. Okay, so the first zone has created inefficient push. Let's say it created inefficient push and broke through the supply zone with inefficient push. Perfect. First criteria, X. Breakout structure, change of character, opposite zone break. Yes, it has broke. Change character here to the upside. So this is a change of character zone. Liquidity creation, there's no liquidity, no X. Liquidity sweep, there's no liquidity sweep, no X. Flip zone, that's a flip zone, so there will be an X. 3 criteria zone. Second zone, as you can see, it created inefficient push to the upside. Let's see it created inefficient push. Breakout structure, change of character, opposite zone break. There's a breakout structure to the upside. Actually, it's a swing break structure to the upside. As you can see, this is a swing high. Prices broke structure to the upside from this second zone and broke the swing high. So it counts as a higher time frame breakout structure. A higher time frame change of character too. So it will have an X. Liquidity creation, it has liquidity here, as you can see, double bottoms, liquidity. Liquidity sweep. Okay, let's say actually it swept some liquidity here at this region. So let's say it swept liquidity 2 and broke structure 2. So it will have a liquidity sweep X2. Flip zone, it's not a flip zone, so that it won't have an X. Which zone will be stronger? 4 criteria zone, 3 criteria zone. Which one is stronger? What do you think?
2. The second one.
The second one, exactly. Just simply track your criterias. Let's say there's no liquidity creation for this zone. So this breakout structure has happened without creating a liquidity. Open the criteria tracker, remove the liquidity creation X. 3 criteria zone versus 3 criteria zone. Which one will be stronger? What do you think? Which zone will hold? Which one is stronger? The second or the first?
Well,
no liquidity, no liquidity. Sorry?
For confirmation.
Sorry, I couldn't hear.
First one.
First one? Why do you think the first one?
Because it's a flip. What zone is strong?
Where is mitigated?
Liquidity creation or confirmation.
Second zone exactly is liquid, could be liquidity for the first one, but also the second one could hold. As I told you in the previous live session, the extreme zones that had created the original change of character, the first change of character to the upside, I don't know if you remember for this, but I said this in the previous live session. So the first zone that has created the original change of character to the upside and has changed character first will be always stronger than the decisional ones. So in this case, the second one could be liquidity for the downside zone. So the second zone could be liquidity for the first zone. That's true. But also, the second zone could also play out because that's also a valid zone with 3 criteria, and this is also a valid zone with 3 criteria. So 3 criteria versus 3 criteria, which one will be stronger? You don't know. You don't know. Of course, in theory, the first one is stronger because it has created the first change of character to the upside. But the second has same criteria as the first one. So actually, how can you play this scenario? How can you actually benefit from this scenario? It's simple. I believe I showed you in the I don't know 2 weeks earlier backtesting session. You can place double limits on both of these zones with half of the risk. So you can place a limit on the second zone. Let me just extend this zone, and you can place a limit on the first zone if you're not sure which zone will hold. So both of these zones are valid. Both of these zones are valid. Both of these zones have 3 criteria, 3 criteria zone, 3 criteria zone. You can just simply put double limit order on both of these zones. The first one, half risk, second one, half risk, 0.5 risk, 0.5 risk. Or if you're risking 0.5 per position, 0.25 and 0.25, this one also. You can just simply half your risk because both of these zones have 3 criteria. So yeah, actually, and if you take a double stop loss, this one hits stop loss 2, this one hits stop loss 2, you just lose your simple risk because let's say you risk 1% per position, right? If you have your risk, so you put a 0.5 here, put a 0.5 here, you will lose 1% maximum. So just simply halve your risk. Of course, it will generate you lower profit if let's say this hits TP, but at least it hits TP, right? So just simply halve your risk and use the double zone entry. If both of the zones have the same criteria, 3 criteria, half risk, half risk. This could help. This could really help. Just backtest it, try it, And first, please first backtest it. Because if you don't backtest it, you won't know how it works on the live charts. So I'm asking you please to backtest this scenario. Okay, here's this third example. Delete the axis. Either sit on our hands and wait. Actually, yeah, Jordan, that could be a possibility too, to wait on your hand. I mean, sit on your hands and wait for the zone to play it out. And actually, you can wait for confirmation entry in both of these zones. So even though this is a 1 minute chart, and let's say both of these zones have 3 or 4 criteria, so equal criteria, you can just simply wait for confirmation entry too. So there are 2 options. The first option is that place a double limit order with half risk. The second option is just simply wait for a confirmation entry. And let's say it creates a change of character here on the first zone, on the 1 minute chart, you'll be able to enter. Let's say it breaks below the first zone, creates a change of character here, you'll be able to enter. But in this scenario, I would use the half risk double entry, because this is also a confirmation entry. This entry has been confirmed because there's a breakout structure, main trend, for example, this is a main trend. There's a liquidity for this zone, there's a liquidity for this zone. So both of the entries are confirmed. These are both on the 1 minute time frame. There was a confirmation because price stepped into a 50-minute demand zone, change character here, flip the zone. So this is a confirmation entry, but you don't know which zone will hold actually. But of course, you can wait for a confirmation entry on the confirmation entry too. That's totally up to you. I'm just showing you how can you actually trade this scenario. And I believe the best scenario in this case, if you use double risk entry here, half risk, that will be the best one. Okay, so let's see the third example, which I believe it will have the same criteria as too. So as you can see, the concept is the same. Flip zone, let's say here's a 50-minute demand tap. After a 50-minute demand tap, it created a change of character to the upside here, flip zone also. But let's just say it has created no flip zone, and it has created a change of character with one impulse movement without a flip. So there will be a zone somewhere around here. So this is not a flip. This is not a flip. This is just a simple change of character to the upside. Okay, in this scenario, let's track our criteria. Let's say this movement has happened with inefficient movement to the upside. So inefficient change of character to the upside has happened. Inefficiency X, change of character X. Liquidity creation, as you can see, here's double bottoms X. Liquidity sweep, no liquidity sweep, as you can see, price has swept, no liquidity at this region, no X. Flip zone, that's not a flip zone, right? Okay, second zone. Let's just make things a little bit like this. Okay, so the criteria are the same for the first zone. Let me just mark it with 1. Let me just mark it with a 2. Okay, so the criteria for the first zone is the same, right? Inefficient change of character to the upside. Here's a change of character line. Liquidity creation XX. Inefficient movement to the upside X. So it has 3 criteria. It has 3 criteria. It's a 3 criteria zone. Let's see the second zone. Second zone, it has created an inefficient push to the upside, as you can see here. This is an inefficient push. It created a breakout structure here to the upside. So 2 criteria are ticked. First criteria, inefficient push. Second criteria, breakout structure to the upside. Third criteria, liquidity creation. There's liquidity for this zone, as you can see. It created liquidity double bottoms here at this region. Liquidity creation X. Liquidity sweep, as you can see, it swept liquidity at this region too. Here's double taps. This movement has swept this liquidity from this second zone, right? So this is the extreme of the sweep. The second zone is the extreme of this liquidity sweep to the upside. Okay, so the second zone will have 1 more X, and it's not a flip zone. In this case, the second zone has 4 criteria, the first zone has 3 criteria. Which one will be stronger? What do you think? I'm just asking because I have to ask which one will be stronger.
Top one.
Second one, right?
Yeah. The second one, yeah.
Exactly. Come on, guys, don't be shy. Just feel free to answer. So the second one will be stronger because it has 4 criteria. This is a 4 criteria zone. This is a 3 criteria zone. Even though this is the origin of the change of character. So the first zone has created the first change of character to the upside. And I said the first character changing zone will be always stronger than the decisional one. But in this case, the second decisional one will be stronger because it has more criteria than the first one. First one, inefficient movement, change of character to the upside, liquidity creation, 3 criteria. Second one, inefficient movement, breakout structure, liquidity sweep, liquidity creation, 4 criteria. So this zone has swept liquidity, this zone has created liquidity, this zone has created inefficient push, this zone has created breakout structure. So it has more criteria, it will be more likely to hold price and reverse price. So in this case, I will use the second zone to actually set a limit order on, and this will be my entry point. Of course, there's a possibility that you'll be swept out from the zone because there's liquidity below this zone. There's liquidity. You can't argue there's no liquidity, but it's safer to enter on the 4 criteria zone with liquidity below it than without the 4 criteria. So let's say, for example, this zone has 4 criteria, this zone has 3 criteria. In this case, you can't open a limit order here on the second zone because the first one has more criteria and there will be a liquidity sweep. But if the second zone has 4 criteria and the first zone has 3 criteria, it's safer to actually use a limit order on the second zone, even though this has liquidity. But in this case, you can also use it double risk entry. You can also use the half risk entry. So just place a limit order here, place a limit order here, half risk, and just simply see which one will be played out. Okay, so these were the examples. Were these helpful? Did you actually understand how to use the criteria tracker?
Yes, perfect.
Yes.
Yes, so helpful.
Yeah. Yes.
Perfect. What is the difference between flip zone versus that's basically the same. Pafilo. Flip zone and opposite sign zone break is basically the same. I just wrote it on a different name. And then the criteria, that will be for the next session. We have to analyze the higher time frame. But basically you can use the entry criteria tracker the same way, just like you use the zone criteria tracker. So as you can see here at the entry criteria, you can just simply use it the way I use the zone criteria tracker, literally the same way. Okay, so let's say there's a zone which has created higher time frame zone mitigation, inefficiency, strong reaction on the zone, change of character, liquidity sweep, liquidity creation, price isn't coming from unmitigated zone, pro trend, counter trend. You can just simply put an X in these boxes if it has the criteria, just like I did with the zones. So yeah, it's simple. So zone tracker is more likely for, no. These are for entry zones. But also you can use it for higher time frame zones. Of course, you can use it for higher time frame zones too, but these are mainly for the entry zones. So you'll be able to identify which zone will be your entry point and which zone not will be your entry point. Can we get this tracker? You already have this. It has been posted in the resources channel. So it's free for you to use. It's in the resources channel for like a month.
Yes, guys, I will link it on the question channels.
Yeah, thank you, John. How do we between the criteria, which one are stronger? Okay, I will just answer the questions later. Let's just jump to the actual higher time frame analysis. Let's see the overall higher time frame picture on Euro USD on the current price action. So let's just focus on this region first, and let's make our higher time frame 4-hour analysis at this region on this leg first. So what did I tell you? Which has created here after the daily demand tap? There was a 4-hour change of character to the upside, and this 4-hour change of character to the upside created what? We started from this change of character to the upside. Anyone? What started from this 4-hour change of character to the upside? Price step this demand zone, daily demand zone. Exactly that bullish momentum. That's the answer. So from this change of character, from this 4-hour change of character to the upside, the bullish momentum started to the upside. And as you can see, price is currently in a bullish trend at this region, creating change of character to the upside, creating inefficient movements to the upside, creating zone respections, demand respections, creating demand chain, breakout structures to the upside, inefficient movements, zone respections. That's our structure on this leg actually. I will just remove your drawing from the screen, sorry. This one too. Okay, let's see the zones. Let's see the breakout structures and let's see the liquidity sweeps. So here was the first change of character on the 4-hour chart to the upside, as you can see, after the daily demand zone mitigation. this was the first change of character. So this was the first sign of the change in the trend, in the actual higher time frame trend, because this was a zone, this was a daily zone, this is a daily demand zone. And daily demand zones can be confirmed by the 4-hour chart. So let's say if there's a change of character on the daily demand zone, on the 4-hour chart, the trend will be confirmed for a reversal. So daily demand zone, price is coming down. This is the 4-hour chart, tap of that daily demand zone, change of character to the upside, confirmed changing the trend on the higher time frame. So if price creates a change of character in the 4-hour chart, on the 4-hour chart, inside of a daily demand, that will be a confirmed change in the higher time frame trend. So confirmed change in the higher time frame trend has happened here at this moment. So our trend on the higher time frame on the 4-hour chart is bearish. Bullish at this region. Okay. As I said, the daily zone can be confirmed by the 4-hour chart. So let's say price just breaks below this zone. That will be also a confirmation for a continuation of the trend. So let's say this is a daily demand zone right here. Price stepped into this zone and not change character to the upside. It just broke below this zone. This is also a confirmation of the continuation of the bearish trend. So daily chart, the daily demand, daily supply can be confirmed on the 4-hour chart. And all time frames are fractal. A 4-hour chart can be confirmed on the 15-minute chart. So if there's a 4-hour zone, it can be confirmed on the 15-minute zone. Let's say there's a 4-hour zone. This is actually a 4-hour zone. This 4-hour zone can be confirmed only on the 15-minute chart. So if price taps this zone, you can only confirm this zone on the 15-minute chart. If price creates a change of character to the downside, that will be a confirmation of the change in the trend. So let's say price taps this zone, taps this 4-hour zone, creates a change of character on the 15-minute chart to the downside. That will be a confirmation of the bearish trend. So the trend will change to bearish at this region. So we can expect a bearish exponential order flow to the downside. But let's say if price taps this zone and creates a break of this zone, that will be a confirmation of this trend that it will continue to be bullish. So 4-hour zone can be confirmed by a 15-minute zone. A 15-minute zone can be confirmed by what? I'm asking you. 1 minute, exactly.
1 minute.
Exactly. A 15-minute zone can be confirmed by a 1-minute change of character / 1-minute break. If a 15-minute zone is being tapped, you can confirm that zone or confirm the actual lower time frame trend by a 1-minute change of character on that 15-minute zone. All time frames are fractal, right? So at this region, our trend is bullish because price has changed character here on the 4-hour chart. So the higher time frame trend at this region is bullish. But let's say if price steps into this supply zone, or it doesn't have to tap into this supply zone. Let's say price creates a break or structure here to the downside and breaks this low to the downside. That will be a 4-hour break or structure to the downside of a daily low. This is a daily low point. So that will be a confirmation of a daily trend again. So there's more likely a daily demand zone at this region, an extreme demand zone. And if price breaks below this daily demand zone, that will be the confirmation of the continuation of the bearish order flow. So you can confirm the daily chart with a 4-hour chart. But inside of these movements, inside of these 4-hour movements, you can just simply confirm the movements on the 15-minute chart. So your chart can be bullish at this region, even though it's bearish on the 4-hour chart currently. It can be bullish at this region because price can actually tap into a 15-minute zone and can confirm that 15-minute zone with a 1-minute change of character. So inside of this 4-hour candle, your trend on the 1-minute chart can be easily bullish. But you have to know the overall higher time frame direction, which is bullish in this case, of course, heading up to this supply zone. So actually, does this make sense to you? You understand how to confirm the zones?
Yes.
Yes.
Okay. So what are the expectations from these zones? What are the expectations from the correlated time frames? What can we expect from price actually here at this region? Since we know that price has changed character here on the 4-hour chart, we know that price is in a bullish trend up to this supply zone, because this is the less recent supply zone, less recent variable supply zone. We've talked about this several times. We are expecting a tap of this supply zone. And knowing the fact that price is bullish on the higher time frame on the 4-hour chart, we can expect this supply tap, and we can expect a reaction on this supply zone. But until this supply tap happens, anything can happen between this price action region and this price action, this supply zone. Anything can happen between these zones. This void will be filled up sooner or later, but anything can happen between these zones. Actually, price can create a change of character here to the upside, create a bullish order flow, create a change of character to the downside, create a bearish order flow, create a bullish order flow, create a bearish order flow, create a bullish order flow, tap this supply. So anything can happen between this supply zone and this price action region. All you have to do is react on the lower time frame. You just have to know the overall higher time frame direction, which is bullish in this case. If you know the higher time frame intention, if you know where price is actually heading, you'll be able to easily trade the lower time frames. We know that price is heading up to this supply zone. Our main target will be this supply zone. We'll be aiming for long trades, right? Those are the main trend trades. We'll be aiming for long trades. So yeah, all you have to do is know the higher time frame intention. All you have to do is know the higher time frame direction actually. So you'll be able to easily trade the lower time frame. Okay, let's see the actual analysis. So as you can see, price has changed character here to the upside. After a change of character, it broke structure here to the upside because that was the less structural high point, less structural low point, break of structure to the upside here. Actually, a higher time frame, change of character here. Liquidity sweep with this movement. As you can see, fill up the inefficient movement here at this region, tap into this demand zone here. After this, price created a liquidity trend line here, created another break of structure here to the upside with body break. Liquidity trend line, as you can see, this liquidity trend line will be swept out, I believe, after the tap of this supply zone. And actually, price is on the way down to create the new higher low. So how does this structure look like on the 4-hour chart? It looks like a low point, higher low point, higher high point, and possible higher low point. After this possible higher high point, possible higher low point, and break. This is how the structure actually looks like on the higher time frame 4-hour chart. So we can expect the formation of a higher low, and we are actually looking for a reversal point somewhere around here, right? Okay, let's just zoom in. This is the 4-hour chart, bigger picture. Let's just zoom in and see the actual current leg. What is this actual current leg doing? Here was a break of structure to the upside with body closure, as you can see on the 4-hour chart. So that's a pretty valid break of structure to the upside. As you can see, this was the last demand zone here, last 4-hour demand zone that has created a break of structure to the upside. This demand zone has been broken, right? This demand zone has been broken, and there was a change of character to the downside actually, and the bearish order flow has been started to the downside on this actual 4-hour leg. But when we know that the actual higher time frame is still bullish. The daily chart, the weekly chart is still bullish, right? Creating a low, high, higher low, higher high, higher low, expectational higher low. Even though the 4-hour chart has changed character here and the trend on the 4-hour chart is bearish at this region, we can expect a reaction on some sort of low point. We can expect a reaction on some sort of demand zone at this region, and we can actually expect a 15-minute change of character here and the continuation of the overall bullish order flow after this supply. Because the higher time frame intentions are bullish, we are expecting this supply to be tapped. So don't let yourself distracted by the noises on the lower time frames. Don't let yourself distracted by the noises on this leg. Just zoom out. Just look at the bigger picture. If you take a look at the bigger picture, you'll see that the actual higher time frame trend in this region is bullish. Of course, the higher time frame trend is still bearish because, as you can see, price has created inefficient movement to the downside and it's on the way up to fill the inefficient movement. So the actual monthly chart is bearish. Of course, it's printing the new lower high. Because as you can see, this is the monthly structure, high, low, lower high, and expectational lower low. This is the monthly. But on the 4-hour chart, on the weekly chart, and on the daily chart, the structure is bullish at this region and it's printing the new higher low. So these timeframes are correlated. These timeframes are fractal. All you have to do is understand the actual trend. All you have to do is understand the trend on every single time frame. But if you understand the trend on every single time frame, you'll be able to trade the lower time frame. Because if you don't know the higher time frame intention, if you don't know the higher time frame trend, the 1-minute chart will be just a noise for you. The 1-minute chart is noisy. You can't just simply understand the 1-minute chart without the context of the higher time frame chart. Okay, so just zoom out before you make your analysis. Just zoom out before you trade and actually see the higher time frame intentions. And currently, let's just continue the overall 4-hour analysis. So there was a 15-minute reaction at this region. I don't know if this is the correct 15-minute zone, but prices reacted on a 15-minute extreme zone at this region. As you can see, there was a reversal to the upside, and prices tapped this 4-hour supply zone at this region. This was the last recent supply zone, last recent 4-hour supply zone that has created a vehicle structure to the downside. Here with this movement and swap liquidity to the downside. Here, this was double bottoms, as you can see, first bottom, second bottom, liquidity sweep, breakout structure, top of the demand. So this was actually pretty valid supply zone, pretty valid 4-hour supply zone, but this will be broken. Sooner or later, this supply will be broken. Price is actually looking for a demand tap. Price is waiting for a demand to be tapped and a reaction on that demand zone, and it's waiting for more fuel to be added to price to actually break above this supply zone, break above the structural high point, and tap this higher time frame supply zone. Because the trend is still bullish at this region, and it's printing the new higher low.
Sorry, Marcel.
Yeah.
Also, you can see that about the supply zone, price created a beautiful trend line liquidity.
About this, yeah.
Yes.
Sorry, I couldn't draw. Of course, there's a liquidity too. And of course, there's more liquidity in the form of double taps. As you can see, here's a perfect liquidity line. And this liquidity has been built up for the upper supply zone. Every single liquidity is leading up to the supply zone. Of course, there's liquidity on the downside too. So there's downside demand liquidity here. But this liquidity is being built up for the upcoming short. So there's a low chance that price will reverse in the middle of nowhere here, reverse in the middle of nowhere, and sweep the actual liquidity line on the downside when it's bullish. So what can be expected when price is bullish? If price is bullish and we have upside liquidity, you can expect the upside liquidity to be swept. We can expect this upside liquidity to be swept and tap off the supply zone. And when price sweeps the upside liquidity and taps the supply zone and changes character here on that supply zone, so the actual change in the trend, the actual change, higher time frame intention change is being happen, now you can expect the downside liquidity to be swept. It's in a bullish trend, liquidity on the upside, bullish trend, upside liquidity sweep, reversal, change in the trend has been changed to bearish, downside liquidity sweep. And overall, this liquidity lines up with our higher time frame monthly structure, because this liquidity is leading up to this supply zone. The monthly structure is waiting to be printed a new lower high, liquidity on the upside, sweep of that liquidity, tap of this supply, downside liquidity, print the new lower low, breakout structure, downside liquidity sweep, monthly structure is being continued. So let me just zoom back in. So what can we expect here at this price action region? We can see the prices strongly reacting on this supply zone. As you can see, strong reaction on this supply zone, couldn't break above this supply zone, tried several times, but after the 1, 2, 3, 4, 5, fifth attempt, prices failed to break above and created a huge inversion movement to the upside. So what can we actually expect from price at this region? We will have to switch to the lower time frame, and we'll have to find a good demand zone on this region on the extreme of the leg. Or maybe we'll be able to find some demand region at this lower region, because there's liquidity here, as you can see, and price is currently in a bearish trend on this 4-hour leg. So if there's a bearish trend on this current 4-hour leg, we can expect the sweep of the most recent liquidity, the last recent liquidity, which is this one. If the last recent liquidity is being swept and the current leg is bearish, liquidity is being swept, tap of some sort of demand down here after the liquidity sweep, it will be able to reverse price and continue the actual overall daily trend to the upside. You can just take a look at this. Upside movement, downside movement, upside movement, downside movement. This downside movement is currently bearish. The upside overall high time structure is bullish. Liquidity built up for some deeper demand region, printing the new higher low, sweep of that liquidity, possible reversal on this zone, continuation of the bullish movement. So everything is moved by liquidity. All you have to do is understand the structure and combine it with liquidity. Okay, so what are the actual expectations from price at this region now? First, we can expect some 15-minute demand tap at this region, change of character on this demand zone. If there's a change of character and good entry criteria, just entering a long trade. Second, mark out a new deeper demand region, which lines up with liquidity, sweep of that liquidity, tap of this demand zone, continuation, bullish movement to the upside. These are the possible expectations for the higher time frame chart. Let's just switch to the 15-minute chart. And let's see how the structure actually looks like. Can you just follow me? Can you follow me, guys?
Yes.
Yes, sir.
Yeah.
Yes, sir, yes.
Is it all understandable?
Yes, it is.
Yes.
Okay, just let me know if you don't understand anything. Okay. So 50-minute chart. Price has stepped into the supply zone, right? This was the 4-hour valuable supply zone. Here are the 5 attempts, as you can see, first, second, third, fourth, fifth attempt to break above the supply, couldn't break above the supply. Inefficient movement to the downside. This is the huge inefficient 1 4-hour candle on the 4-hour chart, of course. So what can we see on this chart? We can see, let me just remove this drawing. We can see that here's an extreme of the movement here at this region. And this movement has changed character on the 50-minute chart here to the upside, as you can see, change of character to the upside. 4-hour demand tap, this was the 4-hour demand tap, which has created a new breakout structure to the upside here. This was a 4-hour demand that has caused the new breakout structure to the upside. This demand is being tapped here, 50-minute change of character to the upside here. Liquidity is building up for this zone. Liquidity is being swept at this zone and down to this zone, as you can see. So this actually looks like a perfect textbook setup. 4-hour zone tap, 15-minute change of character. Liquidity is being built up. Liquidity is being swept. The zone is about to be tapped. What are we waiting on this zone? Another confirmation, right? A 1-minute change of character on this zone. If a 1-minute change of character, and let's say a good entry criteria happens on this zone also, so let's say it creates a change of character here to the upside, liquidity for this zone, then we'll be able to enter on this trade. This will be a perfect textbook example for a continuation of the bullish trend. Just once again, 4-hour trap, 4-hour tap, strong reaction, V-shape recovery, as you can see. Okay, let's just use the criteria tracker because we can use the criteria tracker in this region. Just quickly open it, sorry. Entry criteria. Okay, perfect. Higher time frame zone mitigation. X. Inefficient movement. Here's an inefficient movement. V-shape recovery. X. Strong reaction on the zone, which means V-shape recovery. X happened, as you can see. Top of this 4-hour zone, immediate reaction and strong reaction. So there's an X. Just delete this. X. Change of character, breakout structure, flip. Change of character has happened. Here, as you can see, perfect change of character. X, liquidity sweep. Liquidity is being swept at this region perfectly, as you can see. X, liquidity creation. Liquidity creation, which is being swept right now. X, price isn't coming from an unmitigated zone. That's false because price is coming from a 4-hour supply zone. Price has mitigated a 4-hour supply zone and coming from that zone. So there's not an X. Pro trend X because the pro trend on the higher time frame is bullish. And we are following the pro trend. And we are expecting a new higher low, which could be this one. We are expecting a new higher low. And this could be the new higher low. And this could be a really, really good entry opportunity for the swing trades. So we can actually, if we can find a good entry opportunity at this region, we can target the higher time frame supply at this region with our final targets. So this could be a really, really, really good entry opportunity at this region because this is lines up with our pro trend. So this is an X for this one too. 7 criteria zone. Price isn't coming from an unmitigated zone. That's missing, but we are waiting for a confirmation entry. So that will be fixed, right? That will be fixed. This is the higher time frame criteria tracker. We were able to track another criteria if price reaches this zone. If price reaches this zone, we'll be able to track the lower time frame criteria. So let's say, let me just switch to the 1-minute chart quickly. We've tracked the higher time frame criteria. Here's the lower time frame. Second zone, higher time frame zone mitigation. That will be an X2 because price is mitigating a 50-minute zone. So that's an X. Inefficiency, let's say after the mitigation, it creates inefficient movement to the upside. So that will be an X2. Strong reaction on the zone. Let's say it creates a strong reaction X. Change of character. Let's say it creates a change of character here after the tap. That's an X. Liquidity sweep. Let's say it sweeps liquidity. X creation. Let's say it creates liquidity. And it's not coming from unmitigated zone. So I mean, price is creating a change of character to the upside, and reverses in the middle of nowhere here. Here's a supply, here's a supply, and it reverses in between two supply zones, so it isn't coming from an unmitigated zone. So this could have been a perfect entry opportunity. Both of the higher time frame has been confirmed by the criteria tracker here. This has been confirmed, as you can see, with 7 criteria. The higher time frame and the lower time frame can be confirmed with the criteria tracker too. And if all of this happens, that will be a perfect textbook setup. That will be a perfect textbook example for the continuation. And that will be a perfect textbook setup for the criteria tracker, of course. So actually, that's how can you track your criteria with using the criteria tracker. Make sense?
Absolutely.
Yes.
Okay, hey mate, I already heard about the V-shape recovery last webinars. I didn't understand the concept. If you don't mind, please make a video. Actually, that doesn't really need a video. The V-shape recovery is just basically the name of the concept. Price is coming down to a zone. Let's see, this is a 15-minute zone. Taps the zone, and immediate reaction after the zone tap. V-shape recovery. Tapping the zone, reacting on the zone, creating a V-shape. That's all. This concept is really easy, just a name. You can just actually say this, it's a strong reaction, not a V-shape recovery. Both are the same. Why don't you use the zone tracker for that zone? You can use the zone tracker too. You can come from your zones and the criteria and criteria both ways. If you'd like to use the zone tracker too, that will be another confirmation that it will be valid. So yeah, the higher time frame has been confirmed with the entry criteria tracker, as you can see. All of this has been confirmed on the higher time frame. We are waiting for a lower time frame confirmation, but let's just switch back to the 15-minute chart and continue the analysis. I didn't understand the strong reaction of a zone to validate a new created zone. Mario, what's your question here? What's unclear for you? Sorry.
Hey,
hey, ma'am.
In the criteria sheet,
yeah,
we have one criteria that says strong reaction on the zone.
That's basically a V-shape. That's a V-shape recovery that I just showed you. This is a strong reaction.
So, but that only applies to the changes of character and continuation setups. It doesn't apply to flips, or it does.
Okay, let me just show you what do I mean under this strong reaction. So let's say here's a zone. Price is coming down to mitigate this zone, taps this zone, and it ranges inside of this zone and can't find the good decision to go. So the buyers and the sellers are battling in this zone. If this happens, it won't be a strong reaction. If price is coming down to mitigate this zone, taps this zone, and immediately reverses, this will be a strong reaction. This is not a strong reaction. If it ranges inside of this zone, and after the range, it finally decides its direction. This is not a strong reaction. This is a strong V-shape recovery. This is a low reaction, low volume reaction. This is a confirmation. This is not a confirmation. This is a criteria. This is not a criteria. Okay?
Okay, got it. Thanks.
Of course.
Hey, Martha.
Hey.
Can I ask a question?
Of course.
Now, currently what you said, we are waiting for a 1-minute choke inside that 15-minute choke, right? But the structure has already moved so far from there, creating multiple breakout structures in 15-minute chart.
Sorry, can you just repeat, please?
The demand currently we are waiting for.
Yeah.
But the price moved so far away from that origin of the choke and created multiple breakout structure to the upside. And now it's coming back. So is it still valid?
Yeah. We are still waiting for a confirmation. If price can give us a confirmation here on this zone, we'll be able to enter. It's still the origin of the change of character. It's still the origin of this huge inefficient movement to the upside. It's still the origin of the actual bullish order flow to the upside that has caused the tap of this supply zone. Of course, there was a breakout structure here to the upside, but still this is the origin of the overall change of character. And this origin of the change of character has happened after a 4-hour zone tap. And after a 4 hours on tap, it created a huge V-shape recovery, change of character to the upside. And this could be our confirmation for the continuation of the overall bullish trend. As you can see from this demand zone, prices created this breakout structure to the upside, tap of this demand zone, confirmation of this demand zone because prices change character on several places, confirmation of this demand zone, coming back down to this 50-minute demand zone that has confirmed the 4 hour zone, waiting for a one minute confirmation. And after the 1 minute confirmation, all of the time frames will be confirmed because the 4 hour is confirmed by this breakout structure to the upside. The 15-minute is confirmed by this change of character on several places to the upside. And we are waiting for a 1 minute confirmation. So all of the time frames will be confirmed. 4 hour confirmed, 15-minute confirmed, 1 minute is waiting to be confirmed. If it confirmed, we'll be able to enter and ride the exponential long trend and ride the exponential higher time frame main order flow. Okay.
Yes, sir.
Is zone break, you get another. So yeah, exactly. If this zone breaks, if this 15-minute zone breaks, we will get another supply zone and we'll be able to find another demand zone somewhere around here that lines up with liquidity somewhere around here. If this happens, we'll be able to ride the exponential short order flow to the downside to some deeper demand region at this point. All you have to do is react on this zone, but I will talk about this later. Let me just finish the analysis. If 15-minute demand not mitigate, even can we trade 15-minute supply? What? If 15-minute demand not mitigate, even we can trade 15-minute supply demand in 1 minute change of character. That's safer to wait for a 15-minute zone tap. That's the best possible scenario that will happen. If you're waiting for a 15-minute zone tap and the 1 minute change of character on the 15-minute zone, that's the highest probability setup. So if you're insecure about your direction, if you're insecure about your trades, just simply wait for a 15-minute zone tap. You can sell that zone because sellers took the control from buyers. What do you mean? You can sell down to this zone, of course. Yeah. Price exchange character here to the downside, or even here, and start with a bearish order flow down to this demand zone. Of course, you'll be able to ride, or you are being able to ride the exponential short order flow down to this demand zone. You can sell down to this demand zone because sellers are in control at this region. But you have to know that the higher time frame direction is bullish, and more likely buyers will be able to reverse price here, and buyers will be controlled at this region. So you can actually ride the exponential short order flow down to this demand zone, and you can expect a reaction on this demand zone, and you can expect a demand continuation and demand control at this region. Because as I showed you several times, the higher time frame order flow is bullish, as you can see. Buyers in control, sellers took over control here. Demand tap, buyers are in control again, change character here, sellers took over control, and we can expect a confirmation on this 15-minute zone too. And as I said, all of the time frames will be confirmed. 4 hour confirmed, 15-minute confirmed, waiting for a 1 minute confirmation. It's a battle between sellers and buyers, but buyers are stronger because, as you can see, the overall trend is bullish. So on the higher time frame movements, on the higher time frame main movements, buyers are in control. Sellers can take over control at this region, but buyers are confirming the trend, confirming the direction with this movement. Sellers can reverse the trend a little bit and confirm this zone again. Buyers can confirm this zone and continuation of the overall bullish order flow. And after all of the time frames are being confirmed, so the 4 hour time frame is being confirmed, 15 minutes is being confirmed, 1 minute is being confirmed, we can expect a new higher high to be created on the higher time frame. Because as you can see, this is what happened right here actually. Here was a 4 hour zone, prices stepped into this 4 hour zone. Price change character here and here to the upside on the 15-minute chart. So let me just draw it with zone examples. Here's the 4 hour zone, price change character here to the upside on the 15-minute chart. So 15-minute change of character has happened. 15-minute zone, this was a 15-minute zone right here. That has created a change of character here. I believe 15-minute zone was confirmed also because, as you can see, here was a 15-minute trend. On the 15-minute zone, after a 4 hour tap, we are waiting for a 1 minute confirmation here. 1 minute confirmation has been happened here, as you can see. That was some sort of 1 minute zone, and the continuation of the overall bullish order flow, which was leading to a swing high break of structure here at this region. So as you can see, the same thing is happening right now. Here, 4 hour confirmation happened. 15-minute confirmation here happened. 1 minute confirmation here happened. New swing break to the upside with this movement. The same thing is happening again. 4 hour zone, tap of that 4 hour zone, confirmation happened. 15-minute change of character, confirmation happened. Waiting for a tap of that 15-minute zone, waiting for a 1 minute change of character on that zone, 1 minute confirmation. And if the confirmation happens, the new higher high will be formed on the higher time frame. Each time frame confirms another time frame. Just take a look at this pattern. Confirmation, 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 higher high. Confirmation, confirmation, expectational confirmation, expectational higher high. This is how the market is being moved. This is how it actually moves. Make sense for you? Can you follow me?
Absolutely.
Yes. Yes.
Perfect. I have another question about reading the 1 minute structure after 15-minute zone tap. Now we have a reaction from 5 minute. Can we consider this demand voyager in just a 15-minute? Let me just check the 5-minute structure first. There was a 5-minute demand zone. I believe this will be liquidity. This will be liquidity more likely because, as you can see, first top, first bottom, second bottom. This could be liquidity for the 15-minute extreme. Basically, the 15-minute chart and the 5-minute chart are the same chart. 5 minute is just a confirmation or refinement of the 15-minute chart. So you can actually expect the 15-minute zones to be tapped and not the 5-minute zones. 5-minute zone is for the confirmation and refinement of the 15-minute chart. Okay. Let me just continue because the session, yeah.
Remember once you said in the Discord that you will be discussing about the week high and week low points, that concept.
Yeah, that will be happen. That will be hosted.
Okay, okay.
So let's just see what can we expect here. Just finish the analysis because the session will open in 4 minutes and I have to send the markups too. So let's just finish the analysis. So as you can see, price has changed character here to the downside of the 15-minute chart and started the bearish order flow. Price has reversed here before tapping into a 15-minute zone, 15-minute extreme zone, 15-minute valuable zone. So it reversed before tapping into the zone. So what can we actually expect from this price section? We can expect the tap of this less recent 15-minute supply zone up here after the 15-minute supply tap at this region. Sorry, we can expect a 1 minute reversal on this 15-minute zone. 1 minute reversal, 1 minute change of character happens here. We'll be able to ride the expectational order flow down to this demand zone. If this demand zone is being tapped, we can wait for a 1 minute confirmation here, good entry criteria, and we can up in a long trade and ride the expectational long order flow. Right? This is our plan for today. This looks perfectly actually. Here's liquidity 2 built up for this zone. Perfect zone that was leading to a sweep here, leading to a breakout structure here. So this is a valuable and valid supply zone, waiting for a tap of this supply zone, 1 minute change of character, expectational order flow down to this demand zone. We'll be able to ride the shorts down to this demand zone. Tap of this zone, change of character on this zone, expectational order flow riding to the upside. Basically, that's the plan for today. Let's just see the 1 minute chart and let's just see this one right here. And the question was good. Actually, I don't know who has this demand zone. I believe Kish, were you the one who's asking this? Doesn't really matter. The question was good. And the question was,
there's red folder USD in 2 minutes.
Yeah. There will be red folder news.
Okay.
So of course that's the lunchtime supply, but you can wait for a confirmation on this zone. You can simply wait for a confirmation, or if the confirmation of this zone does not happen, there will be a sweep of this liquidity and step of this supply zone up here. I'm just breaking down the 1 minute chart. Just wait a minute. I'll remove this drawing from the screen, please. So the question was good. We can expect a reaction on this demand zone, but this demand zone will be liquidity for the 50-minute zone down here. And price can actually reverse on this 5-minute demand zone. And as you can see, price is reversing on this 5-minute demand zone. And if price can reverse on this 5-minute demand zone, we'll be able to ride the expectation order flow up to this supply zone. So we can ping pong between zones. Changing the trend, confirmation here, ride the expectation bullish order flow here. That will be considered as risky because there's liquidity, of course, but you can actually do this. If price taps this supply zone and creates a change of character here to the downside, you'll be able to ride the expectation order flow down to this demand zone. If price breaks above this supply zone, taps this upper supply zone here sweeps the liquidity and creates confirmation here, you'll be able to write the expectation order flow down to this demand zone. If this demand zone is being tapped, you'll be able to write the expectation order flow after the confirmation to the upside. So all you have to do is wait for zone reactions. Price is reacting on a 5-minute zone now. If it confirms this zone, we'll be able to write the expectation order flow to up here. If this zone is being confirmed, we'll be able to write the expectation order flow to down here. All about reaction. Is it not this supply just liquidity for upper one? Yeah, that could be liquidity because this is a lunchtime zone. This is a lunchtime zone, as you can see, and this is not a lunchtime zone. So this zone could be liquidity for the upper zone, and there's triple tap. So this one will be liquidity, I believe. All you have to do is react. Okay, guys. The session is open right now. I will send you the markups. Sorry, I hope this session was helpful for you. And you could understand the actual higher time frame directions. You could understand the actual intentions of price. So let me know how you like this session.
Fantastic, bro. Thank you.
Guys, if you are looking for high valuable zones, either of the 15-minute or the 4-hour chart or any chart, you can use the criteria tracker as well to find the best zones.
Yeah, guys. Sorry. Just one more thing before we finish this session. I will be hosting a backtesting session on Sunday again. That will be a bonus session on Sunday, because as you may know, Sunday sessions are bi-weekly, so they happen to be hosted on every second Sunday. And on last Sunday there was a backtesting session, but I will host a bonus session on this Sunday too, because I saw that that was really helpful for you guys, so I will just host it. And yeah, thank you again for being here. And I wish you guys a beautiful day. Wish you guys a profitable day. And just wait for a zone reaction. Wait for the best possibility setups. Wait for the best confirmations, and wait and play safely. Just sit on your hands until you see something clear. Okay?
Thank you, buddy.
For your time, dude.
Okay, guys. Thank you for being here. Wish you a beautiful day. We'll be sending a markup soon.
Have a nice day, guys. Take care.
Have a nice day, guys. Take care. And the recording is on. Welcome, everyone. This will be today's backtesting session. It's Sunday again, so I just jump right into it. So, question, guys. What do you have to do every single time before we start the backtesting session? The answer is on my screen. What do we have to do?
Check out news.
Check out the news, exactly. We have to see the news. Even if you're backtesting, you have to check the news. So let's just start it. Oh, sorry, we didn't choose the day. Let me just generate a number from, for example, from the 27th of February to the 27th of March. Random number generator. Okay. From 0 to 27. Okay. 11th of March. Is that a trading day? Let's see. 11th of, yeah, that's a Friday. So we will backtest the Friday. Sorry, why did I close this? So let's see the 11th of March on Forex Factory. And as you can see, on this day, only one high impact news will be released, or has been released actually at 4 p.m. But it doesn't really affect our trading session because it's in the afternoon. So we don't really care about this high impact news. So let's just start the session. Just one more feedback. If you can hear me well, see my screen well, everything is going fine, perfectly. Last feedback, perfect, okay.
Yes,
so let's just start the analysis on the 4-hour chart, but actually let's just replay price first to the 11th of March, which is right here. Okay, 11th of March, 1 hour before New York session starts, and let's switch to the 4-hour chart. So what can we actually see on the 4-hour chart? We can see that price is in a bear trend, right? Price is reacting on this daily demand zone, on this daily demand level. We've talked about this daily demand level several times in the previous back-testing sessions, webinars, recap videos, markups, case studies, etc., etc. In every single content, we talk about this demand level. But let me just show you this demand level once again. It was the extreme of the movement on the daily chart, as you can see. Here's that daily demand level that has caused the inefficient movement to the upside, and this was the origin of the whole bullish order flow to the upside, which was leading to a break of structure to the upside here, as you can see. So this is our extreme of the movement. This is the origin of the whole bullish movement. Switching back to the 4-hour chart, you will see that price is reacting on this daily demand level, as you can see. That this zone and immediately reversed to the upside, created a 4-hour V-shape recovery, as you can see, and created a change of character on the 4-hour chart as well. Here, this is the 4-hour change of character line. This is a 4-hour change of character. I will just type it here for the clarity. Okay, change of character to the upside, perfect. What else we can see? We can see that price is created. Daylight saving New York began. Yeah. The session is from 2 p.m. to 5 p.m. at this region. So we can see that price is created inefficient push to the upside from this region, from this 4-hour demand region, as you can see, and the origin of this 4-hour inefficient push was this demand level right here, because as you can see, the inefficiency has started from this candle and not from this candle. Between this candle and this candle, there's no inefficiency. Between this candle and this candle, there's inefficiency between the wicks, as you can see. So this is our inefficient structure breaking. Here's the break of structure, liquidity sweeping level. Okay, what else we can see? We can see that price is reacting on some sort of supply zone in this region, and that supply zone was actually this supply level right here. I will just extend the zone. There was a reaction on this supply level, as you can see. Actually, this is a valid supply level because it created a sweep of this liquidity, a small inefficient movement, maybe in the 15-minute chart and the 4-hour chart too, and break of structure here. So basically, this is a valid supply level inside of a liquidity pool. So this is a liquidity pool also, sorry. Okay, I'm back. So this is a liquidity pool, and as you can see, price is reacted on this supply level. And after the reaction, it just swept more liquidity to the upside at this region because it created double taps, equal taps right here, first tap, second tap, and this movement swept the liquidity to the upside. Okay, that's our current outlook on the 4-hour chart. What else can we see? We can see that price did not change character on the 4-hour chart on the way down. So this is one inefficient movement to the upside, and this counter trend movement didn't change character here to the downside, but I believe it changed character on the 15-minute chart. So there was a 15-minute change of character somewhere around here. Okay, I believe that's all we can tell about the 4-hour chart. And actually, we can spot this 4-hour supply zone up here, but we've talked about this supply level several times in the previous sessions, recap videos, etc., etc. And this supply level has liquidity, as you can see. Here's a perfect liquidity built up for the supply level. This supply level was actually broke the daily demand level and the daily structural level. This is a daily structural low, swing low, and this movement has broke below this daily structural low, as you can see. This wasn't a break of structure. This wasn't a break of structure because this movement, this gap right here was caused by the Ukrainian-Russian war. And this gap was caused by that war. So basically, this doesn't count as a break of structure. The real break of structure, real swing break of structure was caused by this supply level up here with huge inefficient movement to the downside, as you can see. And it also has liquidity right here. So this is a pretty valid supply, and we are waiting for this supply to be tapped currently today. Okay. So that's enough of the 4-hour chart. Let's just switch to the 15-minute chart. And let's see what we can see on the 15-minute chart. So here was the 4-hour supply reaction. As you can see, here was a reaction. This was a liquidity sweeping movement on a 4-hour chart. This was a liquidity being swept. This is a liquidity sweep. And after this, as I said, the 15-minute chart has changed character here to the downside because this was the last 15-minute demand level that has pushed price new heights, swept the liquidity, and price immediately changed character here on the 15-minute chart after the liquidity sweeping movement on the 4-hour chart, and also changed character here to the downside because this was the last swing low point on the 15-minute. So yeah, basically, our main trend has changed into bearish on the 15-minute chart. So our main trend is bearish on the 15-minute chart. And let's talk about the expectations, what we can expect from this current price action. We can actually expect the top of this 4-hour demand level right here. Let me just switch back to the 4-hour chart, which has caused the inefficient movement to the upside here, as you can see. So we can actually expect the top of this 4-hour demand level because it's pretty close, as you can see. Maybe in this session or the Monday session, we can expect the top of this demand level, this daily demand level. Okay, what else can we see on the 15-minute chart? Let me just check the chat because so some message. Money gap, Indian index, how consider gap mean? Okay. So what can we see on the 15-minute chart on this current leg? I'll just remove the zoom. So we can see that price has started a bearish movement, bearish order flow here to the downside with huge inefficient push. And we can see that price has built up liquidity at this region. So basically, this is a perfect liquidity line with efficient movements. So all of these movements are efficient, as you can see. And this was a liquidity building up movement right here, which has been swept by this movement to the upside. And 50-minute/5-minute demand level, supply level has been tapped right here, as you can see. So here was a supply reaction. And after the supply reaction, prices changed character to the downside and broke below the last recent demand level, 50-minute demand level right here. Okay, we can't actually know if it was just a liquidity sweep to the downside or break of this demand level, because as you can see, the 50-minute candle did not close below this demand level. So this candle just wicked below this demand level. So we could actually consider this a liquidity sweeping movement, but there was no real liquidity at this region. So I believe this was a break of this demand zone, considering the 15-minute trend and considering that we are heading down to this 4-hour demand zone. And considering that prices recently swept the liquidity to the upside and tapped into this supply level, we can consider this as a break of this demand zone, but we have to see. Okay, switch to the 15-minute chart. Actually, let's just mark out supply level at this region. This was the origin of the break, the 15-minute origin of the break, and switch to the 5-minute chart. And actually, let's see. Sorry, let's just mark out more demand levels. You can see that here's another unmitigated demand level, which has almost been tapped at this region, as you can see, but this wasn't a tap. But as you can see, this demand level is part of the liquidity. Here's double bottoms, equal bottoms at this region. First bottom, second bottom. So this demand zone will be liquidated, and this is liquidity built up for the 4-hour zone down here. So this is one more confluence for the break of this demand zone. This is one more confluence for the continuation of the short trends, and this is one more confluence for the expectational top of this 4-hour demand zone down here. Okay, can we see something else here? I believe no. That's all from the 15-minute chart. I will just mark the liquidity right here. And basically, that's all from the 15-minute chart. I will mark the liquidity sweep 2. Liquidity XXX being swept. Perfect. So that's the current outlook on the 15-minute chart. Let's just switch to the 5-minute chart and let's see what we have here. Let's just refine this zone. And as you can see, we can perfectly refine this zone to this level on the 5-minute chart, because all of these movements above this 5-minute supply level are efficient. So these candles are efficient. There's no inefficiency on these candles. There's no real inefficiency. The real inefficiency has started from this 5-minute supply level here, as you can see. Okay. Let me just see if we can refine this 15-minute demand zone 2. We can refine it, but it actually doesn't really matter because this will be broken sooner or later, I believe. That's our refinement. Okay, what else can we see on the 5-minute chart? We can see that we have liquidity right here too. So this is one more confluence for the upcoming shorts. I will just mark it as here like a liquidity line. And basically that's all for the higher time frame. That's all for the 15-minute chart. That's all for the 4-hour chart. That's all for the 5-minute chart. Let's build a plan. Let's build a narrative. As I always say, as I always tell you, that you have to build a narrative before you start trading. You always have to build a narrative before every single trading session, before every single backtesting session. Because without a plan for that specific session, without a narrative for that specific session, you'll be lost. You'll be blindly trading without a plan. So that's why you have to build a plan for that specific session. And that's what we are doing right now. So I would just ask you that what can we do in this scenario? What will be your plan? Please feel free to use your microphone now. What will be the plan in this specific scenario?
Waiting for demand or supply tap and waiting for 1-minute charge.
Yeah, which will be the best possibility. the supply tab or the demand tab, considering the trend, considering every single confluence.
I'm waiting for the sub.
Sorry?
Go, Marcel. Oh, sorry. Go.
Waiting for the
Whoever
sub-
said that first,
sub-
go.
Just one, only one at a time, please.
Yeah.
Now we've started. Someone started.
All right, so look, right here, I'm trying to see if I want to see if this is let me look on my chart. So why are you not considering this demand supply here as your flip zone, since price, you know, didn't break below that initial demand level? Would that also be considered one potential place to see
Actually, yeah. That could be considered a supply level, and that could be considered as a actual flip, because as you can see, this was the last recent demand level, but this isn't a real demand level because this couldn't push price in new highs. So there's no breakout structure on the 5-minute chart. There's no, literally this demand zone did nothing, right? Nothing than inefficiency. There's only inefficiency that has been started from this demand level. And yeah, actually price is reacting on this demand level at this candle. So basically this is a buy to sell candle, but we don't really care about buy to sell candles because those buy to sell candles could be worthless, but there's a chance that price will react on this buy to sell candle.
Okay, yeah.
Let's just test it out. So basically we have two supply levels. I'm expecting the top of this higher supply level, and actually the top of this higher supply level could happen because this supply here, the flip nothing, because this wasn't the demand zone. So the flip didn't really happen. But as I said, there could be a possibility that price will react on this supply level instead of this one. We just have to monitor price. So I'm building a plan. Our plan for this, sorry, there's a message in the chat, for our demand tab and then wait for a break of the 50-minute. Yeah, that could be a good plan. But this forward demand level is too far away. We can actually trade the order flow down to this demand level. So our main 50-minute, 5-minute, 1-minute order flow at this region is bearish. Our 4-hour order flow is bullish. So we are trading the lower time frame main trend down to this demand level. And after the demand tab, we can, before the demand tab, we can ride the expectation on short order flow down to this demand level. And after demand tab, this 4-hour demand tab, we can wait for a 50-minute change of character. And after a 50-minute change of character, we can ride the long expectation order flow to the upside. And why are we waiting for a 50-minute change of character inside of this 4-hour zone?
Because that's the only way that it's sustainable versus a 1-minute chart.
Yeah, exactly. Inside of 4-hour zone, we always have to wait for a 50-minute change of character. Without a 50-minute change of character, that 4-hour zone top will be unvaluable. Okay, so our plan here basically is that we are waiting for a tap of either of this zone or either of this zone, and waiting for a change of character, waiting for a 1-minute change of character on these zones. If the 1-minute change of character happens on these supply levels, we'll be able to ride the expectation short order flow to the downside. But if, let's say, the break of these zones happen and price creates a breakout structure to the upside, we have to build another narrative. We have to build another plan. But that's too far away. Let's just react on these zones. As I always say, you just have to react and you don't have to predict shit, right? So let's just switch to the 1-minute chart and let's see what we got here. The upper one is the buy to sell candle. The downer one is the original supply. So let me just close these zones a little bit because it looks better. So session starts in 1 minute. And let's see what happens. And as I said, we don't know yet if this was just a liquidity sweeping movement to the downside or a break of this 50-minute demand level. We'll be able to know if price reacts on this zone or this zone. If price creates a change of character on these zones, we'll know that this was a break of this demand zone and not just a liquidity sweeping movement. If price aggressively breaks through these supply levels here, we'll know that this was just a liquidity sweeping movement to the downside. So all we have to do is react right now. Did we check in the news? Yeah. Yes, we did. So let's see what happens. Okay, it's going up, building liquidity. Okay, the first decisional buy to sell candle has been tapped. As you can see, prices built up loads of liquidity at this region, loads of liquidity at this region. So basically, this is just the whole liquidity line built up for the upcoming short. So this is the first sign that this wasn't a liquidity sweep, because after a liquidity sweeping movement, price usually aggressively reverses. So after a liquidity sweeping movement, price usually reverses with a high volume movement to the upside because all of the orders have been converted into buys. All of the short orders, all of the previous long orders at this region, and all of the previous stop losses have been triggered as region. And all of the stop losses have been converted into new buy orders. So price usually reacts aggressively and with high volume after the liquidity sweeping movements. As you can see, at this region, we can't really find high volume movements. So this is not high volume. So we can know that this wasn't a liquidity sweep. Let's just wait for a change of character. Okay, price is reacting, still reacting. Okay, and aggressive movement. Who did say this was a valid supply zone?
Nick,
Me.
I guess, yeah.
Nicholas?
Yes, sir.
Yeah, you were right. This buy to sell candle was the right supply zone right here. Because as you can see, prices changed character here to the downside and reacted aggressively on this supply level. Here's a change of character to the downside. Basically, here's a change of character because this was the last demand level right here that has pushed price to new highs and was causing the tap of the actual supply level. So basically, a change of character has happened here to the downside, as you can see. And the origin of the change of character, let me just play a few more candles. Yeah, the origin of the change of character.
That just proves how important it is to not try to be right and perfect about everything and just make sure you have multiple highly probable regions, you know?
Yeah, basically all you have to do is react. You can have multiple regions, you can have multiple supply levels, multiple demand levels. You can draw all of your charts with supply and demand levels, but all you have to do is react on those levels on the 1 minute chart. If there's a reaction on that, either of one of these zones, you'll be able to enter in the trade. That's all. You don't have to predict which zone will hold. You don't have to predict which zone will be able to hold price. All you have to do is react on those zones.
That's a big note. It took myself, and I'm sure plenty of other people, a long time to realize that because everybody's too focused on being perfect or right. It's a waste of time.
Yeah, you don't have to be perfect. All you have to do is just react. So yeah, let's just continue. And as you can see, this is a strong change of character to the downside because it changed character on several places. Here's the first change of character. Here's the second change of character. Here's the third change of character. So basically, this is a really, really strong change of character after the higher time frame supply reaction at this region. So in this case, I will be safely setting an order limit on this supply level. Let's just see the first limit order.
A flip in there too, huh?
And our initial target point could be this 50-minute demand level, or we could aim for the swing 4-hour demand level because this 50-minute demand level is part of the liquidity. If this demand zone is being tapped, I believe it will be broken because the higher time frame intentions, I mean, the lower higher time frame intention, which is the 5-minute and 50-minute, is leading down to the 4-hour demand zone. And this liquidity line right here is one more confluence for the shorts, one more confluence for this demand to be tapped. So we could aim for the 50-minute zone and we could aim for the 4-hour zone. Actually, we can take partials at this region, but I'm not taking partials. So I will be aiming for this 4-hour zone. Okay, let's see what happens. Okay, that was almost a tap. And prices broke structure to the downside. So there's a sub-break of structure to the downside, as you can see. And this sub-break of structure has been caused by this candle right here, actually. I'll be keeping the first order. Okay. This is actually a pretty funny scenario because if price forms a liquidity for this zone, so if there will be a liquidity, we'll be able to take an order limit on this zone too, because there was an inefficient push to the downside, there was an inefficient break of structure to the downside. But if there will be no liquidity for this zone, that means that this zone will be liquidated. And this zone will be liquidity for this upper origin of the change of character zone.
I like that a lot. It's awesome.
Okay. So if there will be liquidity, we'll be able to take a limit order on the decisional zone. Because as I always say, the character changing, the origin of the change of character will be always stronger than the decisional zone, right? But as I told you in the last recent session, in the previous session, I believe, or the session before the previous session, as I told you in that session, if there's a liquidity for a zone, that zone will be played out perfectly. But if there's no liquidity for a zone, that zone will be the liquidity for the extreme one. So this is the perfect scenario for this. This is literally the textbook example for this. If price will create liquidity for this zone, and there will be liquidity, this zone will be able to hold price. But if there's no liquidity for this zone will be the liquidity for the upper zone, and this will be the liquidity for the upper zone. So let's see if there will be liquidity. Okay, there's actually liquidity. We could consider this a liquidity, as you can see. Here's liquidity. So let's just play a few more candles. Okay, I will be safely setting an order on it on this candle right here, using the full body entry. And I will be using the full body entry because, as you can see, the full body entry covers the zone perfectly. But if, let's say, price breaks a little above this zone, let's say breaks a little above this zone, that additional 50% entry would not be able to keep us in the trade, because if price breaks a little above this zone, price will go up for the extreme. So it doesn't really matter if you set an order on it on the full body or the 50%, because this small additional stop loss place won't give you value. Okay, and we want to make sure that we are getting tagged into the trade. So let's see what happens. Actually, I'm keeping both of the orders, because if this trade is being swept, then this trade will be tagged. So basically, it's a win-win situation. We know that the lower time frame has been turned into bearish again, because price has created a change of character after the 5-minute supply tap at this region, created a huge change of character, several places change of character at this region, created a break of structure to the downside here. And basically, we know that the intention is bearish. We know that either of this trade or either of this trade will be played out perfectly. So if this trade hits stop loss, so this decisional trade hits stop loss, then this trade will be tagged and we'll be able to ride this trade. But if price doesn't feel like to come up to this zone, then this zone will be the ride. So let's just see what happens. Okay, there was a tag actually. Let me just move it here. And we'll be aiming for the 4-hour zone again. This is a little extreme scenario because we do not really aim for 1-to-30 risk-reward ratio trades. But let's just test it out, how it plays out. Okay, perfect reaction. Okay, actually, as you can see, that's what I was explaining. Price reacted on this downer area, didn't come up to mitigate the 50% of this candle, just reacted on the downside area, didn't mitigate this upper extreme zone, and we are in the trade. We've been tagged into the trade, and it's running in break-even perfectly. And why did we set break-even? Why are we setting break-even?
It broke structure. It did a boss.
Exactly.
Broke structure on the one.
Here was a break of structure to the downside. Okay. I'll be deleting this limit order from the upside. And there was a break of structure to the downside, which means another supply zone has been formed at this region, which is this one in this case, right? This supply level has formed a break of structure to the downside, because as you can see, this is a perfect flip zone. Price is reacting on some sort of demand zone at this region. Here's a footprint of the price action. This candle is the footprint of the price action. That's the footprint of the demand reaction. Here's a demand level. Price is reacting on this demand level, came down to mitigate that demand, came back above, closed here. And from this candle, price is created an inefficient push to the downside and break structure and broke demand. So this is a flip zone right here. And if I remember good, I actually took this trade on my personal account. Yeah, I took this trade. I remember I took this trade. So yeah, that's a little bit of cheating, but I'll be setting an order limit on this candle because actually this is a textbook setup. Yeah, I believe the full body won't cover the whole zone, so I will be using the 50% entry, and I did use the 50% entry on my live account too, targeting the 4-hour zone again. Let me just read the questions first. Flipping Kylie mentions zone criteria also for the trade. I took this one too, but wait for the liquid because actually this is a strong sign of the continuation for the short. So for me, it doesn't really require liquidity. It doesn't really require liquidity creation because let me just explain it. We needed liquidity for this zone because there was a possibility that this zone will be swept and the extreme would have been tagged. Without the liquidity, without the liquidity creation at this region, this zone could be easily liquidity. But take a look at here. This zone has been mitigated. This zone has been mitigated, liquidity has been swept, and this is the next recent zone after the break of this structure right here and the flip. So this is the origin. This is the origin of the flip right here and the break of the structure. And you don't really need liquidity for this. Liquidity is one more confirmation, liquidity is one more criteria, but basically there's no unmitigated area left above this one. Of course, the extreme one, but if price comes back up to this extreme one, I believe the trend will be changed and will be go for longs. So basically, you don't really need liquidity for this zone because that's perfectly enough confirmation for the continuation of the bearish order flow. Because as you can see, the overall higher time frame bearish order flow, I mean the lower higher time frame, which is the 15-minute chart and the 5-minute chart, has been turned into bearish at this region, as you can see. Price has swept liquidity with this movement to the upside here, swept all of the liquidity at this region, reversed to bearish again after liquidity sweeping movement because it broke below this 50-minute demand zone. Reacted on the 5-minute candle that is broke below this 50-minute zone, reacting on this buy to sell candle, changed character on the 1-minute chart and started a bearish order for reacting on supply levels over and over again, created a liquidity, broke structure again to the downside. So this is perfectly enough criteria. This is perfectly enough confirmation for me to take this trade, to actually take this trade, because, okay, I'll be risking it. If I'm in this position currently, this is in break even currently. If this will be swept out, I'll be taking -1 risk reward ratio. That's perfectly fine for me. I'll be safely risk this position. Okay, thank you. But why do you take not the first candle of the change of character? What do you mean? This is the first candle of the change of character. This is called I was just explaining this. Okay. Let's just see. There's a tap. Okay. 50% tap. Perfect. And keeping us in. Okay, perfect reaction. And it's running. It's running pretty well. As you can see, both of our positions are running pretty well. Let me just play price forward again. Let's see how it plays out. I will be closing these zones because it's actually painful to look everything in blue. And as you can see, a new zone has been formed again. A new continuation zone has been formed again. New high probability continuation zone has been formed again because this zone has created another break of structure to the downside here. Inefficient movement break of structure, liquidity creation for this zone. So this zone could be another good entry opportunity for us, as you can see, but I will just check the 5-minute structure. And this zone is actually lines up with the 5-minute structure because as you can see, this is our 5-minute structure. Reaction on this 5-minute zone, break of structure to the downside, pullback, break of structure to the downside, pullback, break of structure to the downside, pullback, break of structure to the downside. And this 5-minute candle lines up perfectly with your 1-minute candle. So basically this 1-minute candle is the extreme of the 5-minute candle, extreme of its inefficient breaking structure movement to the downside. So I will be safely taking this trade. Again, I'll be safely opening or ordering it on this trade because it's part of the 5-minute zone, extreme of the 5-minute zone. And no, we are not waiting for a confirmation entry right here because this is a small movement. This is a small movement. We don't need to wait for confirmation entry because basically this is a 1-minute structure. This is 1-minute confirmation, which is a confirmation in itself because break of structure on the 1-minute chart, liquid creation for this zone, it's confirmation and pro trend, following our pro trend. Okay, let's see. Let's just set another, let's just set another 50% entry at this region because I believe the full body won't cover the whole zone. Yeah. Setting an order limit. No reaction. Okay, no reaction, no tag. Liquidity has been swept, as you can see. Here was the liquidity. This liquidity has been swept with this movement. And after liquidity sweeping movement, price reacted strongly, created another change of character to the downside here, and started to continue the overall bearish order flow to the downside. So, just question, would you keep this order limit right here or you will delete it? Keep it. Anyone else? Would you keep it?
I would keep it.
Yes, I would keep it too. And we can actually do the same scenario as like this. As you can see, another break of structure has happened here to the downside with this inefficient candle. Actually, I didn't body break below the rest low point. Actually, there's no break of structure to the downside. Let me just mark it out with candle. Yeah, there's no break of structure. There's no body break structure to the downside. So I will not consider this zone, this supply zone, as a right supply zone, because this supply zone couldn't break structure to the downside with body closure. So this won't be a right supply zone. So this still could be a liquidity built up for this upper area. So we just keep that in mind, that this could be a liquidity for that upper area. Let me just extend these zones real quick. Sorry. Extending these zones real quick, perfectly. And keeping this limit order on the 50% of this candle. Okay, we are keeping it. Because as you can see, this actually looks like liquidity built up for this zone. And knowing the fact that this supply level, this 1 minute supply level couldn't break structure to the downside with body closure to the downside, this will be liquidity for the upper area too. Okay, and let me switch back to the 5-minute chart. Okay, that was actually a spoiler, sorry. Yeah. Okay, and left without us, as you can see. But there's more liquidity. Here's more liquidity, as you can see. And all of this liquidity has been built up for this zone. But this zone couldn't break structure to the downside. This zone couldn't break structure to the downside. But this is the origin of the structural breaking movement. This is the origin of the whole order flow that was leading to break of structure on the 1-minute chart. And there's liquidities being built up for this zone. So in this case, I would risk this scenario. I would risk this setup. And I will use another double entry confirmation here too. I would keep this limit order here because I will explain it. Let me just set the orders. Because if price tags us into this trade, tags us in this trade, that's a win-win situation as, because if it sweeps this zone, this will be tagged, and that's a win-win situation for us, right? Just like in this scenario. Okay, let me just read the chat real quick. Your best setup. Please keep demand in control. No, demand is not in control. Yeah, could be in control because it's reacting on the 50-minute zone. Could be in control, but this 50-minute zone will be broken because it's part of the liquidity, and the bearish intentions are much stronger, as you can see. Let me just show you the overall picture again. The bearish intentions are much stronger than the bullish intentions. And as you can see, price is reacting on demand zones over and over again. 50-minute demand reaction, 50-minute demand reaction, 50-minute demand reaction. But all of the demand zones are being broken sooner or later, as you can see. All of these demand zones are being broken sooner or later. And this demand zone, this 50-minute demand zone, is part of the liquidity, which is leading down to this 4-hour zone. If price changes character to the upside, then I would call it as a demand reaction. And I would call it that demand is in control. But I need this supply level to be broken to actually call that demand is in control. Because all of these liquidity areas, all of these confluences are leading for the continuation of the short order flow. And if this supply level breaks, and it breaks to the upside, I will call it as a change in the order flow. I will call it as a demand control again. But for me now, supply is still in control because the bearish intentions are much stronger, as you can see, as I explained. So let me just switch to the 5-minute chart. That will be a little spoiler. Okay, this zone, this 1-minute zone, actually part of the 5-minute zone, as you can see. So this zone is part of the 5-minute zone again. So in this scenario, you can do two things. First, risk the entry right here, take a risk entry right here, take a risk entry right here. Or if you're insecure about the trade, you're insecure about the direction, you can just simply wait for a confirmation entry. For me, it's obvious that price will continue the bearish movement because the order flow is extremely bearish on the lower time frames. But if you're insecure about the trade, you can just simply wait for a reaction. You can just simply wait for a confirmation entry on this supply level, because this supply level is part of the 5-minute zone. So wait for 1-minute confirmation on this zone and continuation of the order flow. It's up to you. It's up to you what you do in your live trading sessions. If you're insecure about the position, just wait for a confirmation. That's all. Basically, react. You don't have to predict. You don't have to predict that if this zone will hold or not. All you have to do is react on this zone. For me, it's obvious that this zone will hold or this zone will hold. And I will easily reach these zones. So let's just see what happens. Sorry, a little water break. So let's see what happens. Price is actually continuing the bearish order flow, as you can see. It's still in the 15-minute demand, and we can consider this as a break of the 15-minute demand. Let's just see what happens. Actually, the session is almost closed. Session closes in 30 minutes. So this could be a liquidity sweep, and this could be a demand break too. As you can see, there was liquidity. Prices spread this liquidity. So actually, this candle looks like a liquidity sweeping candle because we've learned everything about the liquidity sweeping candles. Here's trend line liquidity to the upside. Demand sweep, bam, liquidity sweeping candle. But I believe this liquidity sweeping candle created more liquidity inside of this demand. There's more liquidity. We could consider this as a liquidity trend line here. So I believe that's more liquidity. Let me just read the chat real quick. Can you show an example? Not right now. We are doing a backtesting session right now. Okay, let's see what happens. Oh, that's obvious. This wasn't a liquidity sweep right now. Okay, demand broken. So in this case, in this scenario, I will delete these limit orders right here, but keep these zones for directional purposes only. So what can we do in this scenario? We can switch to the 5-minute chart and find the origin of this break. And actually, as you can see, this structure is messy. This is messy. So I will just simply sit on my hands. Let me just switch back to the 5-minute structure. As you can see, all of this price action is basically efficient in this area. There's no real inefficiency that was leading to a break of this demand zone. But there was a body break of this demand zone. There was a body break of this demand zone. As you can see, this candle closed below this demand zone with the body closure. So we can fully consider this zone as it has been broken. But there's no clear price action at this region. Where's the clear price action? Can you just draw on my screen, please? Just draw on my screen. Where's the clear price action? Exactly. Thank you. There's the clear price action. And why is it a clear price action? Because there's the real inefficiency. As you can see, this 5-minute demand zone, supply zone has started the order flow that was leading to a break of this demand zone, this 15-minute demand zone, right? So this is liquidity built up for this zone. So in this scenario, I would consider that keeping a limit order on this zone still, or we can simply wait for a sweep of this liquidity and tap of this zone and 1-minute confirmation on this zone. But I believe that won't happen in this session because the session closes in literally 20 minutes. Yeah, 20 minutes. But just knowing the fact that this is liquidity built up for this zone, looks like a solid plan. If this, let's say it happened 30 minutes earlier, we will be easily waiting for this setup. So the tap of this zone, liquidity sweeping movement, tap of this zone, inefficiency fill up at this region, change of character here at this region, entry limit, bam. That will be a perfect textbook setup. So let's see how price reacts on these zones. Okay, the liquidity sweeping is, sorry guys, actually I forgot to manage the trades. We got 2 running positions. So let's see. The safest choice in this case will be to keep our stop loss above the liquidity line. So above the liquidity line right here. So I will keep my stop loss above this 5-minute supply level right here. So here's our stop loss currently. Okay, let me just switch back to the 1-minute chart. So our stop loss is at this region. This is our stop loss, maybe a bit above. We got our stop losses right here. So all of our profits are logged in. Why do we keep our stop loss here and why don't we keep it, for example, right here? Let me just ask. Anyone, please answer the question.
Liquidity.
Exactly.
Ton of liquidity, yeah.
Tons of liquidity are sitting right here at this region. We can't keep our stop loss right here because if we keep our stop loss right here, our stop loss will be the liquidity. We will be the liquidity, and we don't want to become the liquidity, right? If we keep our stop loss right here, that won't be the liquidity. Liquidity sweep happens, our stop loss will be still safe. Our running positions will be still in position. Okay, let's see what happens. Session closes in 7 minutes, so I'm not opening any more positions. Liquidity sweep is actually happening, as you can see. Session has closed, liquidity sweep has happened. Seems like this much liquidity sweep was enough for price to reverse to the downside again, because as you can see, liquidity sweep has happened from this demand zone. I will just mark it out here. As you can see, this was the liquidity sweeping demand zone that was caused inefficient push. Here's the real inefficiency. Below this, there's no inefficiency, there's no inefficiency, no inefficiency. The inefficiency has started from this candle. Inefficient push to the upside, liquidity sweeping movement, reversal. Reaction on this demand zone, as you can see, here's a reaction. This dodge candle reacted on that zone, and there's a flip scenario, as you can see. And there's a perfect entry opportunity here on this dodge candle, which was the original of the flip. But this was after the session has closed, so we are not taking the setup. So we don't really care about the setup. We just see how our positions are being played out. Let me just extend these zones. Or no, just close them and wait for the 4-hour zone to be tapped. This is our target point still. Let's see how this plays out. As you can see, after the liquidity sweep movement, it just continues the overall movement. So this was really enough liquidity sweep. This was really enough flip. This was really a perfect confluence once again. Let's see how it plays out. Our TP is really, really, really close. Okay, TP hit. That was quick. Let's just count it. Let's just extend these zones. So the first position which we took was 30 risk reward ratio. The second position was 28 risk reward ratio, which is 30 plus 28 equals 58 risk reward ratio in total for this session. Of course, this is an extreme example because you won't really hold your positions for this long, but we just tested it out. As you can see, this is the power of the trend. This is the power of the whole structure. We know that our structure was bearish. We know that the overall lower higher time frame was bearish. The 50-minute, 5-minute, 1-minute chart was bearish, and all of the confluences were leading down to this 4-hour demand zone. Knowing all of these facts, knowing the liquidity sweep, that the liquidity was swept at this region, knowing that the liquidity was swept at this region, knowing the liquidity was swept at every single region, every single confluence was leading down to this 4-hour zone, is basically a perfect combination of all of the concepts. Because as you can see, this is the power of the trend. This is the power of the main trend. We could easily try long trades, for example, on this region, but that would be counter trend trade. And we are following the main trend, which is bearish. And this is the final result for following the main trend, right? 58 risk reward ratio in one single session. And as I said, of course, we won't hold our positions for this long because this will be extreme. I would have been closed my position at the 50-minute demand level because that will be the safest choice. And if I close the position at the 50-minute demand level, 16 plus 24, 14, that would have been 30 risk reward ratio. So these are the possible numbers for this session. Targeting the 50-minute zone would earn us 30 risk reward ratio. Targeting the 4-hour zone would earn us 58 risk reward ratio. So yeah, session has closed. Have you guys got any questions?
No, sir.
Let me just see the chat if there are any questions. Proton discrete key, cool. When you're talking about the bias or proton, is it 50-minute or 4-hour? Basically, I was explaining this. The lower higher time frame, which is the 15-minute chart and the 5-minute chart, was bearish. Price has reversed on the 15-minute chart here after the liquidity sweeping movement, as you can see. So this was one big 4-hour leg. On the 15-minute chart, price has reversed to the downside, as you can see, created a downside change of character on several places, slapped the upside liquidity, which was one more confluence for the change in the trend, change to bearish from bullish. So the lower higher time frame was extremely bearish at this region after the liquidity sweeping movement and huge inefficient character changing movement to the downside. But the higher time frame is still bearish. So knowing the fact that the 4-hour time frame is still not bearish, the higher time frame is still bullish. Knowing the fact that the higher time frame is still bullish, we'll be able to look for long continuations from this 4-hour demand zone. So all we have to do is wait for a 15-minute change of character inside of this 4-hour demand zone, because as you can see, the 4-hour time frame. Okay, why is it lagging? Bar replay cannot be connected. That's strange. Okay. So Knowing the fact, sorry, just mute yourself. So knowing the fact that the 4-hour chart is bullish because it created a change of character on the 4-hour chart after a daily demand tap and created a breakout structure on the 4-hour chart after a daily demand tap and created another 4-hour supply break and liquidity sweep on the 4-hour chart, we can easily say that price will be create a 15-minute change of character on this daily demand zone, I mean 4-hour demand zone, and we'll be able to look for long continuations from this daily, 4-hour demand level, right? But you can actually combine the time frames together. If the 15-minute turns to bearish, you'll be able to ride the expectation order flow to this daily or 4-hour demand level, because the 15-minute has been turned into bearish. So what can we expect from the 15-minute chart? We can expect the 4-hour demand tap. We can expect the 4-hour demand mitigation. What can we do in this scenario? We can ride the expectation of bearish order flow down to this 4-hour demand tap. Right? Bro, the first change of character at, let me just check it. This one. This was a change of character because I already explained this at the beginning of the session. Prices reacted on this demand zone. This demand was pushing price to new highs, as you can see. Price is coming up, creating a pullback here. And from this demand zone, from this weak demand zone, prices created a breakout structure on the 1-minute chart and caused the tap of this supply level, caused the tap of this 5-minute supply level. So basically, this was our last demand zone. Prices reacted on this demand zone, as you can see, after a supply mitigation. Price reacted on this demand level, created a pullback, and from this candle, prices created an inefficient movement to the downside. So this is our right supply level in this case. This is a flip zone exactly. Can you explain how sell to buy candle are created? Basically, sell to buy candle or buy to sell candle. Okay, let me just draw it, or let me just show you it on the 15-minute or 5-minute chart. So here, as you can see on the 5-minute chart, this is what we call a sell to buy candle. I mean, this is a buy to sell candle because on the 5-minute chart, it looks like just two simple candles with a wick down here and a wick up here. But on the lower time frame, just think about it. On the lower time frame, this downside movement will look like this, and this upside movement, knowing the fact that here's the wick, will look like this. So on the lower time frame, it's a pullback, and from this pullback, from this buy to sell candle, the continuation happens. So the higher time frame looks like a buy to sell candle. The lower time frame actually looks like a pullback. Let me just switch back to the 1-minute chart. Have you guys got any more questions? Actually, John, please just keep down the company because I will run out for a cup of water.
Yes, okay.
I'll be back quick.
Okay. So guys, how do you like the session so far?
John.
Yes.
Does this one was on a 5-minute zone?
Sorry, I can't hear you that clear.
Does this one was a 5-minute zone?
This one, it was a 15-minute zone, I guess.
Oh, 15 minutes, okay.
Yeah. Guys,
hey John, I think it's scaling process. Is it scaling, adding an extra position here?
Yes, it's scaling process, adding extra positions.
Okay.
Yes, London session will be the same at 9 a.m. Hungarian time. Yes. Reiko, we are sending markups before each session starts, and we are sending markup updates as well.
I'm new in the membership. I would like to ask, are trade setup ideas given out in real time? Or did you answer this question, John?
Yes.
Okay, perfect. Yeah, basically we are sending markups before every single New York and London session. John is sending London markups, I'm sending the New York markups, and we are updating the markups in the mid sessions. So yeah, you don't have to worry about it. you'll just receive all of the updates and all of the markups. What situation must exist to get an order made out of a setup? I don't really understand this question.
You know that the question is, when will you remove your order? The price going down, and when will you sell? When will you delete the sell limit?
Actually, when there's a new setup.
Yeah.
When there's a new setup, when there's a new high criteria setup forms, we won't delete this order because there's liquidity being built up for this zone, and there's a possibility that this zone could be the liquidity for this zone. But if, let's say, price moves so far away from this zone, from this zone, and let's say it creates another perfect setup, for example, for this supply zone right here, then we'll be deleting this order because this is a new high probability setup. Because if price turns back down at this setup, we'll be waiting for a confirmation entry on this zone. Amazing, guys. I'm sorry I came to at final, but yeah, it has been. Oh my God, let me just see. Am I actually recording this? Yeah. Heart attack. Heart attack. Chili Markets wanted to say, if you ever take limit orders, like you don't have time to trade and put limits. You always have time to put limit orders. Basically, if you're using a desktop metaphor trader, it's just a simple right click and place order. And after that, you can just simply open this position and copy all of the information from this. Basically, it takes up 10 seconds to do that, to open a position. Do not refine 4-hour zones to the 15-minute and then trade from them. What stops you from doing? You can refine your 4-hour zones, but that's not necessary. You can simply refine your 4-hour zones on the 15-minute chart for much cleaner target points, for much cleaner understanding of the whole structure, but that's not necessary. You can just simply keep the 4-hour zones the way it is. Okay, guys, I'll be answering 2 more questions, if you got any questions. But before I answer those questions, I'd like to ask you, how did you like this backtesting session?
Hey man, it was really worth.
Oh, no. I will ask it in Discord. That's much cleaner. I can't really see the chat right here.
You're amazing, guy. Amazing.
Amazing. Thank you.
Yeah.
Thank you for all the feedbacks, guys. Hi, teacher. I did not understand well market bias and POI. What part did you not understand? The recording will be up maybe later this day or tomorrow. It will be up in 24 hours.
Hey Marcel, I have a doubt, man.
Yeah, I'm here.
If there were no liquidity towards my target zone, should I enter?
If there's no liquidity for your POI.
Yeah. If there was no liquidity, should I enter or not?
It basically depends on your criteria. If the liquidity is the only criteria missing, then I will recommend to go for it. Knowing the higher time frame plan, knowing the actual breakout structure, flip zone, etc., etc. And if the liquidity creation is the only criteria missing, I will recommend you to go for it. But you have to combine the criteria together. If there's liquidity for the zone, that will be much stronger. With a proper liquidity creation for a zone, that will be a full criteria, high probability setup. Okay, guys. I will call this a session end. Thank you guys for being here. Wish you guys a beautiful rest of your day and meet you tomorrow. We'll be sending the markups. John will send the London markups. I'll be sending the New York markups. And yeah, see you tomorrow, guys. Wish you a beautiful upcoming trading week. Wish you a beautiful upcoming trading day tomorrow. Thank you for being here.
Thank you for being here, guys. Take care. See you tomorrow.
And the recording is on. Is it on? Yeah. Has been enabled. Okay, so welcome, guys. This will be today's live session. And we'll prepare for the week ahead. We'll prepare for this day, for the upcoming days on this week. So I'll just start the analysis on the 4-hour chart because it's quite interesting. Okay, just take a look at the 4-hour chart. Sorry, no. First of all, have you guys got any questions before we start the session? Any question about anything? Okay, I consider this a no. So let's just begin the session on the 4-hour chart. Okay, I sent you the market update video yesterday, which was showing you that I'm expecting a new higher high creation right here, expectation of higher high. And as you can see, the new higher high has been formed exactly where I was expecting it. Okay, but first of all, before we talk about this price action region, just snap out all of the structure again at this region. I know we talked about this several times. We talked about this demand tap, change of character, expectation order for several times, but it's still very, very important because that's the way how you can actually predict the market, predict the directions and the expectation order flow, because it's really, really important. So I know we talked about this several times that there was a demand tap, a daily demand tap, and after daily demand tap, it has been followed by change of character on the 4-hour chart, as you can see. So here was the last structural high point, which was a valid supply zone. As you can see, that has created inefficiency. Price has tried to break above this supply zone right here, couldn't break above, but after a supply reaction, it couldn't create a new low, couldn't break structure here to the downside. And instead of breaking structure to the downside, it just blew through this supply zone here, as you can see, with inefficient movement. And for change of characters, wicks are perfectly enough. So this was a perfect change of character on the 4-hour chart that has been confirmed on a daily. So basically, this 4-hour change of character has confirmed the daily chart, the daily demand zone. Okay, I've talked about this yesterday. I sent this message to the EURUSD chart, but I just want to make it clear. So the reason we are using the 4-hour chart, the 15-minute chart, the 5-minute and the 1-minute chart is because each of these time frames are confirming each other's. So for example, we have the daily too. We have the daily chart, which can be confirmed by a 4-hour chart. So daily demand zone, sorry, not 4-day, 4-hour. So daily demand zone / supply zone could be confirmed by the 4-hour chart. So let's say price steps into the demand zone right here, and this demand tap can be confirmed only on the 4-hour chart, not on the 1-hour chart, not on the 3-hour chart, not on the 5-hour chart, but only on the 4-hour chart. So if price steps this demand zone right here, and for example, it wicks below on the 4-hour chart and creates a wick on the 4-hour chart that goes just below this demand zone but closes above this demand zone, that will be a liquidity sweep, because this is daily demand zone, and this daily demand zone can be confirmed by the 4-hour chart. And if price creates a change of character after the tap of this zone and creates a 4-hour change of character, not a 15-minute, not a 1-hour, not a 2-hour, not a 3-hour, but a 4-hour change of character, the daily demand zone will be confirmed, and we'll know that the trend has been changed from bearish to bullish, because as you can see, the trend was bullish at this region. And after a change of character on the 4-hour chart, the time frame has been confirmed, the daily time frame has been confirmed by the 4-hour confirmation on this change of character. And actually, as you can see, the trend has shifted to bullish from bearish, so creating series of higher highs and higher lows, higher highs, high lows, higher highs, higher lows, higher highs, expectation of higher low, expectation of higher high. So once again, the daily chart can be confirmed by the 4-hour chart. And of course, it goes on for the breakthrough. So if price breaks below this demand zone on the 4-hour chart and the body closes below this demand zone, that will be considered as a break of this demand, this daily demand, and it will confirm that the trend will be continued. It will continue the overall bearish movement, and you'll be able to take a supply trade. Okay. So we have the daily 4-hour chart confirmation. We have the 4-hour, which is confirmed by what?
15-minute.
50-minute.
Exactly. The 4-hour chart can be only confirmed by the 15-minute chart, and only by the 15-minute chart, not by the 5-minute, not by the 30-minute, not by the 1-hour. The 4-hour chart can be only confirmed by the 15-minute chart, because that's the strongest confirmation. All of these time frames that has been shown right here are fractal. Each time frame confirms another. Okay, so daily zone can be confirmed by the 4-hour chart. The 4-hour zone can be confirmed by the 15-minute chart. So the same goes on. Let's say theoretically this is a 4-hour zone. price is moving down in a downtrend. This is the 15-minute chart. And if price creates a 15-minute change of character here to the upside, the trend will be shifted to bullish from bearish because price was being able to create a 15-minute change of character inside of a 4-hour zone. So let's see, we got a 15-minute chart, which can be confirmed by what?
1 minute.
This is ugly. Sorry, I couldn't hear.
1 minute.
1 minute.
Exactly. The 15-minute chart can be confirmed by the 1 minute only. And no, I received this question lots of times. The 15-minute can, of course, it can be confirmed by the 5-minute chart, but the strongest confirmation and the right confirmation in this case is the 1-minute chart confirmation. Because basically the 15-minute chart and the 5-minute chart is the same. So the 5-minute isn't confirming the 15-minute chart. The 5-minute and the 15-minute is basically the same. The 15-minute is just a small refinement of the 5-minute is just a small refinement of the 15-minute chart. But the 15-minute can be confirmed before the 5-minute confirmation too, with the 1-minute confirmation. So the 15-minute can be confirmed by the 1-minute chart. So the same goes on. Let's say theoretically this is a 15-minute zone. This 15-minute zone can be confirmed by a 1-minute change of character, 1-minute break, or 1-minute liquidity sweep. So, and there's one more confirmation, which is the 1-minute chart, and it can be confirmed by the seconds chart. For example, the 15-minute second, the 15 second or the 5 second. But we are not using this confirmation because the 1-minute chart is perfectly enough for us. We don't really need more confirmations on the second zones because we already have high probability zones. We only aiming for the high probability zones, right? So we don't need to confirm those 1-minute zones. 1 minute is low enough. We don't need to go lower. We don't need to go to the seconds chart. So yeah, we are using these 3 confirmations and only these confirmations, not the 1-hour chart, not the 2-hour chart, not the 3-hour chart, only these confirmations. These timeframes are the best combined together. Okay, so just keep this in mind. Daily with the 4-hour, 4-hour with the 15-minute, 15-minute with the 1 minute. These are the confirmations. Okay, I just explained this because I received lots of questions yesterday about the fractal timeframes. And I saw that lots of you guys are using the 1-hour chart. Lots of you guys are using, for example, the 30-minute chart. Those charts aren't valuable. Those charts will be showing fake movements, will be showing fake change of characters, fake break of structures. Okay, let me just get this back. No, I can't. Okay, so the drone timeframes will be the confirmation timeframes, not the 30-minute, not the 1-hour chart, not the 2-hour chart, only these timeframes. All of the other timeframes are fake. I'm showing fake confirmations. Okay, just keep this in mind. Okay, let's start the analysis on the 4-hour chart. Let me just drink a sip. Okay, perfect. So, as we were talking about this, prices change character here on the 4-hour chart after the daily demand tab. So, the daily chart has been confirmed by the 4-hour chart, and it has been confirmed that it will turn into bullish from bearish. Okay, so the daily 4-hour chart has been turned into bullish from bearish and started to print series of higher highs and high lows, right? This was a strong low because this strong low could change character here to the upside. This was the weak high because this weak high couldn't break below the last strong low. So this is a strong low, this is a weak high. Everything between these highs and lows will be substructure. On the 15-minute, on the 1 minute, on the 5 minute, it will be a real structure, of course, but on the 4-hour chart, all of these movements between these highs and lows are just substructures. Okay, after this, price couldn't break below the strong low, as you can see here. And instead of breaking below the strong low, it created a new change of character, new break of structure to the upside here on this line. So our lows have been changed to this low and the high has been changed to this high. And why I'm saying that this is the new high and not this is the new high? Can somebody tell me? Exactly, chilling markets, body close. This is the high point right here because this wick couldn't body close above this high point. So this has been considered as a liquidity sweeping movement only and not a break of structure. So the new strong low is this one right here because it could break above the last weak high, and the new weak high is this one because it couldn't break below the last strong low. If price theoretically could break below this strong low, this would have been our new strong high. But this didn't happen, as you can see. So this is the weak high, this is a strong low. After this, price has respected a strong low right here, created a change of character here at this region on the 15-minute chart. So there was somewhere 15-minute change of character inside of this circle. That 15-minute change of character has been confirmed on the 1-minute chart, for example, right here. So there was a 15-minute change of character on this movement. There was a 15-minute zone, and this 15-minute zone somewhere right here has been confirmed on the 1-minute chart. So what does this mean? That all of the time frames have been confirmed. First of all, the 4 hour started the movement, the structure breaking movement to the upside right here. So the 4 hour chart is bullish at this region, of course. So this is a bullish 4 hour leg. This is the bullish pullback of the 4 hour leg. But this region on the 15-minute chart is bearish because price has changed character here on several places on the 15-minute chart. So what do we need to do? We have to confirm the 15-minute chart too, because we can't open a position if the 15-minute is bearish, right? We are expecting bullish trades, of course, but we need to confirm the 15-minute time frame too. So here's a strong low. Here's the 4 hour demand zone that has started the inefficient movement and the break of structure to the upside. The 15-minute chart is bearish. If price steps into this 4 hour zone, we need the 15-minute change of character, which has happened. Let me just show you. I will just mark this out. And I will show you that this 15-minute change of character has happened inside of that zone. So here, as you can see, here was the top of that 4 hour zone. Here was a new break of structure to the downside. This was the last low point, and the huge character changing movement has happened right here. So here was a change of character, change of character, change of character, change of character. Price has changed character on several places with this 15-minute movement, as you can see. And after this, price stepped into this 15-minute zone. I mean, this 15-minute zone, that is called the overall flip and change of character right here. Price stepped into this zone, basically changed character on the 1-minute chart somewhere around on this candle. So all of the time frames have been confirmed because, let me just switch back to the 4 hour chart, because price broke structure on the 4 hour chart. So that means the 4 hour is bullish. As I said, price has turned into bearish at this region, but price has been confirmed that this 4 hour zone is bullish, and price confirmed this by a 15-minute change of character right here. So the 15-minute change of character has happened. The 15-minute chart has been confirmed that it will be bullish again. So 15-minute turned into bullish. What do we need to do after this? We have to confirm that new 15-minute character changing zone on the 1-minute chart. After the 15-minute has turned into bullish, the pullback leg of this character changing movement will be bearish on the 1-minute chart. So we have to confirm that 1-minute chart too. And if price steps into the 15-minute zone and changes character on the 1-minute chart, all of the time frames, the 4 hour, the 15-minute, the 5-minute, the 1-minute will be bullish. So all of the time frames have been confirmed. And as you can see, after the confirmation of all of these time frames, these correlated fractal time frames, price has created a new high and followed the original trend, as you can see. It created a breakout structure right here because this was the last high point, but basically broke about this week 2 with the body closure 2. So the same happened right here again, as you can see. Breakout structure to the upside on the 4 hour chart. So the 4 hour has been confirmed that it's bullish. We have a strong low point right here somewhere. Price has turned into bearish on the 15-minute chart in this region, created a range right here, created a liquidity building slow downside movement. After the strong low tap here at this region, as you can see, price has changed character again on the 15-minute chart. Let me just show you that again. So here was a strong low tap, as you can see. Here was the range. Sorry, I didn't mean to do that. Here was the range. After a range sweep, price tapped the strong low point, and after a strong low point tap, price has changed character on several places in the 15-minute chart here, as you can see. Tapped into the 15-minute zone, and this 15-minute zone have been confirmed on this movement on the 1-minute chart too. So in this region, price was bearish on the 1-minute chart. Tapped into this 15-minute zone, created a 1-minute change of character right here, and the bullish trend have been continued, as you can see. So once again, all of the time frames have been confirmed at this region. The 4 hour has been proven to be bullish by the 4 hours breakout structure. The 15-minute chart have been proven to be bullish by the 15-minute change of character on the 4 hour zone. The 1-minute chart is bullish too because it changed character inside of the 15-minute zone. So as you can see, the results of all of these confirmations was the new higher high has been created right here. Now this is the expectational order flow. This is how you can confirm your time frames by each others. So basically, if price would have break below this strong low point right here, there could have been a new confirmation for the fractal time frames. Let's say price breaks below this strong low point with a 4 hour confirmation. the 4-hour chart will be proven to be bearish because the 4-hour has been broken by a 4-hour zone. So we can actually use this fractal confirmation again on this 4-hour zone. Let's say price breaks below this zone, creates a pullback right here on the 15-minute chart, taps into this zone, creates a 15-minute change of character right here, creates a 1-minute change of character, and all of the time frames have been confirmed again. This is the fractal confirmations, and you can use it on every single time frame. And this is really, really important because by knowing the overall trend on the higher time frame and combining that knowledge to the lower time frame with the lower time frames, will actually show you the direction of the market. And that's why I knew that price will create a new lower, higher high right here, and it will break structure here to the upside, and it will create a pullback. Let me just open Discord and show you a picture. Just Zoom is in the way. Sorry. Why can I open this? So here's a picture from yesterday. As you can see, that was the expectational order flow by me. I was expecting the tap of this supply zone, this extreme supply zone that has been drawn here, as you can see. I was expecting a reaction on this supply zone. Then after the reaction, I was expecting a break of this supply zone and a break of the initial high point right here. And as you can see, the exact same movement has happened. Price is reacting on the weak high point because price always reacts on the weak high points, either if it's a weak high, either if it's a strong low, strong high, weak low, anything, it always reacts on those high points or low points. So as you can see, price is reacting on this high point. This weak high point created a small pullback, tapped into some sort of demand zone right here. And after this, a break of structure has happened here to the upside, and the overall swing break has happened right here to the upside. And as you can see, this is the draw movement. And yeah, of course, as you can see, I'm expecting a deeper pullback right here because the break of structure has happened right here. And as you can see, price is following this pattern over and over again. Break of structure, pull back to the extreme zone, pull back to the strong low. Break of structure, pull back to the extreme zone. Break of structure, expectational pullback to the extreme zone, somewhere around here. Here's a clear 4-hour zone, as you can see. And after the 4-hour zone tap, we can expect the 15-minute change of character, 1-minute change of character, time frame confirmations, fractal confirmations, and continuation of the overall trend, new expectational higher high formation right here, tap of the overall supply zone up here. So that's how you can actually use the fractal confirmations, because we can expect that price will create a pullback right here after the swing high break. We can really expect that price will create a pullback right here, and it will be able to break below this demand zone, and it will be confirmed that the 4-hour chart is bearish at this region until this point, which has been the origin of the overall break of structure right here, this zone. So what we can expect on the 4-hour chart, we can expect that price will create a pullback right here, create a bearish order flow down to this 4-hour demand zone right here. Let me just mark it with the box instead, because that's cleaner. Actually, this is the right demand zone in this case, because as you can see, this candle has been already mitigated by the following week. So that's our right 4-hour zone, 4-hour demand zone in this case. So what can we expect? We can expect the confirmation of the bearish trend on the 15-minute chart. We can expect the pullback down to this 4-hour demand zone. We can expect a 15-minute change of character right here. We can expect a 1-minute change of character after the 15-minute change of character. And after this, we can expect the expectation order for continuation to the upside and the tap of this supply zone up here and the break of structure to the upside. This could happen, but price could just decide that it will create a huge bullish movement to the upside and tap this supply zone immediately. What can we expect if this supply tap happens on the 4-hour chart? I'm asking
15-minute choke or breaks or the supply.
Exactly. I would really expect the change of character on this 4-hour zone, the 15-minute change of character on this 4-hour zone, because the overall higher time frame structure, let me just switch to the daily chart, the overall higher time frame structure is still bearish, extremely bearish. And as you can see, this zone, let me just switch back to the 4-hour chart, this zone is the last recent valuable zone that we care about. This is the last recent 4-hour zone that has created a swing low break. As you can see, here was a swing demand zone, daily demand zone. These lows couldn't break below this zone. These lows couldn't body break below this demand zone. This was just a liquidity sweeping movement. This was the movement caused by the Ukraine-Russia news. So these were fake movements, and the real break of structure with body closure has happened from this supply zone, as you can see, and price has built up tons of liquidity for this zone. There's still inefficiency, as you can see. Price built up this liquidity right here that has been swapped with this movement. After this, price built up this liquidity that has been swapped with this movement. After this, price has built this liquidity, we get a new liquidity line. So price is continuously building up liquidity for this supply zone. So we can expect a really, really strong reversal on this supply. These are my expectations on this supply zone, but also the break of this supply can easily happen, and we could see higher supply mitigation. For example, this one right here. All we have to do is react. This is too far away. These are really just predictions. These are really just expectations. All you have to do is react on the 15-minute chart if price steps into the 4-hour zone. No, you're not switching to the 1-minute chart if price is inside of a 4-hour zone. You're just sticking to the 15-minute chart, and you're patiently sitting in your hands and waiting for a 15-minute change of character / break. You don't even look at the 1-minute chart when price is in the 4-hour zone, okay? Just remember this, because it can literally save you from unnecessary losses, lots of unnecessary losses. Okay, so these are
I'm
the
sorry. I'm sorry, I have a question. You say when we draw a 4-hour order block, we go to the 15-minute time frame and wait to the change of character. That's correct?
If you refine the 4-hour zone on the 15-minute chart, so for example, you refine this zone, let's say there's a 15-minute zone inside of this 4-hour zone, and it's a really significant refinement. You still have to treat this 15-minute refinement zone as a 4-hour zone. So this won't be a 15-minute zone, this will be a 4-hour zone still. So if price steps this refinement 15-minute zone, you still need a 15-minute change of character, because you have to treat this zone as a 4-hour zone.
It's okay. When the touch or mitigated this 4-hour in mitigated 15-minute, we need change of character in 15-minute and go to the 1-minute and another change of character.
I'm not sure I can understand this question actually.
I'm sorry, my English is bad.
So
and
basically what he's
okay.
asking is, if it's a 4-hour zone, okay, price mitigates the 4-hour. He wants to know, do we need to wait for a 15-minute chalk? And then once the 15-minute chalk happens, do we need to wait for a 1-minute chalk?
Yeah. That's what I was explaining. Of course. Here's a 4-hour zone. Price steps into this 4-hour zone. Let's draw with these movements. This is the 15-minute structure. Okay, I'm drawing the 15-minute structure. Price steps this 4-hour zone right here. After a tap, you have to wait for a 15-minute change of character. This is the 15-minute low point that has created the last break of structure to the upside. So this is the 15-minute demand zone. And if this low point breaks, there will be a 15-minute change of character to the downside. Let's say price creates a change of character here to the downside. So the 15-minute change of character has happened. This means we will have a new 15-minute zone somewhere around here, for example. And after this new zone formation, I'm drawing the 1-minute chart right now. You have to wait for a 1-minute change of character inside of this 15-minute zone. So if price creates a 1-minute change of character inside of that 15-minute zone, you'll be able to ride the trend and execute the position on this new 1-minute zone. Because all of the time frames have been confirmed, right?
I understand.
All of the time frames have been confirmed. Sorry, I didn't mean to do this. After all of these confirmations, you can happy not trade. But of course, there's a possibility that price won't come back up to this 15-minute zone. Let's say there's a decision of 15 minutes or a decision of 5-minute zone, and price creates a, let me just remove these zones real quick. So here's the extreme zone. Let's say here's a decisional zone. You still have a possibility that price will create a change of character, strong change of character on the decisional one. All you have to do is follow this structure. If price gives a reaction on this decisional one, you jump in this trade. Just follow this, follow the price, follow the trend, follow the structure.
Okay, thank you.
I have a question.
Guys, please, the questions after this session. Okay, there will be a question and answer session.
Okay.
So, all right. Let me just hear the question. Just ask it. Mohakul, ask the question, please.
Okay. Thank you. Philippine, my question is, you've just shown us, like, if price taps into a higher time frame, mitigates in higher time frame, then church happens.
Yeah.
What if it breaks? Can you please give a simple explanation of what if price breaks, what happens? If
of course,
price breaks
yeah. Of course, it depends on the time frame. It depends on the time frame of the zone. Let's say there's a 4-hour zone. Talk about the 4-hour zone right now. I'm drawing the 15-minute structure again. Let's say price dips this 4-hour zone. Can't create a change of character after the 4-hour zone tap. Can create a 15-minute change of character right here. Taps into the demand instead and breaks above. What can we do in this scenario? a new demand zone will be formed and a flip zone will be formed. So there will be a flip zone, the 15-minute demand zone that has caused the break of this structure, break of this supply zone, and you'll be simply be able to wait for a 1 minute confirmation and drawing a 1 minute confirmation, drawing a 1 minute structure again. You'll be simply be able to wait for a 1 minute confirmation inside of this 15-minute flipping zone that has created a break of this 4-hour zone. And after the tap of this 15-minute zone, you'll be able to wait for a 1 minute confirmation, 1 minute change of character. And after this, you can continue the overall trend. But let's talk about the 15-minute zone. So for example, this is a 15-minute zone and not a 4-hour zone. In this case, all you have to do is wait for a 1 minute confirmation. So if price taps into this 15-minute zone and creates a 1 minute break of this zone again, then you'll be able to make a trade based on the new flip zone that has flipped the 15-minute zone. If it creates a perfect entry criteria, for example, liquidity for this zone, break of structure to the upside, you'll be able to exit the position on this 1 minute zone that has flipped the 15-minute zone. Because as I said at the beginning of the session, each time frame has been confirmed by another 15-minute chart. 15-minute zone can be confirmed by the 1 minute chart. The 4-hour zone, 4-hour structure can be confirmed by the 15-minute chart. And if the 4-hour zone, 4-hour time frame is being confirmed by the 15-minute chart, there will be the 15-minute chart, 15-minute zone that can be confirmed by the 1 minute. So this goes down and down. 4-hour zone has been confirmed on the 15-minute chart. That's a tick, but there will be a new 15-minute zone that has to be confirmed on the 1 minute chart. 15-minute zone, 1 minute confirmation happens. You can enter on that 1 minute zone. Understandable?
Yes.
Yes, thank you, Marcel.
You're welcome. Okay, guys, I have to ask, did you understand how these fractal time frames work? Does it make sense for you? Or need
Yes,
further
perfect.
explanation?
Yeah. Marcel, excuse me. Yeah, for 5-minute order block or time frame, we need confirm in a 1 minute.
Yeah, the 15-minute and the 5-minute is the same. We just use the 5-minute to actually refine those 15-minute zones, and you can actually draw new 5-minute zones, but the 5-minute and the 15-minute is the same. So you have to treat the 5-minute zones like the 15-minute zones.
Thank you.
You're welcome. Let me just read the questions real quick. Maybe he interested in. Okay, so let's just continue the analysis on the 15-minute chart. We talked about the 4-hour chart pretty deeply. So we know everything about the 4-hour chart. We know the expectational order flow. We know the expectations. We know what we can expect from the 4-hour chart, right? So let's switch to the 15-minute. Let's see what we have here. Okay, let me just switch back to the 4-hour chart and let's see if there was any 4-hour zone inside of this big movement. No, there wasn't. So on the 15-minute chart, we can see that I will just close this zone a little bit. We can see that price has built up liquidity trend line right here. Perfect liquidity trend line, as you can see. This liquidity trend line has been built up for what? As you can see, we have a perfect 15-minute zone right here. I'm just asking you that why are we using this wick zone instead of the candle before this week? Answer it, please.
Because the wick is biggest than the candle.
Sorry, I couldn't hear. Okay, but it's been already answered. There are sitting orders, inefficiency from there, exactly, mitigated already, exactly. All good. This candle has been mitigated by the following candles wick, and the inefficiency has been started from this candle and not from this candle. So this is a right zone right here. Let me just see it if it has flipped anything. So I will just place my marker here, and let's see if there's any 15-minute zone that has been flipped by this zone. So as you can see on this marker, there's this 15-minute zone right here that has been already indicated right here. So basically this zone, this 15-minute zone right here did not flip anything. So this isn't as valuable zone as the downside area. So I believe this zone, this decisional zone will be liquidity for the downer area. So we can expect the break of this zone and we can expect a deeper pullback because this is the extreme of the whole 4-hour leg. This is the extreme of the break of structure. So if price changes character somewhere around here, for example, sweeps the liquidity to the downside, you'll be able to write the exponential order flow down to this demand zone. This could be your first target. After this demand tap, you can simply wait for a 1-minute reaction again, because this is a 15-minute chart. This can be confirmed by the 1-minute chart, right? So if this zone is being tapped, after you hit your first target point, this is your first target point, you can wait for another confirmation, and you can wait for another position. So if price steps into this zone, creates a 1 minute change of character right here, you'll be able to write the expectation order flow to the upside. But there's the higher probability setup that price breaks below this zone on the 1 minute chart. Let's say creates a good entry criteria for this zone that is caused the break. You'll be able to happen another short trade, and you'll be able to actually target the extreme of the movement. So that's how you can use these zones to your advantage. This could be your target point. This could be your new point of interest, where you expect a reversal, where you expect a break. Basically, the point of interest are for the purpose to wait for confirmation. So these point of interest are confirmational points. You expect a confirmation on each of these point of interest, right? 50-minute point of interest, tap of this zone, either a break or either a change of character happens on this zone, that will be confirmed. If the change of character happens on this zone, that will be confirmed, that you'll happen a continuation, reversal trade. If it breaks, that will be confirmed that you'll happen a continuation trade. So yeah. Okay, where was I? Let me just read the questions. Marcel, if you could do a short video of how to take a trade from flip zone, starting from the high area. Yeah, okay, we'll see. It was also created in lunchtime. Yeah, this is actually a lunchtime zone. So, okay, what can we expect here? Let's see if there was any supply tap at this region, the new high creation. I will just simply look at this region. If there was any supply tap, as you can see, there's no unmitigated supply at this region. So basically, price reversed in the middle of nowhere after this high creation. Let me just go back after the high creation. Right here, price just reversed in the middle of nowhere. And actually, it seems like it created a change of character to the downside. As you can see, this was the last low point. This was the last demand zone right here that has created the last break of structure on the 15-minute chart to the upside and created this swing break right here and created the overall break of structure on the 4-hour chart too. So all of these break of structures, all of these swing breaks have been created by this demand zone right here. And as you can see, it seems like that this demand has been broken, has been changed by this following movement. Okay, but this could be also liquidity sweeping, a liquidity building movement. What can we do in this scenario? We can simply mark this supply zone out that has caused the change of character right here. And we can simply wait for a reaction on this change of character changing zone / liquidity sweeping zone on the 1 minute chart, right? Because the 50-minute chart can be confirmed by the 1 minute chart. Okay, so if price steps into this zone on the 1 minute chart, let me just switch back to the 1 minute chart and let me see if this was a, no, this isn't a lunchtime zone. So this is a pretty valid zone. So if price steps into this 50-minute zone, as you can see, price has built up liquidity to here. So sorry. So if price steps into this 15-minute zone / this 1 minute refine zone and changes character on the 1 minute chart, so it creates a 1 minute change of character or something like this, you'll be able to write the expectation short order flow, bearish order flow to the downside on this fresh new character changing supply zone. But if price steps into this zone, and let's say it creates a break of this zone, you'll be able to write the expectation long order flow up to the next target point, maybe even the 4-hour target point. But I believe price will react on this supply zone and price will create a deeper pullback to some. Sorry, don't interrupt me. Just wait, please. So I'm actually expecting the tap of this supply and the reaction, character changing reaction on this supply zone. And I'm actually expecting a deeper pullback to some of these demand areas. Even this will be broken because this is lunchtime zone and this is liquidity for the downer area. So I'll be expecting the tap of this extreme area down here and a deeper pullback. So I'll be aiming for short opportunities. But these are just predictions. These are really just predictions. All you have to do is react on what price is actually giving you. Okay, Naval, let me hear.
So Marcel, I get intimidated and confused when it comes to say that supply breaks. So we're just looking for a newly created demand zone on the 5 or 15 minute, right?
You mean, sorry, something on my mouse. So you mean if this supply breaks, right?
Yeah.
This is a 15-minute supply zone. So if the 15-minute supply zone breaks, it can be confirmed by what?
5 minute or 1 minute?
1 minute, right? So if this supply zone breaks, you'll be able to find the 1 minute zone that was leading to a break of this zone. And if there will be a good confirmation for this zone, good entry criteria for this zone, for example, it trades liquidity for this zone, you'll be able to jump in a trade on this specific zone that has created a flip of this 15-minute zone.
Okay, now, but do we need to wait for like a candle close on the 1 minute or just, I mean, how do we need to see a candle close on the 15 out above that?
The safer confirmation is the 15-minute candle close. The safest confirmation is the 15-minute candle close, because you can combine this knowledge by the liquidity concepts from the video course. Because as you may know, the 15-minute zone, liquidity on the 15-minute zone / 15-minute chart can be confirmed by the 15-minute chart, right? So this is a bit confusing because the 15-minute zone can be confirmed by the 1-minute chart on the structural view, but the 15-minute chart on the liquidity side can be confirmed by the 15-minute. So this is a bit confusing, but I would really recommend you to wait for a 15-minute candle close on this region. So if price candle closes above this 15-minute supply zone, you'll be able to find a good 1-minute demand zone at this region.
Okay. Thank you.
You're welcome. So where was I? Okay. So as you can see, prices created change of character here. We don't know yet if it was a change of character. We don't know yet if it was a liquidity sweep movement. We have to wait for confirmation on this 15-minute zone. That will be our first sign of the bias for this day. So if price steps into this 15-minute zone and creates a change of character to the downside, our bias will be bearish for this session. So we will be aiming for bearish short opportunities in this specific session today, right? But if price creates a break above this supply zone on the 15-minute chart, we'll be aiming for long opportunities. And basically that's all. That's all what we can tell from the 15-minute chart. We can really expect the sweep of this liquidity down here. And I don't know yet if price will sweep this liquidity after the tap of this 4-hour zone, or it will sweep before the 4-hour zone tap. You have to react. And this 15-minute zone right here is a bias decider supply zone actually. So yeah, it's all about reaction. It's all about how you react on what price is giving you. I will just switch to the 5-minute chart and refine these zones. As you can see, we can perfectly refine this zone to this smaller candle on the 5-minute chart, and we just keep this zone the way it is because this is a 4-hour zone. 4-hour zone, which is actually a 5-minute zone, as you can see. So the 5-minute zone actually lines up perfectly with the 4-hour zone. So let's just refine this zone too. This 15-minute zone right here. Basically, that's not a refinement. You can't really refine this zone. Switch to the 1-minute chart. As you can see, what has happened here? Price has created a liquidity for this zone just below this zone, just before the zone is being tapped. So here's this 5-minute zone. Price almost tapped this zone, created this fake lunchtime change of character here to the downside, as you can see. Let me just zoom in. So here was the last demand zone that has created a breakout structure here to the upside, or even this last demand zone that has created a breakout structure here to the upside. And price has created a fake change of character inside of the lunchtime zone. So as you can see, this is a fake change of character here to the downside. And this is liquidity building up movement. So this is one more sign that this zone will be tapped. And after the tap of this zone, and after knowing the fact that there's a liquidity and this liquidity will be swept into this zone, we can really expect a change of character after the zone tap. Because if there's liquidity for the high time frame zone and this liquidity is being swept into this zone, price usually gives a huge reaction on this zone, inside of this zone, because all of these orders, all of these stop losses will be converted into another short positions, because early sellers has opened positions here. Lots of early sellers has opened positions right here, and they have placed these stop losses somewhere around here. So if all of their stop losses will be swept, all of these stop losses, these orders will be converted into new orders inside of this supply zone. These orders will become collected. New orders will be opened here because this is an order block. New orders will be opened here. All of these orders will become converted into new shorts, and this will give a huge reaction to the downside. So we can really expect the reversal on this supply zone. And sorry, guys, I have to go out for a toilet. So please just keep them with the company.
Yes. Can I show the screen for a minute? Oh, I can't. Okay, guys.
Sorry, did you say something?
Yes. Can I share my screen?
Yeah, of course.
For a
But
bit,
no, you can't, because that will stop the recording. If
Okay.
You can.
I sent you the picture. So, guys, I made
will
you
put it
something.
here. Wait a minute.
I made you something in that case of psychology because many of you sent me DMs about psychology and FOMO and yeah, and here it is. Just made that for you, and I will extend this with the solutions of each fear, how to handle them. So we wanted to help you this way as well, not just the technicals. And if any questions you have, feel free to ask.
Will you share this in the Discord, John?
Yes, yes, I will. Yes, I will. Just wanted to show you here, and I will make a continuation of this because I want to clear the solutions of each type of fear. This is one of the hardest part of trading, you know, and we have to talk about this.
Yes, John, make a video about it.
Yes, that's
Thank you very much, yeah.
that's a plan for the near future too. Yes, and much more, because this is just one thing about psychology, and there are others.
Send some PDF or screenshot in the psychology channel.
I'm here. What is this? I'll be left out.
Hey, Marcel, this is just psychology, man.
Oh, okay.
Yeah.
Let
I
me
hope that
see.
you will know to do.
John, you didn't even mention this for me.
No, it was a surprise for everyone.
You're not special, Marcel. We
I
are.
just made it.
Okay, fuck you.
I just made it 10 minutes ago.
Let me just see. The most common emotion in trading is fear. Yeah, I will read this. Thank you, John.
You are welcome all.
Thank you,
So,
John.
you will send this to the group, right?
Yes.
Okay. Okay, the tap actually happened, as you can see. 5 minutes zone mitigation, a liquidity sweeping movement right here, between option liquidity sweeping movement, and as you can see, here's a strong reversal immediately after the tap. So all we have to do is wait now. Basically, New York opens in 15 minutes, but if you check the news, there will be a there will be a high impact news after 15 minutes. Sorry, I can't speak. So there will be a high impact news 15 minutes after the New York session opens. So I won't trade before this news has been released. So I will just keep trading and wait for the news to kick in. And after that, I will be able to find setups. And after that, I will be able to send you markups. But basically, right now, all we have to do is wait. We got this POI, we got the directional bias, we know what we can expect from price, right? So all we have to do is wait. Okay, actually, let me just switch back to the 15-minute chart. And yeah, that's all. That's all. Have you guys got any questions?
Yeah, I just have a quick question. If you go back to the 1 minute, I only just joined your group, I think a few days ago.
Yeah.
Just above that zone, there's a bit of an imbalance on the 1 minute at the top, right there. Would you be expecting price to almost tap above that liquidity there and then see a rejection downwards?
We have to see. I can't really predict it. We have to see. This is the high probability zone because actually the inefficient movement on the 15-minute chart has started from this zone. And basically, 1 minute chart in itself is just a noise. If you combine the 1 minute chart with the 15-minute and the 5-minute chart, that will be clear. But if you're using only the 1 minute chart, that will be noise, right? There's no inefficiency right here between this candle and this candle. Of course, there will be inefficiency on the 1 minute chart, but there's inefficiency on lots of other places on the 1 minute chart. That's why you have to combine the 15-minute chart with the 1 minute chart and can't just rely on the 1 minute chart only because that's noisy. But of course, there's a possibility the price will tap this zone because there's liquidity, and there's the possibility of price will sweep this liquidity, sweep this double taps right here and tap into this random 1 minute zone. but I see that price will react on this zone. But all we have to do is react. All we have to do is react on what price is actually giving us. If it breaks above this supply zone and sweeps the liquidity right here and taps into this random 1 minute zone and creates a change of character based on that 1 minute zone, that's all right. We will react on that zone, but you can't really predict it.
Thanks, appreciate that.
Of course. Flipping one question. Do you take? No. You can't take trades on lunchtime zones. That's the golden rule. If you see a lunchtime zone, you just turn on this indicator. If you see all of these lunchtime zones, you just ignore these zones. You just blur it out. This is blood in the water. You can't rely on these zones, okay? You can't rely on these candles. All of these candles will be broken. Chilling markets, what do you mean short recap from yesterday? I didn't take any trade yesterday. Flipping one question. Do you think this time is supply have liquidity sweep? You mean this one? You mean this supply swap liquidity? Yeah, this will be liquidity sweep. There's liquidity here, as you can see. It can be considered as liquidity right here. This supply has swept that liquidity. And that's why we don't know if it's just a liquidity sweeping movement to the downside or a character changing movement. We don't know yet if it was a liquidity sweep or a character change. All we have to do is react. But as you can see, price is strongly reacting on this zone. And as I said, after liquidity sweep here, all of these stop losses have been converted into new short orders right here. Strong reaction, as you can see, and inefficient movement to the downside. So if price changes character here to the downside, we'll be able to take the short continuation trades to the downside and write the expectation on short order flow. That's all. Everything is on the chart. All you have to do is learn how to read it. Basically, all of these movements are price action footprints. Everything is in front of you. Sunny, it's in the group, in the resources. Can you show us why you don't take any trades? Many people come in to get losses. It wasn't clear there for me. Huge inefficient movements to the upside, high volume, really high, super high volume. It wasn't a day for me. I took how many? 14 risk reward ratio on Monday, 14%. So yeah, I didn't risk my capital. Yesterday wasn't clear for me. Not every single day is a trading day. Okay, you just have to learn this. You don't have to trade every single day. You don't have to force trading every single day. You can just skip days. You can just wait for clear price action. If price action isn't clear for you, then just skip that day. It's still better than forcing trades and losing 3 times in a row, right?
We're seeing a charge happening. What's up?
Yes.
I said, are we seeing a charge going to happen right now?
Yeah, I believe it will happen. As you can see, everything is happening exactly how I told you right here. It's the footprint of the price action. Orders have been opened here. Fake change of character in the lunchtime. You can't rely on the lunchtime zone. Stop losses converted into new short orders right here. New short orders, what will do? It will push price to new lows. But there's of course the possibility that price will convert these short orders at this order block into long orders, and all of these short orders will be taken out. All you have to do is react. If this zone right here breaks, we'll take short continuations. If this zone breaks, we'll take long continuations. If this zone, this 1 minute supply holds, creates a change of character, we'll take short continuations again. Simple reaction-based strategy, right? Anyway, the supply created in lunchtime. You mean this supply? No, it wasn't lunchtime supply. Yeah, that has been created in lunchtime. But there's a possibility that price will create a pullback right here and create a change of character outside of the lunchtime zone. So let's say it ranges right here, creates a change of character to the downside. Bam. All you have to do is wait. What we are doing right now is waiting for a clean price action. We are waiting right now for the clean direction, clear sign to enter.
Marcel, I'm sorry for this question.
Yeah.
Like so simple. If this long week is broken, we say choke happen, and in the new order block, we waiting for the pullback and the entry for the trade. If this equal high is broken, we watching for the buy. Is that correct?
You mean if these highs are broken, we are waiting for
Yes.
the buys?
Yes.
No, we
Is it
aren't, because
correct?
price is still inside of the 50 mid zone. You're not watching for long orders inside of a supply zone.
Okay, when the supply zone is broken with the body, we go to find some way to get long order. That's correct?
Yeah.
Okay.
The safest way for the longs, if this 1 minute supply breaks. So let's say, for example, price breaks about this 1 minute supply zone right here, and the body breaks about this supply zone. That will be a strong confirmation for the longs. So if this scenario happens, a new 1 minute order block, 1 minute demand zone will be formed here. And if there will be a good entry criteria, you'll be able to enter on this demand zone.
Okay, you say every time we going for the any trade, sell or buy, we need confirmation in the fractal market and in entry time frame. For example, when I
not on every single time frame. If there's no 4-hour zone, right? So there's no 4-hour
Yes.
zone, there's only a 50 mid zone. So the 50 mid zone can be confirmed by the 1 minute zone. So if there's a 50 mid zone, you will confirm that 50 mid zone with the 1 minute confirmation. If there's a 4-hour zone, let's say this is a 4-hour zone, you will confirm this 4-hour zone with the 50 mid zone, and you will confirm the new 50 mid zone with the 1 minute chart. But there's only a 50 mid zone right here. So the 50 mid zone can be confirmed by the 1 minute chart. And if I switch to the 4-hour chart, you can see that there's no 4-hour zone inside of this movement. So there's no 4-hour zone. But if I switch to the 50-minute chart, there's a 50-minute zone that has created a change of character here. So the 50-minute zone can be confirmed by the 1-minute chart, right?
Yes.
And all of these movements are leading for the continuation of the short, because I wouldn't really take long trades right here, because as you can see, this is literally the highest point of the premium leg. This is the low point, this is the high point, and you can't really take buys on the literal upside, literal highest point on the leg, on the 4-hour leg. I will be aiming for shorts at this region. I'll be aiming for pullbacks to some deeper demand areas. And after a demand area tap, we'll be able to look for long continuations.
Okay. Thank you.
You're welcome.
Marcel?
Yes?
Can I ask you a question about the double top there on the minute? Do you see that as a...
Which one? This one or this one?
Yeah, that one you just highlighted. Sorry, the first one, yeah.
Yeah.
Do you see that as a chalk? I see that as a chalk.
Because
you've got a high and low.
Let me just show you.
And it's not, there's no demand and supply in it, but see high.
You can't really consider this the break of structure. Basically, it was just a weak break. Of course, literally a 0.0.0.1 body break has happened right here, but this isn't really a break of structure to the upside. This is just a liquidity creating movement. So I can't really consider this right here. I mean, this as a change of character.
Okay.
The change of character, the real character. Sorry, your microphone is really bad.
Okay,
so,
sorry.
Not your microphone. Wish news. So if this low point breaks, which will happen, as you can see, I believe this low point will be broken. If this low point breaks, that will be a really strong confirmations for the short continuations. Price is reacting on this demand zone right now. As you can see, strong reaction on the 50% of this week, but I believe this will be broken. There's a possibility. There's a possibility that price will sweep these fake lunchtime supply zones, break above these fake lunchtime supply zones, and after this, it creates a change of character to the downside. All you have to do is react. I showed you the possibilities for today. Yeah.
John, this was a 1 minute viral market.
Sorry?
This was a 1 minute. This was a 1 minute lunchtime zone. Will it break it?
This is 1 minute lunchtime zone. Yeah.
Yeah, of course. Every zone forming in the lunchtime zone will break.
every single lunchtime zone will be broken sooner or later.
Okay. Okay, thank you.
You're welcome. So yeah, guys, these are the expectations for today. Make sense? Understandable?
Yes,
Well done.
perfect.
Yes, John. Yeah. Yes, market flipping.
You could understand everything, the fractal markers too, how the time frames are correlated, how you can combine the time frames together. It's actually in the video course actually. Everything is in the video course. I've explained this in the video course too, but seems like you need some additional help on these time frame confirmations, and I hope I could give you this additional help, and it was helpful for you.
Sorry, just a quick question.
Okay, guys, last questions, please.
Yeah, sorry, just last question for me.
Yeah.
As mentioned, obviously, I've only just joined, so I haven't gone.
Sorry, Vishnu, please mute yourself because your microphone is terrible.
All right, cool. Yeah, as I mentioned, I only just joined, so I'll be going through your sort of content. But question I had is, do you confirm Euro USD with Dixie at all? Or
No. I'm not using the XI.
Okay, cool.
Just Euro USD. Basically, the XI shows the same as Euro USD, just on the other side, right? So if Euro USD is going up, then the XI is going down.
Yeah.
Basically, that's all. You see the same exact same thing on both of the charts, both on Euro USD and both on DXI. You don't need extra confirmation with the DXI. It's all on the USD chart. It's all here. All of the footprints are right here.
Cool. Appreciate it. Thank you.
Marcel, can you confirm my understanding, please?
Yeah. Okay. Last question.
Yes. In this case, the main trend is bullish. So if you want to play the pullback, we must wait for the 15-minute chart. Is that correct?
The 15-minute chart has happened here, as you can see, and price is inside of the zone that has created a check on the 15-minute chart, right?
Yes.
Yeah. So the 15-minute change of character has happened, and we are waiting for a confirmation on the 1-minute chart because the 15-minute chart has been confirmed that it's bearish. So we are waiting for a 1-minute confirmation to confirm the 15-minute zone.
Yes. It was just my understanding that I wanted you to confirm. As we are in bullish trend.
Yeah.
So we must take longs on 50 minutes demand after 1-minute chart, isn't it?
Yeah.
So if you want to play the pullback, we must wait for 15-minute chart. Is that theory correct?
Yes.
Oh, thank you.
Yes.
That was.
Price is created a 15-minute change of character right here. That has been confirmed that the 15-minute will turn into bearish. If price creates a 1-minute change of character, that will be confirmed that all of the time frames will turn into bearish, except the 4-hour chart. The 4-hour chart is bullish, right? But the 15-minute and the 1-minute chart has turned into bearish, so you'll be able to take the counter trend pullback trades down to these demand regions. But if you are insecure about the counter trend trades at this region, you can just simply wait for a tap of these demand zones or tap of these supply zone up here. If you are insecure about the counter trend trades, if you're insecure about the pullback trades, just simply wait for your POIs to be tapped.
Yes, yeah, I'm very clear.
Okay, perfect.
Yeah.
So New York has opened right now.
Hey Marcel, most of the counter trend was failing for me, right?
Prakash, please just use the chat because I can't really hear you through the microphone.
Oops. Okay, I'll ask you. I'll DM you later.
Okay, perfect. 1-minute check has happened. Yeah, happened, but inside of the lunchtime zone. These zones are lunchtime zones. We are waiting for a new New York zone. So if price creates a change of character at this moment from, for example, this zone, that will be a good confirmation. But these zones are lunchtime zones. As you can see, let me just show you. These are red zones.
Oh, so you mean to tell me, Marcel, that even charts and everything else is going to be fake in this lunchtime zone? Not just the zones?
If a change of character happens, zone will be formed, right? So a change of character has been caused by a zone. So you can't rely on that zone that has caused the change of character. So basically the change of character is fake. Because if price creates a change of character here, and that's change of character has been created by a fake zone, that zone will be broken. So change of character will be happen to the upside too, right? So this change of character will be considered as fake.
True.
Okay, guys. So that's it for today. That's it for this session. Thank you guys for being here. I hope you learned something new. I hope you enjoyed this session. And I will send you the markup updates as soon as something important happens. Right here at this price action region, I will send you the markup updates. And yeah, guys, wish you a beautiful trading day, trading week, rest of your trading week, and keep the markets together. Let me know if you get any questions. Just DM me, DM John as the question channel. And yeah, guys, wish you a beautiful day. Thank you for being here.
Thank you, Marcel.
Thank you.
Thank you.
Thank you for being here, guys.
Thank you, sir.
Thank you, Marcel.
This guy's a go from thing.
It's going to start the recording and it's on. So enough of chit-chatting. Let's get to the topic and let's start the backtesting session because that's why we are all here. So, okay, welcome everyone. It's Flipping Markets here, or Marcel, if you like the Marcel more, and John is here also. Welcome everyone. Let's start the backtesting session of this Sunday, the first backtesting session of April, and this is a bonus backtesting session again because I can't leave you without backtesting sessions. And first, I would like to ask everyone to mute themselves because I can hear the background voice from some of you, or I will just manually mute everyone. Just a minute. Mute all. Okay, perfect. So let me just generate a random number as usual, because we always generate a random number and backtest that day, which pops up. Random number generator. Okay, perfect. And which day is it? 3rd of April. So let's just test March. So from the 1st, how many days were in March? 30. Okay, so from the 1st to the 30.
31.
31, yeah?
Yeah.
Yeah, actually 31, sorry. So 31, generate 28. That's on last week, yeah? Yeah, that was on last week. So the 28th of March, let me just replay the price on that region. Where is it? What am I actually doing? Sorry, just the Discord popped up. Can you see my EURUSD chart, guys?
Yes.
And just the chart? Nothing?
Yes. Just the chart,
Yeah,
and you
it's
are on the 1 hour time frame.
Yes.
Okay, sorry, just having some troubles with the Discord. I will shut it down. Okay, perfect. I will open the chat once again. Perfect. So where was I? Where's it? Where is it? 28th of March. Here is it. Okay. Sorry, guys. I'm just a bit slow because I had a killer leg day and I'm tired as hell. So yeah, my legs are literally shaking. So that's my brain. So I just started analysis on the 4-hour chart. Okay, here we are. Perfect. So let's begin the backtesting session. Sorry, guys, once again. Okay, let's start on the 4-hour chart. What can we actually see on the 4-hour chart? As you guys may know, we are always starting the analysis on the 4-hour chart. And we have to do one more thing before starting on the 4-hour chart analysis. And what's that thing? What do we have to do?
Check the news.
Nikita, yeah, thank you. Checking the news. So let's see the 28th news in March. Apply settings. Okay, perfect. So as you can see, on this day, there aren't any high impact news, just 2 low impact news with yellow folders. So we don't give a shit about these news. This will be a perfect day to backtest without high impact news. So we can expect for good movements, good medium impact volume, medium volume movements. So let's just start analysis on the 4-hour chart. And actually, I'd like to analyze the full chart right here We've talked about this region several times in the previous live sessions, previous recap videos, case studies, etc. But we have to go through this price action region once again, because it's really, really important. Because every single time you do your backtesting session, whether if it's with yourself or with a friend or with anyone, you have to analyze the full chart. Okay, the full chart, not just the previous price action region, the full chart that you see on the 4-hour chart. So let's just start the analysis here. Okay, we talked about it several times. Price has tapped the 4-hour demand zone, or this was a daily demand zone. Yeah, let me just check. I believe this was a daily demand zone down here. Yeah, this was a daily demand zone. So price has tapped the daily demand zone down here. And after a daily demand tap, it changed character to the upside, right? After this, price has created a higher high, higher low bullish order flow to the upside. As you can see, after a change of character, here was the high point, here was the last strong low point that created a new high point. And this high has proven to be weak because this high couldn't break below the last strong low point, right? So after this, price has created a new strong low because this strong low point couldn't break above the last previous weak high point right here. And actually, this was the weak high point because this doesn't really count as a high point because this was just a liquidity sweeping movement and it didn't body break the structural high above. It was just a weak break, right? So this is our last structural high point and price has broke above the structural high point with body closure right here. So this has proven that this is the last strong low point and this is the last expectational weak high point. Why am I saying that this is an expectational weak high point? Because I'm just following the structure. And as you can see, our structure on the 4-hour chart is bullish because price has come from the time frame that it will be bullish after the 4-hour change of character. Because as I said in the previous live session, in the fractal time frames live session, if price changes character on the 4-hour chart after a daily demand tap, that will be confirmed that the higher time frame 4-hour chart will be bullish. So price has tapped these demands on right here, change character on the 4-hour chart. So the overall order flow has changed into bullish. And price is respecting the demand zones over and over again and creating a series of higher highs and higher lows. So creating demand zones right here, respecting demand zones, respecting strong lows, creating highs, creating breakout structures to the upside, creating demand zones, strong lows somewhere in this region. And we'll have to find that demand zone that has created the less strong weak high point right here. And we have to find the less strong low point. Okay, let's just zoom in. What can we see at this region? We can see that price has created this last high point right here, last breakout structure. Let me just mark it with the breakout structure line. So price has created this breakout structure to the upside at this line. And as you can see, this region down here is pretty efficient, right? There's no inefficiency. So we can't really call that this is an inefficient area right here. But as you can see, price has changed character here on the 4-hour chart right here. This was the last demand zone that has caused the last breakout structure and the less inefficient push. But this isn't a strong low point. The strong low point will be somewhere around here or around here. We just have to find a strong low point. I believe that will be on the 15-minute chart because as you can see, as I said, the 4-hour chart is efficient in this region. So what else can we see? We can see that price has changed character here to the downside and started a bearish order flow, slow bearish order flow to the downside, as you can see, which is liquidity. This is a liquidity building up movement because there's liquidity trend line, slow, efficient movements to the downside, meaning it's liquidity building up movement. What else can we see here at this region? We can see that price has created a range, a perfect range. As you can see, there are triple bottoms. Let me just mark it, and there are equal taps here also. So we can call this as a perfect range. What do we know about ranges? I'm asking you guys, what do we know about ranges?
They will be liquidated on both sides.
Exactly. Exactly. All of the ranges, even if these are on the 4-hour chart, even if these are on the 15-minute, 1-minute, 5-minute, any time frame, the ranges will be liquidated. The ranges will be taken out on both sides. So what can we see here? We can see the price is actually liquidated the downside range. As you can see, here was a clear liquidity sweeping movement to the downside at this line. Here's a liquidity sweeping movement. And after a liquidity sweeping movement, sorry, let me just type sweep here. After the liquidity sweeping movement, price seems like change character on the 4-hour chart, right? Why am I saying that it's change character on the 4-hour chart? Because as you can see, here's this inside bar. This inside bar is inside of this candle. So every single inside bar will be with supply/demand zone. So this was the last supply zone, and price has changed character here to the upside, as you can see, with this wick. This is a change of character on the 4-hour chart. But I believe on the 15-minute chart, it will be much cleaner. So we will just refine it on the 15-minute chart. And we can't really identify a good 4-hour zone here at this region because this isn't inefficient. This is nothing. There will be a clean zone on the 15-minute chart, and the 4-hour chart is actually dog shit, as you can see, just like this region and just like this region. Okay, what else can we do on the 4-hour chart? We can find the reversal point. Price has reversed. Let me just find the horizontal line. Price has reversed around here after tapping into some sort of demand zone down at this region. And that demand zone will be inside of this 4-hour candle, because as you can see, this wick has been left unmitigated. This is the only unmitigated region at this price section. So this wick down here is the only unmitigated region, which has been mitigated by this following candle. But after the mitigation of this wick, price has actually reversed to the upside and created a 4-hour change of character after the liquidity sweeping movement, right? So what can we tell about the 4-hour chart? We can see the price has swept liquidity here, swept the downside range liquidity, and tapped into some sort of 50-minute demand zone down here at this region. What can we expect from the 4-hour chart? We can expect that price will sweep the upside liquidity too, right? Because as I said, ranges will be swept sooner or later. This is a golden rule. Ranges will be swept sooner or later, and more likely sooner. So after the downside liquidity sweep, we can expect a 50-minute change of character to the upside, which has happened. Actually, if I switch to the 50-minute chart, you will see it better that there was a 50-minute change of character. So after the liquidity sweeping movement to the downside, prices changed character on the 50-minute chart and started to create a pullback here. On the 50-minute chart, this leg, this 4-hour candle, will be a pullback, and more likely we'll be able to find a good entry opportunity somewhere around here on the extreme of the 50-minute leg. Okay, so the expectations are actually prices swept the downside liquidity range, tapped into some sort of demand zone. Let me just put back the line right here. Price tapped into some sort of 50-minute demand zone around this region, and started to create a pullback after a change of character to the downside. So let me just switch to the 50-minute chart, because I believe that's all about the 4-hour chart. No, actually, sorry, we didn't determine the overall 4-hour target point, which is still this supply zone up here. We've talked about this supply zone several times. This is our overall target point on the higher time frame structure, and we are expecting the top of this supply zone. Okay, let me just clarify one more thing, because some of you guys weren't here in the previous live session, and that live session was about the fractal timeframes. And actually, this is the good example for the fractal timeframes. What do I mean under the fractal timeframes? I mean that all of the timeframes will be confirmed as the main direction. And the main direction in this case is bullish, because price has stepped into a daily demand zone down here and changed character on the 4-hour chart. So the 4-hour time frame is bullish, right? Because price has created a strong low point right here, which was created a breakout structure here to the upside with huge inefficient movement to the upside. So the 4-hour has been confirmed that it's bullish. Somewhere around here, as I said, there will be a strong low point. We can expect a reaction on that strong low point, which has happened right here. And after that, a 50-minute time frame will change character to the upside again. So that means the 50-minute time frame will turn into bullish again. So the 4-hour chart and the 50-minute chart right here at this region is bullish. What are we waiting for? What are we waiting for? We are waiting for a less fractal confirmation, which is the 1-minute chart, right? Because each time frame confirms another. 4-hour can be confirmed by the, sorry, let me just start with the daily. Daily can be confirmed with the 4-hour chart. I know I say this in every single session, but it's so important because you guys are keep making the same mistakes, and you are keep making the bad change of characters inside of a 4-hour zone and inside of a 50-minute zone. So daily can be confirmed by the 4-hour chart. 4-hour chart can be confirmed by a 50-minute chart. 50-minute chart can be confirmed by a 1-minute chart, right? So the 4-hour has been confirmed. I mean, the daily has been confirmed right here. So the daily has been confirmed by a 4-hour chart. So it's bullish. The 4-hour chart has been confirmed because it broke structure here to the upside, so created a strong low. 4-hour has been confirmed. 50-minute has been confirmed because price has more likely created a change of character right here at this region after tapping into a strong low point. So the daily has been confirmed, 4-hour has been confirmed, 50-minute has been confirmed, and we are waiting for the 1-minute inside of the 50-minute confirmation. So as I said, right here at this region, we are waiting for a 50-minute confirmation. I mean, a 1-minute confirmation inside of a 50-minute zone. Okay. So that's all. Let me just switch to the 50-minute chart and find that depends on the price was reacting on here at this region. As you can see, let me just zoom in. After a sweeping movement right here, price has created this sweeping movement. After the tap of some sort of demand zone right here, it created a strong reversal to the upside, and the strong change of character here to the upside. This was a change of character on 50-minute chart on several places, tapping to some sort of 1-minute demand zone down here, sweeping the liquidity here at this region. And after it created a breakout structure here to the upside and a higher time frame change of character right here. And this was the 4-hour change of character that I was talking about. This was the inside bar. This was the inside bar right here, which has prices changed right here, as you can see. So, okay, let me just find the reacting demand zone at this region, which was price was reacting on. And as you can see, here's a perfect demand zone that has created a flip. Why am I saying that it's created a flip? As you can see here was a bearish order flow at this region. On the 15-minute chart, it created a change of character here to the downside, created breakout structures continuously to the downside over and over again. And after this, we had this last supply zone, last 15-minute supply zone at this region, and price has flipped this supply zone. And the flip has happened from this candle, right? As you can see, price was coming up, reacted on this supply zone, created a flip zone, and from this candle, from this 15-minute candle, this 15-minute demand zone, prices flipped the overall 15-minute supply zone, the last recent 15-minute supply zone in this region. So this is the origin of the bullish order flow at this region. So this demand zone, this 15-minute demand zone has caused this overall bullish order flow to the upside. So this is a pretty strong 15-minute demand zone. We can usually expect a reaction on these kind of demand zones. Okay, so let me just extend this zone real quick. Sorry for your time. So as you can see, prices react on this demand zone. And after the reaction on this demand zone, it changed character to the upside here. After a character changing movement to the upside, it changed character to the upside again on the higher time frame and broke structure here to the upside with huge inefficient push. Okay, this was the last recent 15-minute supply zone inside of the 4-hour supply zone. So price has changed character here to the upside. We couldn't determine a good 4-hour supply demand zone down here at this region. So there's no good demand zone, 4-hour demand zone at this region, but we can easily determine a very, very good demand zone on the 15-minute chart down here, as you can see. This 15-minute demand has started the whole inefficient order flow to the upside, which was leading to a change of character on the 4-hour chart, right? So this is a really, really good demand zone. Okay, I believe that's all about the 15-minute time frame. We can just determine more higher time frame. 15-minute supply zones, for example, up here. This could be our higher time frame target point, or this could be our higher time frame target point up here, which has changed character on the 15-minute chart, right? Because price has changed character here, or just sub changed character here. But this could be our last recent 15-minute supply zone because it created huge inefficient movement to the downside, and this could be our target point after the mitigation of this demand zone. Okay, so as I always say, you always have to build a plan, right? You always have to build a plan before every single live trading session, before every single backtesting session, before every single forwarding session. So you always have to build a plan on the higher time frame and on the lower time frame too. So I'm building a plan right now. What can we expect from price right here at this region? We can expect that price will tap into this supply zone and create a change of character inside of this 15-minute supply zone on the 1-minute chart. Sorry. So create a 1-minute change of character inside of this 15-minute zone. Sorry, as I said, I'm really, really tired. And if this happens, we'll be able to target this demand zone down here with the shorts. Second scenario, if price taps this demand zone first and creates a 1-minute change of character inside of this demand zone, we'll be able to target this 15-minute supply zone or this 15-minute supply zone with our longs, right? This is our solid plan for today because there's nothing really much to worry about because price is fractally confirmed that every single time frame is bullish. So there's no chance that this demand zone will be broken because, as I said, every single time frame has been confirmed for bullish. Daily is bullish. That has been confirmed by the 4-hour chart. 4-hour chart is bullish. 4-hour chart has been confirmed by the 15-minute chart right here with this 15-minute change of character. The 15-minute chart will be confirmed by the 1-minute chart if price steps into this 15-minute zone that was leading to change of character right here. So if price steps into this 1-minute zone, more likely there will be a change of character and not a break of this zone. So we can really expect the change of character inside of this zone. So far, everything makes sense for you guys? Everything is understandable?
Yeah.
Okay.
Yes.
All great.
Okay, I was just drinking, sorry. Okay, so basically that's all about the 15-minute time frame. What's the next step? I'm asking you, what's the next step? Just write it down or use your microphone, please.
Wait for the bus.
One more step before that? Anyone? No.
Refinement.
5 minutes.
Yeah, who said the refinement?
Yeah,
It's
me.
me.
Also, we can wait for liquidity creation.
Refine 5 minutes.
Exactly, we need a refinement of the 5-minute. Thank you. So let's find the refinements, starting with this zone up here. This will be, okay, I'm asking you guys. Which zone, how can you refine this zone? Can you just read? Thank you, Nikita.
Yeah, the week.
Yeah, thank you, Nikita and Hussein.
Use only the week.
Exactly, and can you explain why are we using the week? Only the week?
Because the other candle has mitigated the longer candle in front of it, so we use the wick.
Exactly. I was just, what the hell did I just do? Okay, sorry.
Yeah, let's take the
Somehow, yeah, I press space.
Yeah.
So here we are, back again, back on track, perfect. So we will find this on the wick only because the last recent candle before the inefficient movement has been already mitigated by the wick, right? By the following wick. And all of the orders are sitting on this single wick and not on this candle. Just think logically. Can there be any orders on this candle? No. Why?
No.
Because the following wick is higher than this actual candle. So there can be orders on this candle sitting because all of these orders have been picked up by this following upside movement. And the original high impact orders have been placed into the market right here at this wick. Because as you can see, this inefficient movement can be caused only by BFIs. Every single inefficient movement can be caused only by BFIs. And BFIs have placed their orders on this wick because this wick has caused the inefficient movement and not this upside candle. Okay, next refinement, this supply zone. Again, which is the right supply zone in this case?
Wick zone.
Once again, the wick. This is the right refinement. Let's see this one. I'm asking you again, which one is the right refinement in this case?
Lower candle.
Lower candle, exactly, because the inefficient move has started from this candle.
Lower candle.
So, as you can see, these are our refinements, and I'm going to keep this 50-minute zone too, because I actually remember for this session, and this was a pretty good session, and this will be really, really helpful for you. Yeah?
Someone is saying the supply is in lunchtime.
Yeah, that could be in lunchtime, but that's still our target point.
Yeah, still target point.
That's still our target point. We can expect a break of that supply zone, but
We're
we can
not
target
trading on the-
we can target
we're
that
not-
zone because that's a good supply zone.
Yeah, we
And-
don't trade on lunchtime, but we can target it.
Yeah, we can place orders on lunchtime zones, but we can actually expect reaction on these lunchtime zones. And how do we actually trade? We trade based on reactions, right? So we are not swing traders. We are not holding our trades for a long period of time. We are expecting for reactions. So if there's a reaction on this supply zone, theoretically there will be a reaction on this supply zone, and let's say a price flips this supply zone, but there's still a reaction on it. There will be a good demand zone that has flipped this supply zone, and we can re-enter on this supply zone. I mean, on this fresh new demand zone, right? We are not holding our trades for swing trades. We are closing our positions on the less recent 15-minute/5-minute supply/demand zone. And the less recent 5-minute/15-minute supply zone in this region is this one right here. So if price taps this zone and reacts on it and gives a break, for example, we'll be able to target the higher time frame supply zones at this region. If price reacts on this zone and creates a change of character on this zone, we'll be able to target some deeper demand area somewhere around here. It's a reaction-based strategy, right? But yeah, we still count the higher time frame lunchtime zones as our target points. We are not taking any limits. We are not setting any limits on those zones, but we can expect a reaction on those zones. Does this make sense? Understandable? Everything?
Yes.
Okay, I will just answer the questions after the backtesting session. So, okay, let me just switch to the 1-minute chart and build a plan on the 1-minute chart too. Okay, what can we see here at this region? We can see that price has built up liquidity here for the zone, right? So here's perfect liquidity. Okay, what can we see? What can we see at this region? We can see that there's a clear supply zone that has caused less inefficient movement to the downside here at this region. And there's liquidity for this supply zone. But this supply zone is inside of the lunchtime fake zone period, right? So we can't expect we can't put a limit order on this supply zone. What else can we see on the 1-minute chart? Literally nothing else, because everything has been marked up on the 15-minute/4-hour chart. So all we have to do is wait for the bus, right? We are waiting for a bus step. We are waiting for a bus to come to our bus step. I will just close these zones. So what I will do now is play price forward and wait for some sort of reaction, even on this supply zone, even on this demand zone. anything. We are waiting for a clean reaction. We are waiting for a clean tap of either the supply zone, either the demand zone, and we are waiting for a clean reaction on these supply/demand zones. And we just play price forward. That supply zone is on because it's inside bar, don't get why. That's basically an inside bar. That's not a really valuable supply zone. These supply zones, as you can see, all of these supply zones are lunchtime zones. So you can't expect a reaction on these zones, but this is the less recent candle that has caused the less recent inefficiency. So I'm always marking the less recent 1 minute supply zone. And this is this. So let's just play price forward and start the backtesting session on the 1 minute chart. So what we are waiting now is a clear tap of the zone, clear sweep of some sort of liquidity, clear change of character, clean break of structure, either the break of the swing high structure, because all of these zones, as I showed you, all of these zones are lunchtime zones, so we can't really expect a reaction. I mean, we can't really set an order limit on these zones, but we can expect a reaction on these zones. So what we are waiting now is basically a break of this high point or the tap of this demand zone down here. That's what we are waiting for. We are not acting before anything happens. We are just sitting patiently on our hands, right? Just like in this session, in the live trading sessions. As you can see, liquidity has been formed for this supply zone. There's perfect triple taps, first tap, second tap, third tap. This will be swept sooner or later. And what zone can actually hold the sweep? What zone can reverse price after the sweep? The next recent supply/demand zone. And the next recent supply/demand zone, actually it's a supply zone, is this one. If the sweep happens, if the triple tap sweep happens, this supply zone will be able to reverse price to the downside, and we can expect a reaction on this zone. But can we open a limit order in this zone? Asking you, just circle it, yes or no?
No.
I just have to make sure that you understand, guys, the lunchtime concept, because it's really, really important, because I saw that lots of you guys are still making trades inside of the lunchtime zone, and you are still opening positions on the lunchtime zones, which you can't. And I just want you to understand this, that we can open a position on this zone, because this zone is part of the lunchtime liquidity zone. As you can see, red, it's red as blood. Red blood means avoid this. Just turn on this indicator and avoid all of the red candles. That's all. Okay, so we are waiting for a, so we are waiting for a clear reaction. Tap of the zone has happened, as you can see. So what can we expect from this tap? What can we expect from this supply tap? We can expect the tap of this demand zone down here, right? And what can we expect after the tap of this demand zone? As I explained you in the on the 5-minute/15 minute chart, we can expect the less fractal confirmation on the 1 minute chart, right? Because every single time frame has been confirmed on the 4-hour chart, on the daily chart, on the 15 minute, on the 5 minute, and the 1 minute chart is waiting to be confirmed. That's the less confirmation of the time frame. And if there will be a change of character on inside of these 15 minute or /15 minute zone, we'll be hopping in a long trade regardless. Okay, what's happening right now is the 15-minute zone has been tapped. Let's just mark out the last recent supply zone that has caused the tap of this zone, and that supply zone was this candle right here, right? This is an inside bar. We could call this as a actually sub supply zone, because this isn't a real supply zone in this case. This is just a small stop in the market. The real structural high/supply zone will be up here, but if price changes character here and breaks above this supply zone, that will still count as a change of character to the upside, because this is still the pullback on the second chart, right? Price is coming down, pullback, 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 and this is how the structure actually looks like. This is a pullback on the second chart, not on the 1 minute chart. This is an inside bar on the 1 minute chart. So if this supply zone breaks to the upside, that will count as a change of character, and we'll be able to open a position on the freshly new created 1 minute demand zone somewhere around here. And that's our plan right here on the 1 minute chart. We can really expect a change of character inside of these zones, because every single time frame has been confirmed. Expect the 1 minute chart. So the 1 minute chart have to be confirmed too. Okay, let's just play price forward. I believe lots of you guys remember for this scenario, because this was a last week and we were live trading this scenario, but this is really good. This was a really special scenario, and I will explain why. As you can see, price is reacting on this supply zone, taps the supply zone, and actually changes character. For change of characters, wicks are perfect enough, right? So price is actually changed character here with this wick. with actually several weeks. Here's the first week, here's the second week. And okay, I'm just asking you, which zone could be good for entry opportunity right here? Let me just mark the first one right here and mark the second one right here. Which one is better? Let me just first or second. This is the first, this is the second. Just circle the good zone.
The first one is liquidity. The first one is liquidity for the second one.
Exactly. Thank you guys for your answers. You can remove your drawings. The first one is perfect liquidity for the second one. I just wanted to show you this scenario because, as you can see, this is perfect triple bottoms. First bottom, second bottom, third bottom. So basically, the change of character has been happened from this candle, right? So this demand zone has caused the overall change of character. This demand zone has caused the change of character, but this demand zone will be part of the liquidity for the downer area. Actually, what did this demand zone do? This downside, this second zone, what did this do? I mean, the first zone, literally just an inefficiency, right? There's nothing much, nothing else that this demand zone caused, just an inefficiency, nothing but inefficiency. The change of character has happened from this candle, but still this will be liquidity for the downer area because every single time you see some sort of liquidity, for example, triple bottom, double bottom, trend line liquidity, that will be swept. Sooner or later, that will be swept, and you can't open a position inside of a liquidity pool. Actually, this week's homework was about liquidity. Just this is the perfect scenario for that liquidity sweeping movement. As you can see, this demand zone will be swept. Let me just play price forward. So, sorry, no. Let me just set an order rate on this zone because this is a perfect entry criteria. And let me just track the criteria first. And actually, I took this trade in live trading because this seemed like the perfect trade for me. What the hell am I doing? Sorry, guys, for making these mistakes. So let's track the criteria. Okay, actually, first criteria. Let me just open a text right here. First criteria. All time frames have been confirmed on the daily, 4-hour, 15-minute, expect the 1 minute. So every single time frame, I mean the 1 minute too, because the 1 minute confirmation has happened here with the change of character. So all of the time frames have been confirmed, meaning this is a main trend, right? Every single time frame is bullish after the change of character here on the 1 minute chart. So every single time frame has turned into bullish. Every single time frame is on the main trend. So this is a main trend trade. Perfect. What else happened? A 15-minute liquidity sweep / 4-hour liquidity sweep has happened. So I will just type it here, the higher time frame liquidity sweep, because here was a liquidity, right? It was a triple bottoms and price swept that liquidity. So that's one more criteria. Price has swept the higher time frame liquidity. And that's a criteria for us because if liquidity is being swept into a deeper demand area and price reacts on that demand deeper demand area and changes character, for example, on the 15-minute chart, that counts as a criteria. So third criteria, 15-minute change of character. Fourth criteria, 15-minute zone tap. Fifth criteria, strong reaction, right? There was a strong reaction, tap of this zone and immediate reaction to the upside. This is a strong reaction. We can call this a strong reaction. Sixth, inefficiency, right? That's inefficiency. Seventh, change of character, because there was a change of character. Eighth, were there any liquidity sweep? There were. As you can see, here was a range on the 1 minute chart too. Equal taps, liquidity trend line, or equal bottoms, relatively equal bottoms, or just a liquidity trend line. So prices swept the liquidity, this downside liquidity, into this 15-minute zone. So the 8th criteria will be the liquidity sweep into the higher time frame zone. So the liquidity sweep has happened. 9th, liquidity creation, right? Because there was a liquidity creation. We were just talking about this liquidity creation, this triple bottoms for this downside area. So we can safely set an order limit on the 50% of this candle. And why are we using the 50% of this candle? Quick answer.
Because the wicks are longer than the bar.
Exactly. Chilling markets. Why will there be NFP? NFP was on Friday. And this was Monday. So there's no NFP. So we can easily set an order limit on the 50% of this candle, right? Perfect entry criteria, perfect entry with all of the criteria fit, literally 9 criteria for this zone. Let's go for it. I believe most of you guys remember what happened after this. Sweep, stop loss hit, right? What could be the mistake here? I'm just asking you guys, what could be the mistake here? Which we always run into.
The 50% of 5 minute refined.
Yeah, it has not mitigated the 5 minutes.
Exactly. Exactly. Thank you, guys. That's why I always say that we can always count on a deeper mitigation on a higher time frame zone. Do you remember that I tell you every single time in every single live session or recap video, not in recap videos, actually in live sessions only. So I tell you in every single live session that we can count on a higher time frame 50% mitigation at least. And if the 50% of the higher time frame zone is being mitigated, then it counts as a mitigation. If less than a 50% of the zone, if it's a 50-minute zone or a 4-hour zone is being mitigated, that won't count as a mitigation. And as you can see, price did not mitigate the 50% of this zone. So this means this zone has not been mitigated. This isn't a mitigation. The 50% wasn't mitigated. It mitigated less than a 50%, so we can't count this as a mitigation. We always have to wait for a deeper mitigation because we can run into trades like this. As you can see, this is a perfect entry criteria trade with 9 criteria, with all of the 9 criteria. But still, price didn't mitigate the 50% of this zone. So what can we do in this case? We don't have to panic. We just have to adapt. And actually, I took this loss in live. I took this loss in live session. That's good. That's perfectly fine for me. -1 risk-reward ratio. What can we do in this case? We can wait for a deeper mitigation of this zone, which 50% of this 50-minute zone lines up perfectly with the 5-minute refinement, as you can see. So we can wait for a deeper mitigation, and we can actually wait for a 1-minute confirmation inside of this 5-minute zone. And if that small change of character, which has happened, you will see, if that small change of character happens, I will go for this trade regardless, with even 3 criteria. If there's no inefficiency, if there's no liquidity creation, if there's no liquidity sweep, if there's just a change of character, I will go for the trade regardless, because every single time frame has been confirmed that it's bullish. And 50-minute tap has happened. It wasn't enough. Price needs to collect more orders from below the 50% of this zone. So if the 50% mitigation of this zone happens, I will go for this trade regardless if there's a change of character. Okay, let me just play price forward and you'll see it. But here's the mitigation. Price has almost mitigated the full zone, as you can see. Mitigated maybe the 80% of this zone. Perfect mitigation. And if there will be a change of character, which will be right here, and if there will be a change of character, we can hop in a long trade and we can write the expectation order flow, right? Let me just play price forward. There's a change of character. That's why I said there was a tiny bit of change of character. As you can see, this still counts as a change of character. Why? Because for change of characters, wicks are perfectly enough, right? So the change of character has happened.
Sorry, Marcel. I just want to ask one question. Change of character, even on the 15-minute time frame, is the wick still enough?
Actually, on the 50-minute or higher time frames, I do not really count the wicks because that could still be a liquidity sweep.
All right, so just for the 1-minute time frame.
That's the best confirmation for the 1 minute, yeah.
All right, thank you.
I use this on the 1 minute most of the times, but sometimes a 50-minute wick can be, a 50-minute wick can change character if there's no liquidity for the zone. But if there's a liquidity for the zone, that can be just a liquidity sweep. Hope it makes sense.
Yeah, thank you.
Okay. So I want you guys to mark the zone that has caused the change of character here. It's a really simple zone. Thank you, Nikita. That's the zone. Exactly. I love how Nikita is actually being the first every single time. Good job, Nikita. So this is the zone that has caused the change of character. And as I said, if this happens, I will go for this trade regardless. If there's no liquidity creation, if there's no liquidity sweep, if there's no inefficiency, I will go for this trade. But for advantage, there's inefficiency. There's a change of character, so I will go for this trade regardless. As I said, I will be setting an order limit on the 50% of this candle. And I actually took this trade in live session. 50% entry, 2 pip stop loss, deleting this. And what could be our next target point? Asking you, what could be the next target point? Exactly. The next,
the
the less recent unmitigated 15-minute zone, which is this one in this case, right? Okay. Actually, we could easily target this higher supply zone up here too, because our trend has been confirmed that is bullish. As I said, this is a fractal confirmation, and this doesn't really happen very often. This happens really, really rarely. Every single time frame lines up, right? Daily has been confirmed that is bullish. 4-hour has been confirmed that is bullish. 15-minute has been confirmed that is bullish, and the 1 minute has been confirmed to be bullish finally. So what can we expect when every time frame has been confirmed to bullish? We can expect the creation of the new higher high on the 4-hour chart, because as you can see, here was a change of character after daily demand tap. Price has created this high point, pullback, tap of this strong low point right here. There was a 15-minute change of character right here, and inside of the 15-minute zone, there was a 1-minute change of character somewhere around here. So at this region, the fractal confirmation has happened again. What was the actual movement after this? That after all of the 15-minute, 4-hour, 1 minute has been confirmed, and after the fractal confirmation has happened, the new higher high has been created here with the breakout structure, as you can see. So this fractal confirmation is happening here again. What can we expect after this? We can expect a new high, right? And yeah, we know that high has happened because we actually saw that prices created the new high. But I was saying this before that new high actually happened. I was saying this for you guys, that the new high will be created, the expectation higher high will be created before that high has even happened. So what can we do in this case? We can actually swing target the high point with our longs. We can actually target this high point with our longs. Of course, in live sessions, you won't do that with full volume, right? Because you will be stupid. But actually, this could be our less swing high target point. But for the clarity, let's just stick with this zone, this 15-minute zone, because we are backtesting. But we'll see that if price hits that zone and how many risk reward could that actually earn us. But I hope you really understand what I was meaning under this. So let me just play price forward. Okay, the tap has happened here perfectly. Play price forward. Breakout structure has happened to the upside, so our stop loss is in break even. Why is it in break even? Because the last high point has been broken right here. The price has broken about this last high point, so our stop loss is in break even. This is a risk-free trade right now. It's going perfectly fine, as you can see. And let's just map the supply zones, and let's just map the flip zones, because we had several flip zones, right? As you can see, here was a clear supply zone that has created a huge inefficient push to the downside, and this was the last structural swing high point on the 1-minute chart. This swing high point on the 1-minute chart caused the tap of this 15-minute zone, and as you can see, prices reacted on this supply zone. Prices reacted on this supply zone here with this movement, tap this zone, reversal, breakthrough. So this is a flip zone. This is actually swing flip zone. So what can we do in this scenario? We can expect a reaction on the demand zone that has caused the flip, right? This demand zone, this weak zone, has caused the flip of this supply zone. So we can actually set an entry limit order on this zone. Let's see if the full body covers the whole zone. No, it doesn't. Let's just use the 50%. This is our next entry. Okay. Sorry. Is it okay if I just delete this order because it's actually frustrating? Is it okay? Let me just delete it no matter what. So just keeping it clean.
Marcel, can I ask you something?
Yeah, of course.
Why don't you pick the previous candle? Because in this candle, like the wick is smaller than the wall body.
Yeah, actually, but all of this candle has been mitigated, right? There's no unmitigated area left on this candle. Maybe on the downside area, this is the only unmitigated area from this downside candle. So the real inefficiency has started from this candle this week, right? Just think logically again. This candle has been mitigated. Expect this small percent of this candle. The real inefficiency has been started from this week, right? There's the real inefficiency. Make sense?
Yep. Thank you.
Okay. Somebody says that there's triple bottom. This isn't a triple bottom. Triple bottom doesn't look like this. A triple bottom looks like this. Not three same candles. This isn't a triple bottom. But yes, that still could be a liquidity for the downward region here. That still could be a liquidity for this demand zone down here. So we can actually use, I was just continuing, we can actually use a double entry limit order. First one on the higher, second one on the lower. 2 pips stop loss, same target point. And we just keep it this way because it's frustrating. And just play. Yeah.
If we got a 2 POI in 1 minute, we should split the orders.
Sorry, Prakash, your microphone is still bad. Can you just type it, please?
No, if we got a 2 POI in 1 minute, we should split the orders.
Please type it down because I can't hear you.
Okay, I'll
just
type
write it down. Write it down.
He is asking if you should split the risk in this case.
Yeah, we are splitting the risk every time. But I was explaining this in the previous live sessions. We are splitting the if we are using the double limit entry order, for example, like this, we are splitting the risk. We are setting, if we are using a 1% risk, we are setting a 0.5% risk on this one, and we are using 0.5% on this one. So there's literally nothing to lose in this scenario, right? Because if this trade gets tagged in and goes to profit, we'll be in profit and we'll be happy. If this trade will be swept out, this zone will hold and this will be in profit, and we'll go with 0.5% loss, but this will be in profit. So that's literally a win-win situation. I usually use these double risk entries to have the risk and actually get more precise risk rewards and to make sure that I will be get tagged in. And please, guys, the questions after this session. I will mute everyone. So actually, as you can see, for this zone, the liquidity creation has happened, or we can't really call it this is a liquidity. Let's just wait for further liquidity. Okay. Now there's a liquidity. A liquidity creation has happened for this zone. Here's a liquidity creation, double bottom, first bottom, second bottom. As you can see, price is coming down, creating an upside movement, creating the second bottom, creating an upside movement. So we can call this a liquidity. This is a clear double bottom. This isn't a double, this isn't a triple bottom, this isn't a double bottom. This is no liquidity. The liquidity looks like this. So liquidity has to be formed with several candles and with the pullback, for example. So if price is coming up, creating a downside movement, creating an upside movement, creating a downside movement, creating an upside movement, this will be liquidity. If price is printing 2 equal candles or 3 equal candles, perfectly lines up with each other's, that won't be a liquidity. This will be a liquidity, this won't be a liquidity. This is just equal candles. This can count as a liquidity. This is a liquidity, as you can see, double bottoms, and price is on the way down to sweep that liquidity. Okay. Okay. As you can see, price did not tap into tag us into this zone. So this is a miss, but we can still keep this order. I'm going to delete this order because it is too far away. There's still liquidity for this zone, as you can see. There's still liquidity, but not much of a liquidity. But I'm going to keep this order limit right here. And new zone has been formed right here. As you can see, this demand zone has created a huge inefficient push to the upside, swept liquidity to the upside. There was a trendline liquidity. Loads of stop losses were sitting just above this trendline liquidity. Swing broke the structure. This was the swing high point. This was the pullback. And this demand zone, swing broke the last structural high point. Actually swept liquidity from this region to broke above some sort of supply zone at this region, actually broke above this lunchtime supply, broke above this lunchtime supply. So this is a really, really valuable demand zone for us. And what we can do in this scenario is to use a risk entry, double risk entry again. If there will be a liquidity formation for this zone, I will just keep this order with a full risk. If there will be a liquidity formation, that will be a perfect opportunity for us to enter, because this is not much of a liquidity. So I will just explain this later. Let me just play price forward. Price is on the way down to fill up the inefficiency, creating liquidity, and creating liquidity trend line, as you can see. Price is created liquidity trend line and created a breakout structure to the upside here, as you can see. Okay. In this case, I would like to ask you that can you open a position on this freshly new formed demand zone that has caused less recent breakout structure to the upside? Yes? No? Exactly. You can't open a position on that zone. Thank you, Jashchuk, because there's a liquidity trend line. and you don't want to become part of the liquidity. As you can see, this is a perfect liquidity trend line with several touches. As you can see, price is coming up, coming down, touch, coming up, coming down, touch, coming up, coming down, touch. So basically, this is a triple bottom liquidity trend line. 3 several touches on this trend line. So this counts as a perfect liquidity trend line, and this has been built up for this zone. And there's still inefficiency need to be filled up. So what can we expect from this scenario? We can expect the inefficiency fill up, we can expect the liquidity sweep, and we can expect the top of this zone, right? I will delete this order limit from the downside area here, because if there's a liquidity creation, this is a continuation scenario. There's a liquidity creation for the next less recent zone that will hold. If it won't hold, price will more likely to break below this demand zone and continue a bearish order flow and keep disrespecting demand zones. But if there's a liquidity for this zone, in this case, this will hold. And as I said, if it won't hold, this will be broken too. So I will just keep my order limit on this zone and delete the order limit from this zone. And we are using a 50% entry, equilibrium entry again on this zone because there are more wick than candle. 50% entry, 2 pip stop loss targeting the same supply zone up here. And let's see what happens. I will just delete this zone. So once again, sorry. Yeah, actually, me catch. This is my favorite setup. Perfect setup, right? Let me just arrow break down this movement. Price is coming up, coming down, mitigating some sort of demand zone right here, creating another inefficient breakout structure to the upside, creating double bottom, sweeping the double bottom, creating a liquidity trend line, perfect liquidity trend line, creating inefficient movement to the upside, and I can't draw more, creating another inefficient movement to the upside with a breakout structure, perfect breakout structure, fake zone, which will be part of the liquidity. So basically this demand zone, this fresh new created demand zone is a liquidity. You can't count on this zone, but there's a zone which has created the inefficiency and the liquidity, and this will be the perfect zone to enter on. So basically this is my favorite setup, right? There was a cancellation, breakout structure cancellation right here. There was the actual cancellation breakout structure right here. There was a liquidity creation for the fake zone. All of the orders will be taken out at this zone. All of the retail traders will be swapped out who are going to open on this zone. We are going to wait for the liquidity sweep, and we are going to wait for all of the orders to be swept, and we are going to wait for this zone to be tabbed. So basically, this is my favorite setup. That's perfectly good and fine. So we can expect a reaction on the downside area. Let's see. Actually, as you can see, price is reacting on that zone. Price is reacting on this demand zone. So the orders are still there. This is a footprint of the orders. The orders are still there. Price is still picking up the orders at this region. Price is still converting shorts into longs. So more long orders are being opened at this region. That's why price has created a pullback here at this region. But this will be broken because there's liquidity and price has just built up more liquidity. As you can see, that's broken. That's all. And we can wait for a tap of our zone because more liquidity has been created, because there are trillions, not trillions, but billions of dollars are sitting just below this line. Just imagine how many retail traders have opened positions on this line. Retail traders. Oh, this is the third bottom or fourth bottom. I just open a position right here. They open a position, they will be swept. We are waiting here at our bus stop. We are waiting for the liquidity sweep, and that's the importance of the liquidity. We are waiting, and we are opening positions after all of the liquidity is being swept. Basically, that's what this smart money is. That's smart money. It's smart because we are waiting for the orders to be swept out, and we are entering in the market after the orders are being swept out. So we are entering with the fresh new orders, right? After the old orders are being swept out, we are entering with the freshly new placed orders that has been converted into new orders. So liquidity sweep, that's all. Basically, that's all. This is how liquidity works. If you got a good zone that has liquidity above it or below it, if it's a supply, there will be a below liquidity. So in this case, if you have a good demand zone that has liquidity above it, you can just simply open a position on the demand zone. Of course, if it's a main trend trade or if there's any good criteria lines up with this criteria. But yeah, this is how liquidity works. And as you can see, reversal. Perfect reversal. Okay. There was a mistake in this session that lots of you guys who has opened this trade did set their stop loss to break even. And I just want to show you that why can't you set your stop loss and break even at this region. So let me just show you. This is the last recent supply zone that has created the last recent inefficient push to the downside here, right? Price is reaffirming this supply zone, as you can see. We are not setting our break even or stop loss in the break even because price did not break above the last recent high point, right? Right. No break even yet. Price has broke above this supply zone. So theoretically, we have to set our stop loss in the break even, right? I'm just asking you, we have to set our stop loss in the break even, right?
Yes. Yes.
Yes, no. Okay, yes, you have to stop. I mean, you have to set your stop loss to break even. But in this scenario, you can't. Why am I saying this? Because there's a liquidity again. Always pay attention to liquidity. As you can see, first bottom, second bottom, perfect liquidity creation, coming up, coming down. I mean, that's even triple bottom because coming up, coming down, first bottom, coming up, coming back down, second bottom, coming up, coming down, third bottom, perfect liquidity line at this region. This is a perfect liquidity line. And if we set our stop loss into break even, what do you think? What will happen? We will be liquidated, right? We will become part of the liquidity. So you can't set your stop loss into break even at this specific scenario because you always want to pay attention to liquidity. If you set your stop loss into break even, you'll be liquidated. You'll become part of the liquidity, and price will continue without you after speaking liquidity, after collecting your order. And after collecting your order at the break even point, more orders will be placed here at your break even point, and price will continue without you, right? You always have to pay attention to the liquidity, and you always want to pay attention to the liquidity when you're trailing your stop loss. You want to trail below the liquidity lines. So you don't want to get stopped out even if you're trailing your stop loss. That's it. Let's just play price forward. Sweep of the liquidity, right? Sweep of the liquidity has happened. All of the stop losses have been collected from this region. All of the stop losses have been collected from these orders who set their stop losses into break even. Maybe it was your orders too. All of the stop losses have been converted. Look what happens. Continuing without you. Let me just play it fastly. Continuing without you. Every single order have been stopped out right here, and all of the break-even orders have been stopped out right here. New orders have been placed here at the break-even point and after liquidity sweeping movement. What happens? Continuation. Does it make sense for you guys? Do you actually understand the liquidity? Just circle it again.
Yes.
Perfect. You can't open a position inside of a liquidity pool. You can't trail your stop loss below a liquidity pool. You always want to consider the liquidity pool because markets are moved by liquidity. Everything moved by liquidity. And this is really, 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 really important. You don't want to become liquidity. Smart money is playing around liquidity, playing after liquidity is being swept. That's why we call it smart money, as I told you earlier. This is smart money because we are entering after all of the stop losses are being swept. We don't want to get our stop losses being swept out, right? All right, that's all. Let's just see and place back the order right here. This was the original order, targeting this supply zone. Right here, and just watch it hit TP. Perfect TP hit. That's all. That's it. And we just close these zones. First zone, first entry point is for 1 to 20 risk reward ratio. So this was a 1 to 20 risk reward. Second zone was for 1 to 10 risk reward ratio, I believe. I will just check it. Why can't I see it? Yeah, it was 1 to 11. So overall, 1 to 31 risk reward ratio in this single session, following the main trend, right? And we are closing the positions at the first supply zone, which is unvaluable. This is the first supply zone, and it's actually unvaluable because it literally did nothing beside of the inefficiency. There's only inefficiency that has been caused by this candle, only inefficiency that has been caused by this supply zone. So realistically, we could target this zone because that's our less recent valuable supply zone, higher time frame supply zone. So let's just see if you target this zone, target the less recent valuable unmitigated supply zone at this region, would it hit TP? Let's see. Yeah, there's the TP hit. There's the TP hit, right? And if target this supply zone up here, which is the less recent valuable unmitigated supply zone, this isn't valuable up here. This would have been 1 to 30, 1 to 20. This could have been 1 to 50 risk reward ratio. And of course, this goes on and on and on and on and on and on, because we are lining up with the main trend. We are trading main trend. Every single time frame has been confirmed to be bullish. This is the importance of the fractal confirmations. As I said several times, daily has been confirmed that it's bullish. 4 hour has been confirmed that it's bullish. Yeah, actually, Marcus, we have one loss, so it's 29 risk reward ratio. Sorry. So 4 hour has been confirmed that it's bullish. Daily has been confirmed that it's bullish. 50 minute has been confirmed. 1 minute has been confirmed. So basically, all of the time frames have been confirmed. Every single time frame have been confirmed to be bullish. So what can we expect in this scenario? We can expect the new higher high. Let me just play price forward. We can expect the new higher high. That's it, guys. That's literally it. Importance of the fractal confirmations. Just imagine if you targeted this high point right here with both of your trades. And basically, this is the best possible entry point that you can get. This is the best possible entry point, because you were opening a position on a strong low, on a 4 hour strong low. Price exchange character on the 15-minute chart after tapping into a 4 hour strong low. Price exchange character after the 15-minute change of character. So the fractal confirmations has happened. So this is the best possible place to open a position and target the swing highs. This is literally the best position. And this could have been, let me check it. Sorry. This could have been 1 to 1 to 84 or 94, sorry, and this could have been 1 to 83. And that's it. Importance of the fractal confirmations. What's it? What's there? So yeah, guys, actually I collected I believe 14 risk reward ratio on this session, because I was sick and this was on Monday, and I was sick, having troubles. I won't mention them. And I closed my position on 1 to 14 risk reward ratio, somewhere around here. I opened the position down here on the best possible place, and I closed somewhere around here in 1 to 14 risk reward ratio. So yeah.
I have a question, please. How do you choose? Because I noticed you use the 15 minutes to choose your TP, and you also use the 5 minutes, right?
How do I choose my TP?
Yeah.
The TP I use is always the less recent unmitigated 15-minute area.
Oh, okay. So not 5 minutes.
You can use the 5 minutes too. If that resonates with you more, you can use the 5 minute. If I'm taking a main trend trade, I'm using the last recent 15-minute zone. If I'm taking a counter trend trade, I'm just closing it at 1 to 5 risk reward ratio.
Oh, okay. It's in the 5 minutes, right?
Currently we're on the 15-minute.
No, I'm saying using the 5 minutes if you're counter trending.
No. I'm just using a 1 to 5 risk reward ratio, not the 5 minute.
Oh, okay. I get it. Thank you.
So yeah, and in this region, this is the last recent valuable 15-minute supply zone. This is the last recent valuable 15-minute supply zone which you can target, because as you can see, this has been mitigated, this has been taken out. This isn't a real supply zone. This couldn't change character, and this couldn't break structure. It just created inefficiency. So the last recent valuable supply zone at this region is this one, right? That's it. That's our target point.
Can I ask you something real quick?
Yeah, of course.
If you go back to the 1 minute.
Yes, sorry. Bear with me. Here we are.
I don't really understand why first you had this zone and then isn't this, doesn't it count as a trendline liquidity?
You mean this
What
one?
here? Yeah.
No, I just explained that that isn't a liquidity, because liquidity have to look like this. This is trendline liquidity because price is going up, coming down, touching the trend line, going up, coming down, touching the trend line, going up, coming down, touching the trend line. So this is a trend line liquidity right here. This isn't a trend line liquidity. This is
No,
just
I mean this one. This liquidity is. Do you see
sorry
my?
for moving the screen. Yeah, I can see it. Yeah, you can actually count it as a liquidity, but this isn't a strong liquidity because liquidity has been swept by this candle, right? Here's liquidity, as you can see. First bottom, second bottom. This is liquidity. This is a liquidity sweeping movement. So more likely there won't be any liquidity here at this region because the liquidity has been swept right here by this following candle.
So after when it gets swept, there's no more liquidity on those zones.
Basically, you can say that because liquidity has been swept, new orders have been created right here. I mean, right here after the liquidity sweeping movement, and these new orders will be picked up if price taps this zone. So the liquidity has been swept. There's no more liquidity.
Okay. Thanks.
You're welcome. Oh my God, guys, so many questions in the chat. Let me just see the questions. For counter trend minimum, there must be 15-minute check. If you want to short, for counter trend trades, you won't really get a 15-minute change of character. Counter trend trades are usually on the 1-minute chart. For example, counter trend trade could be like price is moving up, creating, this is a 15-minute chart, creating this type of structure, and counter trend trade could be like if price changes character here on the 1-minute chart, this will be a counter trend trade. This movement will be a counter trend trade down to the 15-minute demand zone. If price changes character on the 15-minute chart, changes character here, the shorts will be the main trend trade. So the counter trend trades are usually on the 1-minute chart based on the pullback of the leg. Counter trend trades are always pullbacks in the main trend. Counter trend trades are the pullbacks of the main trend, creating the main trend movement, creating the counter trend pullback movement. You can trade the counter trend movements down to the next recent 15-minute zone, in this case, demand zone. After this, you can expect a new higher high, trade it.
So you consider 15-minute as a main trend?
Main trend can be determined on the 15-minute and the 4-hour chart. As I said, each time frame are fractal. There will be a main trend on the 15-minute chart, and there will be a main trend on the 4-hour chart. If the 4-hour chart looks like this, 4-hour chart looks like this, the 4-hour chart trend will be bullish, right? But the 15-minute chart trend could be bearish. On this leg, for example, this is the 15-minute structure. 15-minute can change character right here, and the 15-minute can be turned into bearish. So the 15-minute trend right here will be bearish until it taps into a 4-hour zone and changes character again on the 15-minute chart. After this, the 15-minute trend will be bullish again, and it will be the main trend again, lines up with the 4-hour trend. That's why I say timeframes are fractal, trends are fractal. What if 4-hour? Yeah, that's what I was explaining. If the 4-hour is bullish and the 15-minute is bullish also, that's when this scenario happens. So let me just see. This is the 4-hour chart, right? I'm just drawing the 15-minute now. So this is the 15-minute, and you can actually trade the 15-minute pullback. So this is the 15-minute structure, and price changes character here on the 1-minute chart. There's 1-minute change of character. You can trade the 1-minute chart down to this demand zone, this 15-minute demand zone. That will be a counter trend trade on the 1-minute chart, and price lines up in the main trend because 4-hour is bullish, 15-minute is bullish, 1-minute is counter trend. Yeah, there has to be a good criteria. Understandable? Can you do a rapid backtest on random? No, I can't, because trading you only allows you to backtest the last maybe 4 or 5 weeks. So I can only backtest March.
How can I get your flipping fake zone candle? The
It's in
red
the
candle?
resources channel.
Oh, okay. Thank you very much.
Flipping resources channel. Yeah, actually, markets is dangerous. That's why we call it counter trend. Every single counter trend trade will be dangerous, of course.
I link the indicator into the questions channel, guys.
Are there situations where I set my break even earlier than actual break of structure when it's a counter trend trade. And for example, in a counter trend trade, let's say this is a counter trend trade. We enter here and price reacts on this supply zone, on this 1 minute supply zone, and reacts strongly on this supply zone. I set my break even, I set my stop loss in the break even. And when session end is near to close. Have you guys got any more questions? So 4 hours bullish, 15 minutes is bearish, so the counter trend trade is short. If the 4 hour is bullish, the 15 minute bearish can be a main trend. So the 4 hour is bullish. This is the 4 hour chart, right? Let me just draw it real quick. Let me just do this. So the black is the 4 hour chart, which is the main trend. The red is the 15 minute chart. Here, the 15 minute is bullish. So the 4 hour and the 15 minute is bullish, right? Price breaks structure, and after break of structure, it changes character on the 15 minute chart. So the 15 minute turns into bearish. At this region, the 4 hour chart is bullish. Of course, it's bullish. The 15 minute is bullish. But after a change of character on the 15 minute chart, it turns into bearish. So the 15 minute will be bearish. So our 1 minute main trend will be bearish at this region. 1 minute and 15 minute trend is bearish at this region, but we know that the 4 hour trend is bullish. So we can expect a reaction on the less recent strong low point. So we can expect a reaction here on this 4 hour low point. We can expect a change of character on this 4 hour low point. So the 15 minute chart will turn into bullish again. And if this happens, there will be a demand zone that has caused the change of character on the 15 minute chart, which has turned the 15 minute to bullish again. And after this, we can expect a reaction, and we can expect a 1 minute change of character also. This will be the 1 minute chart. We can expect a 1 minute change of character, and we can expect a 1 minute entry point. And we can continue the overall main trend, which is bullish on the 4 hour chart. But this is being explained in the video course, actually. You manage in 5 minutes some situations? Rarely. I mainly manage my positions on the 1 minute chart because 5 minutes and 1 minute is almost the same. So guys, that's it for today. I will start the recording now. So I assume the recording is on. So welcome everyone. This will be today's live webinar, Wednesday webinar, as usual. So this will be a bit unusual session because at the beginning of the session, I will host education session or video. I don't know how to call it. So I saw that lots of you guys are having trouble with the main trend / pro trend. So I just want to clarify the main trend / pro trend. Hopefully it will be helpful for all of you. So let's just begin this. After this, we will analyze the overall price action on the 4 hour chart, 15 minute chart, 5 minute and 1 minute, and see all of the upcoming possibilities for today and for the week. So let's just begin this session. Okay, we are focusing on this one. What do we call this trend? On the 4 hour chart, as you can see, this is the 4 hour chart. What do we call this trend? What's this trend?
Trend. Bullish.
Bullish trend. Bullish, right? So we can clearly say that the 4 hour chart is bullish because it's creating low points, creating high points, respecting low points, breaking high points, respecting low points, breaking high points. So creating a higher high, lower, higher high, higher low structure, right? Breaking structures to the upside over and over again, respecting demand zones over and over again. Okay, so this is our 4 hour structure. So we know that the 4 hour structure, the 4 hour trend is bullish for us. So we'll be looking for long opportunities on the bottom of the 4 hour legs. So we are expecting for a demand reaction on the bottom of the 4 hour legs, right? This is our 4 hour trend. Just take a look at the 15 minute trend. We can see that this leg of the 4 hour chart, so this upside leg of the 4 hour chart, is bullish on the 15-minute, right? So this is the main trend on the 4-hour chart. And this is bullish on the 15-minute too. But the 15-minute chart has its own trend, has its own main and counter trend too. Because you may know all of these time frames, the 4-hour chart, the 15-minute, the 15-minute, 1 minute, and the 1 minute and seconds are fractal. All of these time frames are fractal. So the main trend on the 4-hour chart is bullish. The upside movements are the bullish main trend movements. The downside movements are the pullbacks of the bullish 4-hour trend. But the downside movements on the 15-minute chart can be the 15 minutes own trend. Okay, so just take a look at this. As you can see at this region on this leg of the 15-minute chart, let me just remove this big circle. So the 15-minute leg, I mean, this 15-minute leg is like this, right? Creating series of higher highs and higher lows. So on this leg of the 15-minute chart, the structure is bullish. But as I said, the 15-minute chart can change its own trend back to back. So if price changes character somewhere around here after reaching the 4-hour high point right here, changes character after the high point has been reached, the trend will change to bearish from bullish. So the 15-minute trend will change to bearish. But this trend is counter trend according to the 4-hour chart, right? So the main trend on the 15-minute chart will be the upside movements. The counter trend will be the downside movements. Okay, according to the 4-hour chart, of course. But as I said, the 15-minute chart can have its own trend. Let's just take a look at this. I'll move these things over here. So, as you can see, this is the 15-minute bullish trend, main trend, right? Creating series of higher highs, higher lows right here at this region, creating series of higher highs and higher lows. On the 1-minute chart, this trend will look like this, right? The 1-minute chart inside of this 15-minute leg will create a bullish and bearish structure too. It will create a main trend and counter trend too. Because let's just focus on this small region. As you can see, this upside movement of this leg will be bullish on the 1-minute chart. It will create series of higher highs and higher lows. This downside movement of this leg will not break any structure on the 15-minute chart. So it's just a pullback of the main trend on the 15-minute, right? It will respect the demand zone somewhere around here. So the main trend on the 15-minute chart is still bullish. But as you can see on the 1-minute chart, it will change character and the trend will be changed to bearish from bullish. So on this leg, on this 1-minute leg, and on this 15-minute leg, which is a pullback of the 15-minute chart, the trend will be changed to bearish from bullish at this region. So we will call this trend, we will call this movement as a counter trend movement, because the 15-minute chart is bullish, creating series of higher highs and higher lows. So the upside movements on the 1-minute chart will be the main trend movements because it's following the overall trend, creating series of higher highs and higher lows, right? So the long movements, upside movements will be our main trend movements on the 1-minute chart. And if price reaches its high point right here and creates a change of character on the 1-minute chart, it will create a pullback right here. And that pullback will be the pullback of the 15-minute leg, and it will more likely tap into random, I mean, not random, but into a demand zone somewhere around here. So this trend right here, which is a pullback down to a demand zone, will be our counter trend trade on the 1-minute chart. So combining all of these time frames together, so combining the 1-minute chart, combining the 15-minute and the 4-hour chart together, our main trend, the overall higher time frame main trend is bullish. Why is it bullish? Because the 4-hour is forming series of higher highs and higher lows. So how can we actually combine these time frames together? We can easily combine these time frames together and create, I mean, happen the strongest trade possible if price reacts on a 4-hour demand zone. Okay, so the 4-hour trend is bullish, right? At this region. So here's the 4-hour demand zone. This leg of the 4-hour chart will be a pullback of the main trend because the main trend is bullish. So this leg of the 4-hour chart will be a pullback of the main trend. So there won't be any change of character on the 4-hour chart. This is just a pullback. On the 15-minute chart, this pullback will completely change the trend from bullish to bearish, right? So this pullback of the 15-minute leg will be bearish, right? So according to the 4-hour chart, this pullback will be a counter trend movement. But according to its own trend on the 15-minute chart, this will be the main trend too. Because, explaining once again, this trend will look like this on the lower time frame, on the 1-minute time frame. So the 15-minute chart has its own trend, which is bearish in this case because it changed character. So the main trend of the 15-minute chart is bearish. But according to the 4-hour chart, the overall higher time frame trend will be bullish, and it's still bullish. So knowing this fact that the 15-minute is bearish and the bearish is the main trend, and knowing the fact that the 4-hour trend is bullish and bullish is the main trend on the 4-hour, we can expect a demand reaction on some sort of 4-hour demand zone. So we know that the shorts are limited. The shorts are limited because price will react on a demand zone somewhere around here, because there will be a 4-hour zone. And if price steps that zone, it will create a change of character. And the overall trend on the 15-minute chart, so its own trend, will change to bullish again. So it will follow the higher time frame trend again. And it will have its own main trend again, which will be bullish, respecting demand zones over and over and over again. Right? But you can actually combine this with the 1-minute chart again, because as I said, on these movements, on these upside, downside, or downside, upside movements, so bullish and bearish structural movements, you'll have another 1-minute trend too, right? So let's just take a look at this. So the 15-minute main trend right here at this region is bearish, but the overall 4-hour trend is still bullish. So the 15-minute, its own trend is bearish. The 4-hour, its own trend is bullish. So we can expect a reaction on some sort of 4-hour demand zone right here, right? So these movements will be the main trend of the 15-minute structure. And inside of these movements, we will have a completely different structure on the 1-minute chart, because on these movements, on this leg, this will follow the main trend movement on the 1-minute chart, right? So this leg will follow the main trend on the 1-minute chart too, because it will create a series of lower lows and lower highs. If it creates a pullback and respects the supply zone, this will be the counter trend movement of this overall 15-minute movement. These small pullbacks will be the counter trend movements on the 15-minute chart. And these counter trend movements will be looking like this on the 1-minute chart, right? Creating series of higher highs, higher lows, higher highs, higher lows. But these are limited again, because price will react on a supply zone, because it's following a 15-minute trend, 15-minute main trend, right? And if price reacts on that 15-minute supply zone, the trend will change to the main trend again. It will create a change of character, and the main trend will be bearish, short again on the 1-minute chart and on the 15-minute chart, right? But these are limited, as I said, because these movements on the 15-minute chart will tap into 4-hour demand zone, because the 4-hour is still bullish. So these movements are limited. On the 1-minute chart, this will be the main trend. This will be the main trend. The bearish will be the main trend, of course, because the 15-minute is following a supply restriction, supply chain, lower low, lower high structure. So this will be the main trend on the 1-minute chart. But these are limited. Price will tap into this 4-hour zone. It will change character on the 15-minute chart. It will change character on the 1-minute chart. Here, as you can see, this will be the 1-minute change of character inside of this 15-minute change of character. And the overall main trend will be continued, which is bullish on the 4-hour chart. I know this can sound a lot. And it could be hard, but once you understand this, it will be so easy to follow the main trend. Can you guys actually follow me? Can you understand what I'm saying?
Yes.
Yep.
Yes.
Did it make?
Wait, can you just say it all over again really quick? No, I'm just playing. Definitely don't.
Yeah, of course. I will start my whole monologue again. No. So could you follow me? Was it helpful for you? Could you understand some new thing about this?
Yeah, very helpful.
Okay. So basically, understanding all of these correlated timeframes will help you a lot based on your main trend, counter trend movements. Because I know 1 minute can be confusing as fuck. Sorry for my language, but it can be confusing as fuck. 1 minute is just a noise, right? The 1 minute chart is a fucking noise if you don't know the higher time frame. But if you can combine the 1 minute with the higher time frame knowledge, you'll be a fucking beast for real. If you combine the 1 minute noises with the higher time frame 15-minute structure, you'll be unstoppable, because you'll know where you can expect a reversal, where you can expect a turning point, where you can expect a break, or if you can trap in a trade or not. So now combining all of this knowledge, the lower time frame, the higher time frame knowledge, will make you unstoppable. And of course, there's also the 4-hour chart. But this 4-hour chart is for only the main bias directions. So we know where the market is actually heading. So if we know the 4-hour trend, we actually determine the 4-hour trend, we'll know where market is heading, and when can we expect a reversal point, and when can we happen a good main entry. But yeah, overall, the 50-minute is the main structure that we are focusing on for our structure, for our high points, low points, and trend. This is the main structure that we are focusing on. But we have to combine this 15-minute structure with the 4-hour chart too, because that's the most powerful combination. And combining this 4-hour with the, sorry, let me just remove all of this mess from my screen. So combining the 4-hour with the 15-minute and the 15-minute with the 1 hour, not 1 hour, sorry, 1 minute, will make you unstoppable. So yeah, the recording will be available to rewatch anytime. So if you get confused about the structure, just watch this video, watch the recording of this session, and it will help you clear some things up. I believe it's enough from the structures. So let's just jump onto the actual analysis of this session. Or have you guys got any more questions about this? Want to ask something about this structure? What should you watch out for the 1-minute trends against the trend? That's a completely different topic. Okay, we're not talking about criteria right now.
Marcel, I'm sorry for that. In this part of this session, you say we need combine 4-hour time frame to the 15-minute and the 15-minute to the 1 minute. That's correct. Means when we traded a bullish or the bearish trend, better is a H4 or high 4-hour time frame is a bullish, 15 is a bullish, and if 1 minute time frame is a bullish, we high best scenario or high probability.
Exactly. That's basically the fractal confirmation. I've talked about this fractal confirmation in the previous sessions. So if all of the fractal confirmations happen, so for example, the 4-hour trend is bullish. It's following its own main trend, which is bullish. Let's say price creates a 4-hour demand zone somewhere around here, and price will tap into this 4-hour demand zone, and it will look like this on the 15-minute chart, right? So at this pullback leg, the 15-minute chart turned into bearish. So the main trend on the 15-minute chart turned into short, bearish. So the main trend on the 15-minute is bearish at this region. But we know that the 4-hour time frame is bullish, right? So we can expect a reaction on this demand zone and on this demand zone, of course. This is the 4-hour demand zone drawn right here. So if price taps this 4-hour demand zone and creates a change of character inside of this 4-hour demand zone, the 15-minute trend will turn into bullish again. So the 15-minute will follow the 4-hour main trend. So it creates a change of character right here, which means it will create a demand zone also. If price creates a demand zone right here and taps this demand zone right here with this movement, the 1 minute can be confirmed too, right? Let's say price was coming down here. This was the 15-minute movement. And after this 15-minute movement, price changed character. Sorry for the messy structure. Let me just change the color to blue. So after coming down right here at this region, I've drawn this movement right here. So price is coming down here, change character here, create a demand zone here. So at this demand tap, we can wait for a 1-minute confirmation. So if price steps into this demand zone, this 15-minute demand zone is this on the 1-minute chart, looks like this on the 1-minute chart. So if price steps into this demand zone on the 1-minute chart, and if it changes character on the 1-minute chart, all of the time frames will be confirmed to be bullish, because price has tapped this 15-minute demand zone right here. It looks like this on the 15-minute chart, so just a simple tap continuation. But on the 1-minute chart, it will tap this zone. The main trend of this pullback leg, will be bullish on the 1-minute chart, right? So it will be main trend on the 1-minute chart. But price will create a change of character after the tap of this 15-minute zone, and the overall higher time frame 4-hour and 15-minute trend will be continued right here at this change of character, because price will create a new demand zone somewhere around here. It will be tapped, and you can set an entry limit on that specific demand zone that has caused the last final 1-minute change of character. And this is what we call fractal confirmations, when all of the time frames combined together are following the exact same trend, following the 4-hour main trend, following the 15-minute main trend, following the 1-minute main trend. And this is the fractal confirmations. When every single time frame combined together are following the exact same trend.
Okay, Marcel, we can use all of this confirmation for the swing trading and the swing trade.
Yeah.
You mean you say all of this for this trading, like last back testing, we get reward 170 risk reward.
Yeah.
One reward. Yeah.
Exactly. As you can see, this is the perfect example for these fractal confirmations. This trend is being followed over and over again. As you can see, price reacting to 4-hour demand zone, If I would switch to the 50-minute chart, there will be a 50-minute change of character somewhere around here. Price changes character on the 50-minute chart. After tapping into a 50-minute zone, it changes character on the 1-minute chart. So all of the time frames combined together are following the main trend. So this can be used to follow a main trend and set a swing TP, which can be a breakout structure of the last high point, right? So if you catch a 1-minute trade right here with a 2-pip stop loss following this main trend and setting a swing TP would earn you, for example, 200 risk-reward ratio. And this goes on and on again. If you can find the 4-hour main trend, as you can see, tapping into the strong low point again right here, price exchange character here on the 15-minute chart. After the 15-minute change of character, exchange character on the 1-minute chart, it followed the main trend. Every single time frame combined together followed the exact same trend. What was the reward for this? A new high, right? If you follow the new high, I mean, if you follow the main trend on every single time frame, you can expect a new high creation, you can expect a new breakout structure to the upside, and you can actually swing target this breakout structure high point to the upside. And this would earn, for example, 200 risk-reward ratio for you once again, just like in the backtesting session. And that's why these fractal confirmations are so important and so powerful.
Thank you.
Perfect. So any more questions about this, or I can delete all of this from the chart? Can I delete it? Okay, I will delete it.
Yep.
And let's just move on with the real chart analysis. But first, I will hop out for a cup of water because I need it. So sorry, just a minute, guys. I'm back, sorry guys. So let's just continue the analysis on the 4-hour chart. And let's see what can we expect from this session and for the upcoming days on this week. Okay, what can we see on the 4-hour chart? As we talked about this several times, 100 times, prices following a factor confirmations right here, creating breakout structures to the upside over and over again. And yesterday we were expecting a reaction on this 4-hour zone or 50-minute zone down here, which was the extreme of the leg, as you can see. We were expecting a 50-minute reaction and a change of character right here at this zone. But as you can see, the 50-minute change of character has never happened. Instead of creating a 50-minute change of character, price just aggressively broke below this extreme zone right here and swept a good amount of liquidity right here at this region, as you can see with this movement. But it also created more liquidity. As you can see, prices created more liquidity for the upcoming short. So this is a liquidity line. Once again, okay, what can we do in this scenario? How can we find a good setup according to this break? We can just simply place a marker right here at the low point on the candle, place a marker right here, and switch to the 15-minute chart. First, we will switch to the 15-minute chart and find the reversal point, because as you can see, prices aggressively reversed on this point, created a 15-minute change of character to the upside. So there should be some sort of 50-minute demand reaction. And if I zoom in, you'll see that price reacted on this demand zone, this 15-minute demand zone perfectly. Okay, I will just extend this zone. Or price just broke below this demand zone, but we could call this as a liquidity sweep, as you can see, because it happened as a wick. So this is a perfect liquidity sweeping candle, swept some liquidity from below this demand zone, closed above the demand zone, and reversed immediately with huge V-shaped recovery. But okay, don't go this far away. Let's just take a look at this demand zone. Why is it so powerful that it could reverse price after a strong demand reaction? I mean, strong demand break and a high volume short movement. As you can see, actually this demand zone has caused the 4-hour change of character. If I switch to the 4-hour chart, you will see that not right here, right here. So if I switch to the 4-hour chart, you will see that this demand, this 50-minute demand, has actually caused the 4-hour change of character right here. This was last structural high point before the demand tap right here, demand mitigation. And from this demand zone, from this 15-minute demand zone, as you can see, price change character. But if I switch back to the 15-minute chart, you will see it much clearly that the change of character has happened from this demand zone that price was just reacting on. with huge inefficient movement, right? With body closure, with everything. So this was a clear reaction, clear change of character right here. And that's why price has respected this zone right here and reversed immediately on this zone. Okay, but let's just switch back to the 4-hour chart and let's see the 4-hour zones. As you can see, we can't really identify a good 4-hour demand zone right here at this region. So we'll just skip it. We just leave this 15-minute zone as it is. Okay, what can we do? I'm asking you, what should we mark next? What should we do? What should we do right now? What are we looking for?
Supply.
Exactly. Thank you, guys. We are looking for a supply reaction. And that supply zone will be our target point with the longs. Okay. This is the right supply zone and not the weak, because actually the inefficient movement has started from this candle, but you could also mark the weak out. But I believe this will be the strongest and best supply zone in this region, because as you can see, between the low point of this candle and between the high point of this candle, there's inefficiency. Actually, guys, could you understand yesterday's recap video, what I was talking about the inefficiency? Because I saw that lots of you guys were confused with the inefficiency on that specific candle. So could you understand it? I'm talking about.
Perfect.
Yes.
Okay. Okay. So let's just move on. As you can see, the inefficiency has started from this candle. There's the inefficiency. So we will use this 4-hour zone as our supply zone. And this 4-hour zone is actually a flip zone too. Because price was coming down, mitigated this 4-hour demand zone down here, the extreme of the leg, mitigated the zone, created a reversal with this candle. As you can see, this was a reversal right here. And from this reversal, price is creating an aggressive break of this zone with an ocean movement. So what can we expect from price action at this region on the 4-hour chart? We can expect from price that price will create a 15-minute change of character right here after this demand tap, which has happened. We can expect that price will tap into that 15-minute zone that has created a 15-minute change of character, and we can expect a 1-minute change of character inside of that 15-minute zone. And after this, we can target this supply zone up here with our longs. This will be our final target for the longs. Okay, what can we expect after this zone is being tapped? We can expect two things. The first thing is the 15-minute change of character, because inside of a 4-hour zone, we always wait for a 15-minute change of character, right? So if a 15-minute change of character happens and 1-minute change of character happens here also, we can continue the overall short movement to the downside. But here's a second scenario. If price taps this zone, can create a change of character. Instead of creating a change of character, it creates a break of this zone. Sorry, too extreme. Creates a break of this zone. We'll be able to target higher supply areas, for example, this 4-hour zone with our longs, right? This will be our next higher time frame target point if the break of this zone happens. And I believe the break of this zone will happen because I'm still expecting the higher time frame, higher area for our supply mitigation, which I will show you right here. I'm still expecting this supply to be mitigated because there's still inefficiency. There's still inefficient gap right here. The supply is still left unmitigated, as you can see. Price did not tap into the supply zone, still not filled up the inefficiency right here. So I'm still expecting a tap of this 4-hour supply zone. And from this movement, from this liquidity sweeping movement, price could have gained enough fuel because price swept all of this liquidity from this downside region, tapped into a really, really valuable 15-minute demand zone right here. So price might have a new fuel to, price might have a new power to fuel the long movements after this supply zone. But we have to react on what price is actually giving us. If price creates a 15-minute change of character right here, we're just happy in a short trade and we are right the expectation of short order flow to the downside. But if price breaks above this zone, we are right the expectation of long order flow to the upside. So it's all about reaction. It's all about how you react on what price is giving you, right? You don't have to predict shit. So conclusions, I'm still waiting for a tap of this higher time frame, higher area supply zone up here. And after a tap of this supply zone, we'll have to create a new bias. But this is so far away. So this will happen in weeks, I believe. First, I'm expecting a tap of this supply zone. And I believe the tap of this supply zone will happen 100% on this week or even on this day, because there will be FOMC news released today. And I believe that those news will be able to push price to higher prices because FOMC is still strong. NFPs are weak sheets lately. But FOMCs are still fucking strong, and I believe the huge movements will be happening today. So all we have to do is react on what price is actually giving us. I can't say this enough. That's all about the 4-hour structure. I just switch to the 15-minute chart. And let's see what price wrote us on the 15-minute chart. So as you can see, there was the 4-hour demand tap, or not. No. This was a 15-minute demand tap. Yeah, there was a 15-minute demand tap, but we can actually count this 15-minute zone as a 4-hour zone. Price has swept liquidity, huge amount of liquidity here with this movement, as you can see. Swept all of these taps, first, second, third, fourth, fifth tap. So 5 equal taps right here at this region. Swept liquidity from this region to swept liquidity from this region too. So swept lots of liquidity, incredible amount of liquidity with this movement. And this movement started from where? I want you to mark it on my chart. Thank you. That was pretty quick. Are you guys sitting with your hands on your mouse to draw anytime if it's necessary? Yeah, perfect. I love it. So the huge innovation movement has started from this candle, and the liquidity movement has started from this candle also. And this is a flip zone also, because as you can see, price is reacting on some sort of supply zone at this region, maybe on this supply zone. There was a reaction, prices coming up, reacted on this supply zone, created a downside movement from this candle. As you can see, price came up and closed here with this candle. So after the movement, after this flip movement, the overall inefficiency has started from this candle. So this is a pretty valuable 15-minute demand zone that has swept all of the liquidity from this region, created a huge inefficient movement, created a 15-minute change of character, because there are change of characters on several places here, 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 here. So several places there's a 15-minute change of character, and all of these movements have started from this candle. Okay, so what else can we see? We can see that we have a decisional 15-minute zone right here, as you can see. And let me just change the color. What can we do with this zone? Let me just close this 4-hour zone a little bit. What can we do with this decisional zone? Can we expect a reversal on this zone? Can we expect a change of character and short continuations on this zone? I'm asking you, Mary. Wait, yes? No? Just circle it. So you're saying we can expect a short continuation on this zone? You're wrong.
We need to wait
No.
for the reaction.
Of course, you need to wait for a reaction. Of course, you need to wait for a reaction. But I believe, and I just believe it, I strongly recommend not to wait for a change of character on this 15-minute zone, and not to happen a trade if the 15-minute change of character happens on this zone. Because if price could take over control from supply at this region on several places, do you think that this small little inside bar right here will be able to stop the upside movement?
اینجا منتظر change of character نباشید احتمال خیلی زیاد، چون 4 تا فقط change of character داده.
Okay, that was strange. Okay, so do you think that price will be able to reverse? I mean, price will be able to reverse on this supply zone, on this small decisional 15-minute supply zone that was just a little stop in the market after sweeping all of this amount of liquidity and changing character on several places? Yeah, I think the same. It won't be able to. It has to tap a higher valuable supply zone, which could be this one. And this could be liquidity. This decisional supply zone could be liquidity for the higher 4-hour area. So I believe there will be a reaction on this zone. I believe that price will change character here on the 1-minute chart, and it will create a pullback, something like this. Tap this zone. I'm just drawing the 1-minute structure solely instead of with the arrows, drawing the 1-minute structure. I believe there will be a change of character right here, and price will start to create a small pullback on this supply zone. But demand zone will be tapped somewhere around here. That's your valuable demand zone will be tapped somewhere around here, and the change of character will happen again, and the tap of this higher time frame supply zone will happen for sure. And that's where the actual main trend and counter trend comes into place, because if price taps this supply zone, the 15-minute main trend will be bullish, right? Because the 15-minute trend is creating a series of higher highs and higher lows. And this pullback, this 1-minute pullback, will be a counter trend movement down to a 15-minute zone. And you can expect a reaction on that 15-minute zone. And the counter trend movements will be stopped at this region, and the main trend movements will be continued right here. So of course you can happen your trade right here, but you just notice that there will be limits. This trade will be limited with limited TPs, and more likely you will have to hard TP it with around 1-to-5 risk-reward ratio, because the main trend on the 15-minute chart is bullish, creating a series of higher highs and higher lows. Is it understandable why you have to wait for it, and how can you combine the timeframes together? Just circle it if it's understandable. Okay, perfect. So I believe that's enough of the 15-minute chart. No, actually not enough, because the tap of this 15-minute zone has not happened yet. So we can still expect a reaction on some sort of supply zone here, reaction on the supply zone, change of character, and tap of this 15-minute zone down here, this 15-minute demand zone, change of character, and the continuation. So we will switch to the 5-minute chart. Can you just remove this brown drawing from here, please? I don't know who drew it. All right, we'll just remove it myself. Clear all drawings, perfect. So switch to the 5-minute chart. As you can see on the 5-minute chart, we can refine this zone for this candle, and the 5-minute zone has been mitigated for like 0.1 pip. As you can see, this is a really small mitigation of this zone, so we can't really count this as a mitigation, and it wasn't even a mitigation, I believe. So price will tap this zone, mitigate the deeper area of this zone. At least the 50% of this zone mitigation will happen. So let's just refine this zone also. As you can see, the clear inefficiency has started from this candle. There's inefficiency started from this candle here, and we won't refine this zone, this 4-hour zone, just on the 15-minute chart, but actually that's worthless, so I will keep this 4-hour zone the way it is. So switch back to the 5-minute chart. What can we expect here? You can see that price is reacting on a 50-minute/5-minute supply zone somewhere around here, which is unclear on the 5-minute chart. So more likely that was a 1-minute supply zone somewhere around here, this region. Price is reacting on that supply zone, created equal taps right here, as you can see. So this is one more confirmation that price will, I strongly believe that it will tap this zone, create a 1-minute change of character inside of this zone. And this liquidity, these double taps will be the fuel for the upcoming longs. So these taps will fuel the longs. Okay, overall conclusions. Let me just read the chat, please. Now 4-hour bearish. Yeah, 4-hour has turned into bearish because it changed character on the 4-hour chart. Let me just switch to the 4-hour chart. As you can see, change character here to the downside. This was the less structural 4-hour low point. Price has changed character here to the downside. So the 4-hour has turned into bearish right now. But the daily is still bullish. The daily is still bullish, as you can see. So back to the 5-minute chart. Back to the 5-minute chart. And I will read the comments real quick. There is big liquidity on that supply. 4-hour bearish. Yes, but can we play a short there if a good criteria? You mean here or here? Either way, it depends on you. You can't just ask me if you can play a good short there. You have to create your own plan. You have to trade that plan, and you have to act according to your plan. I can't tell you if you can open a short or not open a short. I'm just showing you the perspective. I'm just showing you what is possible for the upcoming days or this day. So I'm not going to tell you if you can open a short there, if you cannot open a short there. It depends on you and only on you. If it fits in your criteria, if it fits in your plan. Yeah. So 5-minute chart. That's enough of the 5-minute chart. Let's just switch to the 1-minute chart and see if there was a real supply reaction at this region. Price more likely reacted on this wick up here, as you can see, created equal taps right here. These are equal taps. So there's liquidity. And as you can see, after the reaction on this zone, the supply zone, price exchange character here to the downside on several places. And sorry guys for speaking so slow. I don't know how, but my throat hurts as fuck, so it's actually hurtful to speak. So sorry for my mistakes. But yeah, price exchange character here to the downside on several places. And it's coming up to mitigate the extreme, as you can see. But there's no clear 1-minute extreme zone at this region. So I really recommend you to wait for a clear reaction, wait for a clear break, and wait for a clear supply/demand formation. If price creates a reversal here to the downside, and let's say it creates a break of this structural low point, not swing big, but sub break of this structural low point, and there will be a clean supply zone that has caused the break, which will be outside of the zone, I mean lunchtime zone, we'll be able to look for shorts down to this region. And yeah, thank you, Just Joking. There's liquidity. That will be the cause of the shorts. This will fuel the shorts to the downside. So basically, a change of character right here to the downside will be fully enough, I believe. And if price changes character here to the downside and creates a clear supply zone, you'll be able to happen a short trade, of course, if this zone is outside of the lunchtime zone, because this downside liquidity, this double balance will be able to fuel shorts to mitigate the deeper area of this demand zone. So I'm expecting a deeper mitigation of this demand zone. And usually these deeper mitigations, expected deeper mitigations, sorry, are usually playing out well. So these are usually happening. So I really expect the deeper mitigation of this zone. And right now it seems like a waiting game, because if I switch to the Forex Factory, you'll see that FOMC meetings will hit in 15 minutes. And I believe those FOMC meetings will push price to lower areas, for example, the 15% of this zone. And after this, after mitigating this 15-minute zone, deeper area of the 15-minute zone, we'll be able to look for long opportunities, and we'll be able to target this higher time frame supply zone up here, which is a decisional supply. And yeah, I believe this supply zone, this 15-minute supply zone, will be broken. But as I said in the previous live session, even though I believe that this supply zone will be broken, we are closing our positions right here, because that will be around 1-to-20 risk-reward ratio. And that 1-to-20 risk-reward ratio is perfectly enough for us, because if this mitigation happens right here, we can do several things. For example, we can look for a counter-trend short trade to some deeper demand area, which could be 1-to-5 risk-reward ratio. And from that 15-minute demand zone, we will be able to look for one more demand mitigation long entry, and we'll be able to target the higher time frame supply zone up here. But if price just simply breaks above this zone, we'll be able to, sorry guys, just mute yourselves because I can hear your background voice. So we'll be able to execute a new long trade, new change of character trade on this freshly created 15-minute demand zone down here, and we'll be able to target this higher time frame supply zone up here. So this is a reaction-based strategy, right? We react on what price is giving us. If there's a scenario, we play that scenario. We don't predict shit, we just mark out our zones, mark out the liquidity areas, mark out the inefficiencies, mark out the potential reversal points, and react on those potential reversal points, and react on what price is giving us, right? It's this easy. Just mark your zones out, expect for a reaction. If there's a reaction, happy not trade. Easy as fuck, simple, right? Sorry guys, I have
a question.
Yeah, just wait a minute, please.
Sure.
Okay, let me hear the question.
At the demand you marked up, you don't think there is like liquidity down that point?
Could be liquidity. There could be liquidity. Okay. Let me just remove this shit from my screen. Sorry, what am I doing? So there could be liquidity, of course. This could be liquidity. This could be liquidity also. But you have to react. If price creates a change of character here without sweeping the liquidity because it has swept enough amount of liquidity from the short side, then just happy not trade. If price breaks this zone and doesn't create a change of character for you, just break this zone. Just aim for a deeper demand mitigation. You can aim for a deeper demand mitigation with shorts, right? It's like this.
Marcel,
yes.
Can I also ask a question?
Of course you can. Anyone can ask a question.
Above your market, the 1 minute supply and the liquidity, there is a weak zone which broke, which made a change of character, like on the left of your supply. Yes, that one.
Yeah, you're actually right.
Can we also count on that one for shorts?
Yeah, you can. There's a possibility that price will reverse to the upside here, react on this supply zone, sweep the liquidity, and after the, let me just draw real zones, not just arrow movements. So there's a possibility the price will sweep the liquidity to the upside, tap into the zone, create a change of character, and you can target the deeper demand area right here. Anything can happen. That's why I said all you have to do is mark your zones out and expect a reaction on those zones.
Marcel.
Thank you, my love.
Marcel,
you're very welcome, my love. Sorry?
I just realized you said, so even if price taps into a 1 minute zone, you still want to see a change of character?
Sometimes, yes. If the 1 minute trend is bearish, for example. If there's no proper confirmation or criteria, I'm waiting for a 1 minute change of character inside of a 1 minute zone. But if there's a proper criteria, you can happy not trade. For example, if this trade fits in your criteria, there's liquidity, you're safely executing your limit order in this zone, then you can go for a risk entry. If you're insecure about this trade, just wait for a change of character.
Got you. Okay, thank you.
It depends on your own plan. It depends on your own criteria, on how you react on market. What's your risk tolerance? How can you tolerate a loss? How can you tolerate a risk entry? It depends on you, your own personality. If you can tolerate a risk, if you can tolerate a risk entry, you can simply wait for a change of character and confirmation entry, right?
Marcel, can I ask a question?
Yes, bro. Sell full margin, no stop loss.
Yeah, let me hear the questions.
This supply you marked it have a efficiency, have a liquidity, and we can enter this order by 50% of this order block or not. We wait for confirmation, because as all of this trade I do, I have a fear from the entry.
That's what I was explaining a minute ago. It depends on your own criteria. It depends on your own plan. If you safely play this short and let me just find this tool right here. If you're secure about this trade, if your risk tolerance allows you to jump in a short right here without the confirmation, then do it. It depends on you. But if you can tolerate a risk, you can tolerate a lose right here, just simply wait for a change of character and re-entry. It depends on your own criteria, your own perspective.
Okay, you mean say if we have a one order block like this, have a efficiency, have a liquidity. If I want to increase this trade with the confirmation, I needed two change of character. That's correct. When
what do you mean?
Yeah, excuse me. You say when this price tap to this supply, you mark up and set the order by this, and change of character make another supply. When he tapped another supply, I can enter this there.
Exactly.
Okay?
This is a confirmation entry. Price tap this zone. You're insecure about this trade. You won't open a trade right here. You won't place a limit right here. You're just simply waiting for a change of character. Price reacts on this zone, creates a change of character to the downside, which equals to another supply zone right here. You'll be able to safely place an order limit right here on this block and target the same 50% zone. And if price steps into this zone, you'll be tagged in, and this has been confirmed. This is a confirmed entry.
Yes, I think in confirmed
this is a risk entry.
We have
this is a confirmation entry.
Yes, Marcel, that's true. We in a risk entry, we can get a less reward between a confirm. That's correct. When we enter the confirmation, we can get a maximize of the reward in the one trade. That's true.
It's not like this. Confirmation entries are literally for confirmations. If you're insecure about trade, you can confirm your entry. As you can see, you get 12 risk reward ratio for the risk entry. You get 12 risk reward ratio for the confirmation entry.
That's same. Leader.
This is a risk entry. This is a confirmation entry.
Thank
you. Can I ask a question?
Of course.
You told that demand will be broken, right? If that demand is broken, should we wait for the 1 minute zone which broke the demand, or we should wait for the 15-minute zone inside that 15 minute and again for a 1 minute chop?
You mean this one?
If that is broken,
yeah.
The cause of that is in 1 minute zone, or should wait for a 15-minute zone?
Depends on the price action. If price comes down, let me just remove these drawings from here. If price comes down and mitigates this zone first, and let's say it breaks below this zone and creates a good one minute entry criteria with liquidity and everything we need, you can enter on that 1 minute zone that was the cause of the break. You'll be able to enter on this zone that has caused the break and has a good entry criteria, which is liquidity, etc., etc. But if there's just one huge 50-minute candle which breaks below this zone, this movement is just one huge 50-minute candle, and the supply zone will be somewhere around here. You have to wait for a 1 minute confirmation right here.
No, if it creates a 15-minute flip, then we can enter in that 15-minute POI, right? Like
Yeah.
it reacts as demand and again.
If it
and
reacts,
then
this is a 50-minute movement, create a 50-minute pullback, creates a huge candle.
Yes, yes. You can wait for that.
You
And
can wait for a confirmation entry on the 1-minute chart.
okay, like you said in the first time, I just took a trade in the morning and I got stopped out.
Maybe the trend was the problem. I will see that trend. I will see that trade after the session.
Can you move that to the left?
I will see that trade after the session.
Okay.
Marcel, I have a last question. I'm sorry for that. I
Yeah.
sent this question in the trading question, but not get answered. When we open the trade or set limited order, when we can close it or deleted this order? Does this have any rules for deleted or for keep it this order?
After a good entry criteria setup is being formed, for example, there's a zone, there's a 50-minute demand zone down here. Let's say price is coming down to mitigate the zone, creates a change of character on the 1-minute chart, creates a good entry criteria with liquidity, and you set an order on it on this fresh and you created 1-minute zone, right? You keep this order right here. You'll have an order on this block. Okay, you're asking when can you delete this order? Let's say price moves far away from this zone, creates continuous break of structure, creates another good entry criteria with liquidity once again, and creates this zone, which is the less recent zone above the liquidity, below the liquidity, right? There's liquidity once again. So you'll be able to set an order limit on this zone once again, and you can delete this order. But you can actually halve your risk and keep this order right here and keep this order right here. Use a 0.5% risk right here, 0.5% risk right here, because there's still a chance that this zone will be swept because this could be part of the liquidity. So it depends on you. But you can use this double risk, half risk entry on both of these zones.
Thank you.
You're welcome. Okay, guys, let me just read the chat. Oh my God. Much questions. Can you explain why we are still bullish on daily? We broke last low, which... Let me just check daily. Yeah, daily could be bearish too, but I believe this was just a liquidity sweeping movement to some deeper daily demand areas right here or right here. So I believe this movement was just a sweep of the liquidity, of this liquidity, on top of this extreme of the movement. And after this, I believe the continuation will happen. But you have to react. That's all. Sorry. So, any more questions, guys? Hi, once price tape 50-minute supply demand. How can we take order in 1 minute? I'll be. My mate, have you seen the video course? It's explained in the video course. Please just watch it or the PDF. Basically, that's what I'm teaching. The whole video course is about the change of character entries. Okay, guys. I believe that's it for today. But one more important thing is on this Sunday, I won't be able to host a session because I have some things to do on Sunday. But yeah, in the previous 5 or 6 weeks, I did host a session on Sunday without a stop. And just some good news, I believe I will host a bonus session for you on Friday or Saturday. So I believe I will host a session like this on Friday once again, because I don't want to leave you without sessions. So yeah, guys, more likely I'll be seeing you in Friday in the session once again. Let me just read the chat. I have to leave the call. Thanks for keeping. Yeah. Thank you, guys. So yeah, okay, guys, that's it for today. I will stop the recording right now.